Good morning, everybody.
Some more tune-up stuff, but
Welcome to the Insurance and Real Estate Committee's public hearing for Tuesday, March 3rd, 2025. Thank you for everyone that's coming in person. I do know that we do have some weather coming, so we have some people that are going to be joining by Zoom today, which is perfectly fine. My comment just to get started is that we were kind of rushing to get our bills done this year. We have some paternity leave amongst our attorneys. So some of the language that you've seen for public hearing is vague, but we really wanted to get this stuff in time. But we will be working on fixing the bills as we go forward. So if anyone is reading bills and questioning the detail that's in them, we hear you, and let's work together on making sure those are in good condition before we vote them out of committee. With that being said, we'll get started with the first speaker, Senator Marty Looney. Is he on Zoom? Okay, next up we have Gretchen Schugartz.
Good morning, chairs, ranking, and all esteemed members of the Insurance and Real Estate Committee. My name is Gretchen Schugartz, and I'm a policy analyst at the Commission on Racial Equity and Public Health, alongside my colleague Mana Abbas. We're a nonpartisan legislative office charged with making policy recommendations to reduce the impact of racial inequities in public health. I appreciate the opportunity to testify in opposition to House Bill 5378, an act concerning multiple employer welfare arrangements. This bill seeks to allow self-insured multiple employer welfare arrangements, or MIWAs, for the purpose of providing health benefit plans to employees of members. Proponents of this bill believe it will allow employers to pool together to purchase health insurance. However, this is not the case, and the bill explicitly states that the product is not health insurance. What the bill does is allow employers to come together to self-insure or pool their monies. This is done by establishing a trust which is funded by member contributions. This trust is then used to pay medical expenses. Essentially, member companies are acting as the insurance company for their employees. If small businesses wanted to purchase insurance from an actual insurance company, they would need to establish a fully insured MIWA, but that's not what this bill does. The Commission has significant concerns regarding this bill, but the biggest concern is the underwriting component. The point of underwriting is to assess risk and determine cost based on that risk. Think of how car insurance works. A person's driving history, whether they have a history of speeding or accidents, is one of many factors companies use to determine how much a person will pay for coverage. This is how you're able to secure savings for some. When it comes to health coverage, medical underwriting uses health status to assess risk. This allows for healthier people to save money while less healthy people pay more. The consensus among experts nationwide is that rate setting by health status could further disadvantage people with disabilities and people of color. It is well established that race-based health inequities exist in our state, leading to people of color having higher rates of chronic disease such as asthma, diabetes, and cardiovascular disease. Businesses that employ folks with chronic health conditions and higher than average risk will likely have higher premiums and may even be priced out of the MIWA. We're concerned that due to inequities in health outcomes, the higher costs will likely fall along racial lines. It's also important to note that under this bill, medical underwriting will be done on the employer level, not the association level. When underwriting for a business is based on the collective health status of its employees, this could lead to unintentional discrimination in hiring, as businesses may opt not to hire applicants who they assume may increase their premiums. In closing, we fully understand why businesses may want to participate in MIWAs. Insurance is expensive. But this policy doesn't allow businesses to pool together to purchase insurance. Rather, it uses medical underwriting to self-insure, which can exacerbate racial inequities. My written testimony gives a more detailed overview, including other concerns we have about this bill. thank you again for the opportunity to testify, and the commission is happy to be a resource to create a good bill, not just for healthy people, but for all Connecticut residents, and I'm happy to answer any questions.
Thank you. Any questions? Great, seeing none, thank you so much for your testimony. Next up, we have Sean King from the Office of Healthcare Advocate.
It doesn't look like Sean is on.
He is on.
I'm here if you can hear me.
So sorry about that.
Okay, Senator Cabrera, Representative Wood, Senator Wong, Representative Pavlock D'Amato, and distinguished members of the Insurance and Real Estate Committee. For the record, I'm Sean King, General Counsel for the Office of the Healthcare Advocate. Appreciate the opportunity to speak with you today regarding two of the bills before you. HB 5378, an act concerning self-funded multiple employer welfare arrangements and requiring a study of the feasibility of establishing the Connecticut Option Program and multiple employer welfare arrangements, and SB 342, an act concerning health coverage. Regarding HB 5378, OHA supports the final section of the bill, which would provide for the Office of Policy and Management to study the feasibility of establishing a Connecticut Option Health Plan. However, OHA opposes the ongoing pursuit of establishing MIWAs as a form of insurance coverage in the state of Connecticut. Conceptually, MIWAs would provide smaller employers a new option for covering their employers by pooling risk among several employers in order to realize lower costs through economies of scale and exercising greater market power relative to providers of healthcare services. In addition, we recognize that the current version of HB 5378 creates some layers of consumer protections, including a minimum bronze level actuarial value and prohibitions against pre-existing condition exclusions and other forms of discrimination based on the health status of participating employees. While these consumer protections offer some improvement over level-funded plans, which have utilized adverse selection to position themselves as the preferred option for some small employers, the MIWA structure proposed by HB 5378 still mimics level-funded plans in that it also allows for underwriting and adverse selection to price otherwise eligible employers out of the plans when they employ high-cost employees. At the same time, the MIWA proposal offers no tools or incentives for the MIWAs to exert downward pressure on the prices of medical services and pharmaceuticals, which are the actual drivers of premiums, high deductibles, and unaffordability for small employers and their employees. Thus, OHA does not expect the establishment of MIWAs as an option for insuring small employers and their employees to result in any material improvements in the market for coverage of small employers, while at the same time, it still raises the risk of fraud and insolvency that have plagued association health plans and other MIWAs since their inception. Turning to SB 342, OHA is largely supportive of the various proposals outlined in this bill, including the establishment of site-neutral payment rules, the extension of the cooling off periods that kick in when a participating provider contract ends between an insurer and large healthcare provider, and lastly, the modest revisions to certain utilization management rules, which would protect vulnerable patients from excessive step therapy protocols and require insurers to err on the side of coverage, rather than the current practice of erring in favor of denial when a highly qualified and trusted network provider recommends services. We believe that these modest changes will have the impact of making access to essential healthcare services easier and more financially bearable for consumers, while at the same time avoiding increased systemic costs for insurers and providers, which ultimately are borne by consumers over time. Thank you very much for allowing me to comment on these proposals before you today. I will be happy to answer any questions you may have for me at this time.
Thank you, Sean. Any questions? Representative Delnicki.
Thank you, Madam Chair. The MIWA study, how long do you think it's going to take to come back with some sort of results and recommendations?
I would imagine it could be studied as many studies are conducted by the legislature. Within probably a year, they could get some reasonable research and data done, collecting experiences from across the country, and as long as the study is done by a fairly diverse group of individuals, including academics, market participants, healthcare providers, small businesses, advocates. Hope that answers your question, Representative.
Well, I'm glad to see that that you are looking to actually take a deep dive on it and see just how it could very well be a great product, and it could solve some problems that we have. So I wish you good speed on this. Thank you.
Senator Wong.
Thank you, Madam Chair. Mr. King, thank you for your testimony. You cited examples of MEWA's failures in other states. Could you give this committee specific examples of states and some of the statements you made in regards to exclusionary practices? And we've heard this in the past, but what anecdotal facts do you have, and what states have you seen these kind of infractions?
Yes, Senator, thank you for the question. I don't have specific examples that I can share with you in the moment, but I'd be happy to follow up with the committee and send some references if that would be helpful.
I think that's the challenge we have is we've heard many things, and you're offering testimony and making a statement to that effect. And I'm curious, because one of the challenges we have is, as we have discussed this many times in this committee of cognizance and gone through many of the aspects, many of these statements have been made, but we've saw no particular factual anecdotal evidence to that effect. And for you as part of the general counsel and to make such a strong statement, I was eager to hear some of concrete factual examples of these kind of analysis. And I think the other part was from a standpoint of, I'm very eager to find out the study. And I think for me, so that's one part of the question. You don't have evidence. I look forward to hearing it. Number two, in regards to the contrast between the two, and that was part of the goal of this raised bill, what do you say as you offer support in the study? What do you see the contrast and the advantages of a Connecticut plan, which is an extension of the partnership plan, as I understood it? But I'm eager to find out the study. Offer to me the analysis and the rationale of why you think the Connecticut plan or the partnership plan would be better than a MEWA.
Well, I think obviously it needs to be studied more, just as any promotion of MEWAs and some of the other ideas that are being offered by this bill. But one of the concepts would be to utilize the size and the heft and the bargaining power and the economies of scale that currently exist, either with the state employee health plan and the partnership plan, in a way that can not just pool risk together, but also, as I was commenting earlier, to put downward pressure on prices of healthcare services and pharmaceuticals and some of those features that appear to be missing from this current MEWA proposal. And it was interesting that the proposal does want to move forward with establishing MEWAs before the study of MEWAs is even concluded, as the way the bill is currently written. So I think at least completing a study first would be more beneficial to the residents and small businesses in Connecticut.
I appreciate your statement, and I think that's important to understand that we do have case studies of many other states that have implemented MEWAs, Virginia, Maryland, and there are casework analysis. And for you to offer that kind of testimony, but not be fully aware of some of the successes and some of the residual facts of that is interesting when you talk about a study. This committee has addressed MEWAs for the past 3 years, and I don't know if you followed it and understood some of the challenges and the criticisms and the tweaking that we've undertaken. So when you say that you want to further study, but at the same time, you don't know what the other states and your statement of failures within the MEWA and not be able to offer that. At the same time, I would ask you, what have you learned about the partnership plan and its process as we've gone through it in the past years in regards to one, the financial analysis of overrun cost and loss ratios, where the Appropriations Committee, taxpayers, have had to supplement some of the losses in that regards to that. A second part was in regards to the impact in regards to previous pre-existing conditions that may have exclusionary practices within the partnership plan as it is right now, which does not consider itself an insurance plan. So through you, Madam Chair, I just wanted to get some clarification. If you're offering testimony to that effect, give me some of the analysis you've had in regards to the existing partnership plan to be able to offer that this may be the best way to go.
Forgive me, Senator, because I'm not sure that I can really fully answer your question because I don't have a lot of the details about the past experiences with the partnership plan that I was prepared to comment on in the moment. I think generally speaking, we are interested in seeing more research and more comparisons of the experiences of the partnership plan, the experiences that similar plans have had in other states, so that we can really have a better understanding and of what to anticipate if we move forward with some of these proposals. But understanding those likely results better, I think is important before moving forward with any of these ideas.
And I appreciate that. And I'll close by simply saying, in listening to your testimony and just hearing that you'd like to have the study, but you've not studied the existing partnership plan and its impact, financial impact and operational impact. But at the same time, you have pretty much said that the MEWAs and made statements in regards to some of the challenges and deficiencies of it when we have existing programs throughout the state, which you can't answer. I think it's frustrating for me that you're offering testimony, and particularly from the Office of Healthcare Advocates, which I have great respect for, but you don't know the answers to the points of what you're offering. So I'll stop right there. But my point and challenge to you, Mr. King, is the fact that these statements that you made via your testimony, when you've not gotten the basis of existing programs to be able to contrast and do some analysis, is frustrating. So I look forward to continual conversations with you and with the Health Care Advocates Office when you read through the plethora of information and data and analysis that this committee of cognizance have undertaken for the past 3 years. So again, I appreciate your efforts on that, but I'm deeply frustrated and disappointed that you're making commentary and making statements without having done the homework and appearing before this committee. So again, thank you for your efforts to testify. And that's the end of my questions. Thank you, Madam Chair.
Thank you, Senator. Representative Pavlik D'Amato.
Oops, sorry. Thank you, Madam Chair. And kind of along the same lines, Tony took my question somewhat, but yeah, we had at least one or two in-depth analysis of the partnership plan that were pretty big studies. And so that was my question. What were your thoughts on those two in-depth studies that gave us a lot of data and a lot of information on the partnership plan and its basic failures that we had to fund as taxpayers? Just thoughts on those two studies?
Again, Representative, thank you for the question, and I apologize, but I'm not prepared to comment on those specific studies today. I would like to take a closer look at them and explore them in the context of having a further conversation about a public option and the study of a public option, but I'm afraid I don't have a specific answer to your question today.
Okay, so then I guess along the same lines is my other question would be, if you haven't looked at the partnership plan, which I just assume if you're in insurance that everybody has looked at that study, then what are your thoughts on Canadian healthcare and the wonderful job that does for the people there? And just what are your thoughts of that whole system?
I mean, specifically my own personal thoughts, and I'm not sure that these necessarily reflect the vision of the healthcare advocate.
Yeah, excuse me.
And the Office
do
of
you mind
Healthcare
if I
Advocate.
interrupt for a second? Can we direct our questioning related to the bills for public hearing? Thank you.
Well, it is, because he was talking about public option, and Canadian uses a similar system that would be to public option. So since that's been established there for many, many years, at least what, 30, 40, then it's obviously a good basis to use in comparison to the public option that would be here. Why not use something that in comparison that's been enforced for 40, 50 years plus?
Just briefly, I think it would at the very least be a good model to study to learn what are the pros and cons of having a similar system, whether it exists just for the state of Connecticut or even on a national level. Obviously, we can't influence a lot of national policy at the state level, but from a statewide level, it would certainly be probably provide a lot of good data, good comparisons when studying a public option for Connecticut to learn about the pros and cons of such a system.
Okay, yeah, and I'm not looking obviously for national policy. It's just that Canada has used socialized medicine, because that's what it is, for many, many years, and its abject failures have caused people to not be able to seek treatment, to come to America for treatment. Half of South Florida and Broward has individuals from Canada who come down and who get most of their health care done during the warmer months of the year. So I mean, yeah, I just think it's a good thing to look at, just like the partnership plan. And yeah, if you could do a little more research, and hopefully next time when you come back and testify, you'll have that information. Thank you.
Thank you. Any other questions? Thank you, Sean. Thanks for joining us today. We appreciate it.
Thank you. Appreciate your time.
Next up, we have Senator Stephen Harding.
Good morning, Chair Wood, Chair Cabrera, Ranking Member Wong, Ranking Member Pavlock D'Amato. Thank you for having me this morning. Thank you for allowing me to testify. I also want to thank you and the entire committee, Madam Chair, for your hard work on House Bill 5378, as well as associated healthcare plans in general over the years. Over the last 5 years, as all of you know and have worked hard against, health insurance premium payments increased by 33% for small employer firms. It's 33%. It's a staggering number and one of the biggest drivers behind the affordability crisis our state faces. It's unacceptable, and it's only going to get worse unless we do something about that. Health insurance plainly is unaffordable here in our state. So how do we address it? Well, to answer that question, I believe House Bill 5378 is a very strong start to that. Myself and my entire caucus strongly support the portion of the bill that implements multiple employer welfare arrangements, also known as associated health plans, right here in the state of Connecticut. These health plans offer a practical solution to our state's affordability crisis. Our caucus has advocated them for many years now, and we appreciate the support from this committee. As you know, these plans allow trade groups, chambers of commerce, professional associations to come together as a pool. And this allows them to come together and mitigate the risks, and ultimately purchase health insurance as a single large employer rather than a collection of small groups, which currently is going on. It pools the risks, as I mentioned, and as a result, it provides affordable health insurance plans, and also healthcare plans that are strong, provide important treatment protections, as well as reduced deductibles, etc. We have to help the overburdened working middle class families across our state. This is a huge step. They are dealing with skyrocketing premiums, as I mentioned, skyrocketing mortgage payments, taxes, and this is a huge step towards providing them realistic, affordable, good health care plans. Middle-class families across our state, as I mentioned, but also small business owners as well. It will make employers more competitive with the larger employers and even government in terms of soliciting new employees who look at healthcare plans for good reason as a significant driver towards where they want to work. So it's not only a huge step towards affordability, a huge step towards healthcare in our state, but it's also an economic driver as well. With that, I appreciate you raising this once again and your hard work on these healthcare plans over the years, particularly Madam Chair. And Ranking Member Wong and Pavlak D'Amato for your hard work on this. And with that, I'll answer any questions you may have.
Thank you, Senator. Senator Wong.
Thank you, Madam Chair, and thank you, Senator Harding. I know that you've worked hard on that as a small business owner in the legal practice. I think you looked at independent contractors and self-employed struggling with the outrageous cost of health insurance, and the reason for this committee to raise this bill to look at both sides of the equation is something that we want to do as the committee of cognizance to deliberate this issue as we've done many years. But one of the things that hasn't been discussed is the economic impact of the two various plans, one of which comes to jobs and employment. Connecticut is known as the insurance capital of the world. Some of the largest health insurers based in this state of Connecticut, employing thousands of individuals. But also, in addition to that, they have a world-class staff of actuarial experience and analysts. Sometimes their rate request and their actuarial analysis is not always welcome, and their rate review as well as case review is not always welcome. They're not on many people's Christmas list, but at the same time, the economics and the experience and the actuarial risk has provided a sense of stability and a kind of marketplace aspect. So could you share one from your personal experience in regards to affinity collaboration, how that would help you as a small business owner, but also as a state policymaker and talking about jobs and economics and the impact on Connecticut? What would this do if we went to a state-funded program on the Connecticut plan or the partnership plan versus a MEWA, which is a marketplace solution to addressing the unsustainable cost of healthcare insurance?
Absolutely. Senator, thank you for your question. And also, thank you for your work. Our caucus, as you know, has made this a cornerstone of our agenda for multiple years now. And the reason for that is because of you, Senator Wong. I mean, you've been a huge champion for this. For good reason, because you understand the economic benefits and the healthcare benefits for the people throughout the state. So thank you for your work. With that said, you're exactly right, Senator. I've spoken with many lawyers in my profession, and they will tell you that it's one of the biggest drivers towards them either entering larger firms or entering government, despite the fact they may not want to, because of how unaffordable healthcare insurance is for them. As a solo practitioner, it almost becomes impossible for them to purchase healthcare plans for their entire family. And in some cases, I've spoken with lawyers who have told me that their healthcare insurance premium for their family of four, let's say, is more expensive than their mortgage. So they're still not getting the benefits of a strong plan with that. So I look at this as a huge driver towards affordability and a huge driver for economic development, particularly among small employers. It instantly makes them more competitive. So when you have an employee that may be seeking work and they're offered maybe a government job or from a large employee and now gets an offer from a small firm in whatever profession, it could be a doctor's office, it could be a therapist office, it could be a lawyer's office, plumbers, etc. If now all of a sudden when they can offer something significantly more in pay, but I've seen it, they've turned it down because of the lack of healthcare plans at this particular job. Now, all of a sudden, if you're going to allow them if you're going to create the associate healthcare plans, that small employer is going to be as competitive, if not more competitive, than some of the larger employers in government. It's a huge economic driver. I think it's going to lead to individuals taking jobs where they're happier, number one, and also where they're getting higher pay, and it's going to help boost and stabilize and create strong infrastructure for our small employers throughout the state, which in my district and yours, Senator, are ubiquitous. I cannot tell you how many constituents I know that are independent small business owners. It's a huge backbone of our state, and particularly amongst the middle class of our state as well. So I look at this as I said, not only great for better healthcare in our state, but also great for economic development, particular for small middle class employers throughout our state. It's really a positive thing.
Thank you, Senator Harding, and I appreciate the economics because this committee's priority is addressing the unsustainable and unaffordable cost of healthcare insurance, and the challenges we have in addressing it. And we're very proud of that as a committee of cognizance in that area. I think the second point on that is, as Senate Republican leader, and your experience in the House and in the Senate, that there are very few bills when we go through the process that have true bipartisan support and true engagement from many of our shareholders and stakeholders, ranging from chambers of commerces to microbreweries to even our hospitals in the testimonies that I'm reading, as well as many, for example, many of our craft unions by the statutory protection of the Taft-Hartley arrangements of supporting the existing plan as we have it, and opposing the partnership plan. So through your experience, to see a legislation that had overwhelming bipartisan Democrat and Republican legislators leading the way, and as I remember when the good chair of this committee led the initiative on a bipartisan basis, where we had over 40 businesses, 40 entities, and Democrat and Republican legislators in the House and the Senate stand in support of MEWAs. You don't see that often, and for some reason, it does not get engaged when we're critically addressing the issue of healthcare insurance unaffordable. What would you say the rationale to that in your experience of how could something so positively engaged in and so bipartisan and collaborative with so many of the stakeholders addressing critical questions impacting affordability in the state of Connecticut? How come nothing's been done on that?
Yeah, and it's a great question, and I think that some in leadership, this committee, for example, is a great example of the bipartisanship, including yourself, Senator Wong, Ranking Member Pavlik D'Amato, and then obviously Chair Wood, in advocating for this. It's I was at that press conference, Senator, as you know, that you were referencing, and in my lifetime in this building, it's been a decade at this point, believe it or not, I've never been to so much of a bipartisan event in terms of speaking about legislation. I mean, there was senators, there was representatives from all political stripes there. There was business owners, again, from all political stripes there. And I think the reason being is because it's basic logic. I think this is, as I mentioned before, I think it's a no-brainer that this is going to lead to better healthcare plans for individuals throughout our state and our districts. It's going to lead to more affordable healthcare plans, and it's also going to help drive the economy. When you hear that, you're going to get bipartisan support, because who would oppose that? I think, frankly, those that are in objection, I think they want to see a public option and a public option only. And I think they fear the success, frankly, of the associated healthcare plans, because they know that it's going to be so successful in our state that I think that it would mitigate the need for a public option, and therefore I think that's the reason you see an objection, because you have one side, which again isn't even a partisan divide. It's just a group of individuals that only want one particular solution to that. And I think it's unacceptable. As I said, we have a plan now that has bipartisan support that I think undoubtedly will lead to reduced premiums, better healthcare plans, help drive the middle class and working class small business owners throughout our state in an economic manner. And I think only having one solution to the problem and leading us down a road where we're going to prevent a viable option to provide all those things is really, you're wronging your constituents and the people of the state by doing that. And I think, unfortunately, there's a small group of individuals that have blocked this year after year after year, despite its bipartisan support and despite its metrics that will help our economy and healthcare in our state.
I thank you for that. And it's incredibly frustrating as we try to address the issue of affordability for many of our small businesses and entrepreneurial independent contractors or individuals that we're not able to find solutions. That being said, I think it's important, and I want to compliment the leadership of this committee, and that includes Senator Cabrera, Representative Woods, and many of my colleagues. That when we raised this bill, we wanted to include both sides of the conversation. We wanted a transparent and engaged deliberation as to what are the best options. So we didn't choose one or the other. We balanced both. And what you'll see in the testimony is the fact that from past experiences, and we do have experiences, just as many of the MIWAs throughout the states that have implemented it for business initiatives, and also what we have seen in the partnership plan that has existed for almost nearly 10 plus years, that we have track records to be able to compare and contrast. And I think for me, the ultimate impact in regards to affordability is I rather utilize the marketplace. And what I said earlier is our insurance industry sometimes is not on everybody's holiday list. I mean that because some of the detachment and some of the challenges and frustration, the emotionality of it. But at the same time, they also have a world-class actuarial risk management and business practices of managing healthcare cost. The state of Connecticut or the partnership plan is not versed in that. And when we looked at loss ratio, as this committee has done, we see a real contrast. And I hope that as we explore addressing healthcare insurance costs and affordability from the administration to the legislative branch, that we consider both. And I think we try to do that in this committee of cognizance, that we're open to talking about the best solutions possible and not just one way or no ways. That it's really important to kind of have a open, transparent, engaged process, engaging all the share and stakeholders. And I appreciate your input. And most important of all, I'm incredibly proud of this leadership and the composition of this committee that have very passionate opinions and philosophies on this, but at least we're having this deliberation, we're having this engagement, and we're giving people the opportunity to be heard. And so I really appreciate your leadership on this, and also your leadership in regards to addressing affordability and healthcare cost. And so I wanted to thank you, and I appreciate your time, and thank you for the indulgence, Madam Chair.
Thank you, Senator, for your leadership as well.
Thank you. Senator Lesser.
Thank you, Madam Chair, and thank you, Senator Harding. It's good to see you. I heard this, what I think is perhaps a false choice because of the two potential solutions being either this MIWA scheme or a public option. There is a third option that the governor has proposed this year, and I'm surprised that I didn't hear you mention it. So the issue with the MIWAs is it was rejected previously by the legislature for three reasons. One, because of concerns that it could bring back pre-existing condition discrimination. Two, because of the enormous and unrestricted liability that it presents to associations and potentially to employers themselves. And three, because it undercuts our insurance markets. It actually pulls companies out of the functioning markets, leading to a death spiral and the collapse of those markets. And for those reasons, this proposal hasn't gone forward in the past. This year, though, the governor created an alternative model, which is a potential tax credit to support companies purchasing what's called an ICRA. And that would just simply strengthen the existing market. Those plans would have full protections of the marketplace, the Connecticut Insurance Department, and it's much simpler, right? We know that that would work. It simply extends the federal tax credits that apply for traditional coverage to our individual marketplace for small businesses that provide an ICRA coverage through that. Does your caucus support the governor's proposal? He's only proposing a $1,000 tax credit. I think it probably should be a bit larger to have a impact on employers and to get them to find that to be a viable option. But I'm curious what your caucus's position is on the ICRA.
So we would certainly support any tax credits to small business owners throughout the state. So if that's a tax credit program, if there's a tax reduction or reduction of tax liability to the middle class or working class people of this state, our caucus is always going to support that. But I also don't think that it's the one solution to the problem. I don't think $1,000 tax credit is going to resolve the healthcare crisis we face as a state. And I think that this is a much more comprehensive plan. Are there issues that we need to work out and discuss? Sure. But unfortunately, because of certain divides, we've been unable to even have some of those discussions. And like Senator Wong mentioned, I applaud this committee for raising this concept to at least have a discussion about this particular issue because it's necessary. And I think there are ways in terms of your concerns about certain protections. I think we can legislate that. I think myself and many members, I think all of my members of my caucus, including yours, Senator Lesser, have supported protections for pre-existing conditions in the past. And I think we'll continue to support that, whether we have associated healthcare plans or not. I don't think that's a preclusion by any means. I think that we should be able to implement this and also provide those pre-existing protections as well, which we would support. We wouldn't want to see any of them go away. I think this is a solution to a huge problem we face as a state, and I think that $1,000 tax credit is nice, and we would support that because it would reduce tax liability on middle class people of this state. But we also can't pretend that that's going to be the one solution towards addressing the healthcare crisis we face here in the state.
Well, I appreciate that answer, and I agree that I don't know that $1,000 is enough, but I would support. I think that's a much simpler option. It seems, to strengthen what we've got, to figure out how to sort of stand up and reverse the slide in the marketplace. And with respect, Senator, I appreciate your comments about pre-existing conditions. This bill has come up I don't know how many times, and in all of the versions I've seen, not one of them addresses, they has language in there that says, please don't discriminate on an individual level on the basis of pre-existing condition, but it underwrites every single version of the bill that I've seen, underwrites individual small employers on the basis of the pre-existing conditions of the employees of that business. So, you're an attorney, sir, and you know this, but if you go in and you say, please cover me, Stephen Harding, they can't discriminate against your pre-existing conditions, but they can look at your law office as a law office of a solo practitioner and say, well, we're just underwriting your business based on the pre-existing conditions of the one attorney who happens to work there, or the two attorneys. And that's effectively the same thing, because it is pre-existing condition discrimination just by another name. And that is the only cost containment measure that's been in this bill from the very get-go, and that's why it hasn't gone forward. So I'm hoping we'll choose to follow the governor's lead and pick a more consensus-focused effort around tax credits, around supporting the ICRA system that the exchange has set up, because I think that has a much more promising future in this building. Thank you.
If I may, Madam Chair.
Sure.
So thank you, Senator. And one thing I'll note, though, is how I read the bill. It does provide those protections, and I'm willing to work with anybody to make sure those protections are in place and we can institute this. I think both can be done. And I look forward to working with everyone on a bipartisan basis with the leadership of this committee to ensure those protections are in place. I know the leadership of this committee is committed to that as well. And I frankly, I don't believe, that was not what I heard in terms of why this bill was rejected. I didn't hear much of that previously as to why the bill did not go forward. From what I heard, there was a drive towards a public option only. And that I think was a bigger driver towards this not going forward than any language regarding pre-existing conditions. With that said, if we fix that, if we can, institute the language sufficiently enough to address that, which I think everyone on a bipartisan basis is committed to doing for good reason, that I look forward to working with you, Senator, to hopefully pass this across the finish line finally.
Thank you. Representative Nuccio.
Thank you, Madam Chair. And Senator Harding, I'd just like to agree with you. I know for fact none of these association plans can discriminate based on pre-existing conditions. It is a federal law. None of them can. And I believe what the senator was speaking about, if I'm hearing it correctly, is basically the actuarial process, which happens with every single insurance plan that is sold in the United States, or anywhere else as far as I'm concerned, which just looks at your prior claims to determine what your premium should be. That is practice in the insurance industry. You have to price the claims based off of the experience And experience, of course, takes into consideration every condition, every office visit, everything, because that is the cost of care. So I'm in agreement with you. I think we have seen amazing bipartisan support for these association health plans. It is a very big option. I have a lot of small businesses that come forward and say they would like to be able to pool this, because the great thing about these plans is it allows several small businesses to pool their expenses to have a greater footprint, which then enables them to get better pricing when it comes to provider contracts, which we all know is 85 cents on the dollar of the spend for any health insurance plan. So I'm glad to hear that you guys are still in support of this. I know I am in support of this, and I think it's very important that we correct any information that is not accurate or just, not exactly clear. You cannot discriminate based on pre-existing condition in any insurance plan sold in the United States by federal law. So this would, in fact, meet that pre-existing condition. And as far as actuarially pricing for a plan, I don't know how you would price for a plan if you weren't taking into consideration the cost of claims. So I look forward to continuing to work with you. I know we have support in a lot of the different chambers, and I believe in the governor's office for this too. So hopefully we can get past the misinformation and actually put something forward that will help our small businesses. So thank you for your testimony.
Representative.
Thank you. Any other questions? Thank you, Senator Harding. Thanks for joining us today.
Thank you, Madam Chair.
Next, we have Commissioner Hirschman from the Connecticut Insurance Department.
Hello, hello. Good morning. Senator Cabrera, Representative Wood, Senator Wong, Representative Pavlak D'Amato, and distinguished members of the Insurance and Real Estate Committee. My name is Josh Hirschman. I'm currently the interim commissioner for the Insurance Department. I'm working my way through that process, through the nominations process. So hopefully that will work itself through in the next few weeks. But I'm happy to be here, and I'm happy to start our relationship. This is my first time testifying in front of this committee, and I really would like to have a collaborative relationship on all matters going forward. I see the importance of the legislative body, and I know how much good work that you all do. So thank you for raising House Bill 5373. That is the department's comprehensive agency bill. It modernizes our regulatory framework while strengthening consumer protections and aligns our statutes with current insurance practices. I've submitted detailed written testimony, and today I'm just going to, at a high level, offer an outline to the structure that we're doing. So what our bill is doing is it modernizes outdated statutes, it aligns administrative timelines, it strengthens consumer transparency, and it updates solvency and guarantee fund protections, as well as addresses some affordability concerns. So first, under modernizing our department operations, several sections of our bill, which it's a big bill, update how the department interacts with the industry. So we are requesting to allow electronic delivery instead of paper mail from licensees and the department, back and forth to each other. We're working to establish timelines for the insurers to report producer terminations for cause, allowing us to investigate misconduct more quickly. We're looking to eliminate duplicative reporting requirements where the data is already available through the national systems. We would like to permit remote-only audits of third-party administrators while preserving oversight, and add continuing education requirements for casualty adjusters to improve claims handling standards. Also, we are looking to update some statutory valuation references from the NADA to its successor, J.D. Power. And collectively, these changes ensure our statutes reflect appropriate business practices and allow the department to operate effectively in fulfilling its consumer protection responsibilities. The next bucket is aligning administrative processes. We're looking to align health and welfare fee procedures with other effective assessment procedures by adding an administrative objective process before court appeal, hopefully allowing for less litigation and lower costs. Update insurance fund assessment timelines to allow with to align with DRS. Clarify when the external review clock begins so that timelines are predictable and consumers receive timely medical determinations without procedural confusion. These changes increase clarity, reduce confusion, and improve operational stability. Next is strengthening consumer transparency. We're working to
Your 3 minutes are up. Please summarize.
okay. So in short,
Commissioner, you can take your time
Okay.
and finish your testimony.
okay, thank you. We have just, it'll be another like minute and a half. That's all right. We require, okay, all right, no problem. All right. We require clearer explanation for significant personal risk premium increases for private passenger auto. So we're looking for an explanation for the consumer. Anything over 10% of an increase. Clarify prescription drug formulary notices requirement at renewal and mid-year. Next, we're modernizing solvency and guarantee protections. What we're trying to do there is update the Guarantee Association on the property and casualty side to mirror what the National Association of Insurance Commissioners has changed in the model law, which reflect that cybersecurity is now included in the Guarantee Association coverage. We're also looking to modernize assumption reinsurance requirements by establishing clear notice standards and an opportunity for policyholders to consent or reject transfer. And finally, on affordability, some of the stuff I've mentioned ideally drives to affordability when we're talking about not having litigation as an option, or we're talking about the consumer having a clearer understanding of the reason that their rates are increasing, right? They might now call up and say, well, geez, there was a mistake and we'd like to have this fixed. The other one that really drives that affordability is removing the requirement for terrorism coverage around condo associations. So the goal there is to allow the condo associations to determine on their own whether they need terrorism insurance, and if they don't need terrorism insurance, then ideally their rates will go down. So in short, HB 373 is a targeted modernization package. It updates outdated statutes, improves clarity, and strengthens consumer protections. I'd just like to also note that there are many bills before this committee which would require department-led studies and likely consultant engagement, which would have some fiscal impact, and we look forward to working with you on describing that as we go. So happy to answer any questions.
Thank you, Commissioner. I did say at the beginning of the public hearing that we were rushing
Okay, that's okay.
to get some of our bills
worries.
done, and we really wanted to make sure we had the public hearing. So a lot of that means it goes under a study. So we are going to be working on that language. So we hopefully will not be putting financial pressure on the department once we get the bills fully drafted. That being said, I did want to talk about the terrorism insurance. What does that cost for a common interest ownership community or condo association? Like how much are they going to be saving?
I don't have the exact number. Maybe George Bradner, who's our property and casualty director, he might have the precise number. But
And I'm asking because these entities are under a lot of financial stress, so I would love to be able to share that with them.
Yeah, I can tell you about a situation that arose at the department where an entity used to pay about $700 a year for the coverage. They recently got a quote for over $7,000. So
Okay.
the cost is becoming prohibitive.
Okay, great. And they're not accessing terrorism insurance.
They have to access it according to how we interpret the law.
They have to have it, but is there any record of any condo association using their
No.
coverage? Okay.
No.
So that's why we're doing it. Thank you. The other thing I wanted to ask was about a bunch of the letters in opposition regarding Section 7 and having, the reporting there. I don't know if you looked at those letters and if you have any comments on that.
yeah, I could just address it at a high level, and then George, you'd stay because there might be more specifics than George has it. So this has been something in the work in progress for about 3 years at the National Association of Insurance Commissioners. This is guidance that was vetted through that entire process. The entire insurance industry comes to those meetings and explains why, their position is right and the regulator's position is wrong. This has been vetted. Washington State has a pseudo version of this, and we're taking the lead on this. We think that auto insurance in Connecticut has skyrocketed year over year. Great news recently. State Farm is offering a dividend of, I think it turns out to about $64 per driver or per car. So we are starting to see some pullback in the cost of private passenger auto, but not to the level that we are hoping, right? I think carriers are getting more and more sophisticated in how to do their underwriting, as they should. They're using more and more data elements to do underwriting appropriately, as they should. And the goal here is to allow for the consumer to ask questions around some of those underwriting elements and maybe clarify, and maybe that will make their rates go down if there was a misunderstanding. So this is a proposal that has been vetted for many, many years, and we're looking to lead on that in the state of Connecticut.
Are any other states implementing the same policy, or are we an outlier?
So Washington implemented something, I'd say 80%, 90% of where we are. We're implementing almost entirely the NAIC guidance. I hear the comments from the industry, and some of it resonates with me, and we're talking with industry on best ways to implement it. I don't think that the general sentiment is this is a really bad idea. I think it's let's figure out the best way to do this, and we're working on that. We have an open door policy with the industry, and we will continue to iterate as needed.
Yeah, I mean, and we're supportive of anything related to the affordability issue and streamlining things and, making things less costly for the industry that they can pass on to customers. We hear all the time, like, hey, did you guys pass a bill that's making, auto insurance rates go up? And it's like, no, we have Connecticut has very expensive cars. Our rates of accidents are higher than other areas. We have more traffic than other states. Hopefully with the implementation of the red light cameras, speeding cameras, reckless driving cameras, we'll start to see some of those rates slow down, which will obviously benefit everybody. But if there's any other things we can work with the department on, addressing affordability, we've done some great work on, the roofing issue together. So just thank you for that. Do we have any other questions? I see Senator Wong.
Thank you, Madam Chair, and welcome, Commissioner Hirschman, to the Insurance and Real Estate Committee. And for me, the Connecticut Insurance Department has a stellar reputation, not only within the state, but also throughout the country. Initially led by, obviously, former Commissioner Mays and his great work in his department, but also kind of making people aware that you served as deputy commissioner during the COVID era, and the work that you did is appreciated by me. So I wanted to say thank you for your work, and thank you to Commissioner Mays for his remarkable work, but also you're always welcome, and you can take more than 3 minutes anytime you want to talk. So that being said, I wanted to get your understanding in regards to the challenges of affordability in regards to insurance in the state of Connecticut. And every single year we have rate reviews, and there's a real challenge because in all my years in the General Assembly, it has been a continual double-digit increase. Could you explain to many of our audience members and the people that are watching that your regulation is on the fully insured marketplace, and that for many people that are employed by large corporations, it is a totally different marketplace?
Yes. First of all, Senator Wong, thank you for your kind comments. I'm excited to be here, and I'm excited to continue the good work of Commissioner Mays. Affordability is a huge problem in Connecticut around insurance, and it's something that is going to probably take up my entire time that I'm here as insurance commissioner. And there's going to be lots of different things that we're going to be working towards to try to address affordability. I look at it really from a perspective of innovation almost, right? I mean, my goal is to make it possible for the carriers to be as as innovative as possible to allow for consumers to have as much protection as possible, but that innovation driving to reducing rates down the road across all verticals of insurance. I think, Senator Wong, your point around what we regulate from a rate perspective, it's a good one. We only regulate the individual exchange marketplace and the small group marketplace. So from a numbers perspective, we just had a great press conference. I unfortunately wasn't a part of it with the exchange, where they had the largest amount of people on the exchange I think ever, and I think it's somewhere around 140,000 people. And then there's something like another 50,000 people in the small group market. So that is the entirety of our ability to impact in a meaningful way rates on individual consumers in the state of Connecticut. Now, I think that the exchange is an important segment here, and it's something that we need to continue to try to get more carriers to be engaged in, and we need to continue to try to educate policymakers to make sure that they're making the best decisions to keep the exchange as viable as possible.
No, I appreciate that. And if I make, Commissioner, in this day and age of Zoom, if I could maybe ask, I can't hear you as clearly, so if you could possibly speak into the microphone, that may help those that are watching and listening. I think one of the questions in regards to the critical role of the insurance department and my ranking role is making sure the solvency, the financial stability of our insurers and the people that they cover. That's one of the critical factors, and I don't think a lot of people understand that. But the diligence and the real oversight that you have in solvency is a critical element of the insurance department to make sure that those that buy the insurance for our organizations do not fall prey when the insolvency occurs. Can you articulate a little bit how critical that is in the role that you have?
Solvency is the sort of fundamental underpinnings of consumer protection, because consumers are paying today for something that they might receive tomorrow. So it is our job to make sure that carriers are solvent, and that drives to our consumer protective requirements. And the Connecticut Insurance Department is made up of some of the most sophisticated and professional staff that I think the state has to offer. We have actuaries, and we have a legal team, and we have accountants that are constantly combing through all the different financial analysis to ensure that these carriers remain solvent.
Thank you. And that raises the last question I have, is the fact that we have a bill that you didn't provide testimony on, but talking about MEWAs. MEWA as a health insurance product, even though it was membership driven, is a insurance product, and the insurance department does have oversight to ensure that it is solvent, that it is operating in a financial stable setting. Would that be correct?
Correct.
But at the same time, the partnership program and even the Connecticut option that's being provided is not considered an insurance product, and therefore the insurance department has no oversight in regards to its practices and its solvency. Would that be correct as well?
Well, from a solvency perspective, that is correct. We do, of course, receive complaints from anyone related to insurance on a regular basis, and we don't turn down or away complaints. We funnel them to the right direction. So from time to time, we do, of course, interact with individuals that are part of those marketplaces.
But is the partnership plan, as it currently exists right now, is it an insurance plan? Is it considered an insurance plan, even though it's providing health insurance?
Of course, it's an insurance plan. Is it one that's regulated by the insurance department? That it's not.
Okay. I appreciate that clarification, because that's one of the struggles that I have in regards to the comparison between the two, is the incredible diligence and expertise and what you articulated in regards to actuarial and professional expertise in making sure that insurance companies and insurance programs are solvent and that are oversight by the insurance department. That the partnership plan as it currently exists right now is not an insurance plan under the regulations and definition, and therefore does not have the oversight and the regulatory insurance of solvency and financial transparency and accountability that you would have over other health insurer companies. I just wanted to clarify that that is in fact correct.
I mean, that was a holistic sort of nutshell of it. I mean, there's, I think, a little bit more nuances to it that I'm unable to articulate right at this moment, but I think that you've encapsulated it generally correct.
Well, I appreciate that. And if there's nuances, I'd love to learn more about it, because I want to be sure whatever program that we implement that is ensuring people's health insurance and their health, that there's a viability. And I know in regards to, as I mentioned, the annual rate review, when insurers run risk and cost overruns due to the unaffordable cost of health insurance, it is the company and the ratepayers that pay the bill. But in regards to my understanding of the partnership program, as well as looking at some of the unique aspects of the Connecticut option, is that the taxpayers bear the burden should the costs be uncalculable or unsustainable. So I appreciate your input. I appreciate the work that you do. And again, look forward to working with you, and welcome to the commissioner's role.
Thank you, Senator Wong. And I'll just note that related to the nuances, we do have a professional staff here that can answer maybe very briefly what that is.
Good morning, Senator Wong. Jared Koski, Deputy Commissioner of the Insurance Department. Senator Wong, yeah, to your point as it relates to the partnership plan, similar to the state employee plan, the department has an MOU whereby we receive consumer complaints and can work from a consumer protection perspective as it relates to that plan. With regards to the MEWAs, I believe as it's proposed in legislation right now, the department would be responsible for one similar to that, consumer complaints, but also it would be subject to both our financial examination authority and our market conduct examination authority. I know that was something that was previously discussed when we looked into this a couple years back. That would be the key difference, I guess, if you're trying to distinguish between the two as it relates to the partnership plan or the state employee plan. The insurance department does not have regulatory authority over the financial or market conduct conditions of those plans.
Thank you. And Commissioner, you just did a great job in reiterating the great team that you have. So, and the knowledge. So thank you again. And again, I look forward to working with you, and welcome to the Insurance and Real Estate Committee, sir.
Thank you.
Thank you. Representative Nuccio.
Good morning, Commissioner.
Morning.
Nice to see you again. I just had a quick question. You know, we had a lot of conversation, about auto insurance, and we're always talking about health insurance. And when we look at the property and casualty and some of the meetings that we had recently, somebody at the meeting had mentioned that the average profit on an auto insurance policy was around 10%. And I know for a fact when you guys do rate review for insurance companies, I believe the health insurance premium is at 1% or lower. I was wondering if you could give a little bit of information on the differentiation between the two. Like, why are we allowing insurance for cars and homes to be at such a high profit rate of 10%? I understand why we try to keep the insurance rate at the 1% or below, because it is a cost of healthcare. But I think we're starting to see some pretty exasperated numbers in homeowners and property and car insurance and such like that. So I was wondering if there's any detail or anything that you could provide as to why we're allowing such a high profit model.
Thank you for the question. So the MLR on the health side, health insurance has constantly been the center of attention for legislative bodies for years and years and years. I don't have the legislative history into how the MLR was come into effect. What I would note is that there's similar sort of percentage year-over-year increases on both the health and the auto or private or the home side. I think that from my perspective and from like sort of the high level, on the P&C side, it is more of an open market, right? The carriers are going to want to have the most affordable prices so they could get as many consumers as possible. Right? That's that's the game plan, and that should be sort of the game plan on the health side as well. So we're looking at it from more of the guardrail of an MLR, similar on the auto and home side, may not have any positive impact on the actual costs. It's an open market versus one that's closed, and on the MLR side, it's very difficult to determine, carriers are often very creative in how they distribute their, internal their internal money that comes in and how that gets distributed out. And I would imagine that the PNC side would adjust to having a 1 or 2% profit margin as well. So I love the question. I think it's something that we have to continue to look at, but my perspective right now is, on the one side, it's more of an open market. The goal is to, drive affordability, and then on the health side, it's capped with the MLR and getting a better understanding as to why we can't get the cost down, even though we have an MLR, is very interesting. So I'm thinking through both of those right now as we go through the process.
Yeah, I would think an interesting concept for MLR and property and casualty, right? I think, the MLR has done a lot for transparency in being able to show, the driver of cost in the healthcare industry, with 85 cents of it being, claims, prescriptions, et cetera, et cetera. So seeing that same sort of information on the other side, because while it's an open market, if the entire market, that whole, all boats rise, if all prices go up, you can still offer somebody a price that's $100 less than that and still be exorbitantly high and be getting a 10% profit on that. So, I think if we're going to truly look at the cost of insurance products across the board, I love the idea of an MLR for property and casualty, to be able to show that across the board and keep their numbers in check also.
Well, thank you for that feedback, and we'll certainly look into it.
Thank you.
Just because I have you both up here, I'm going to ask one last question. Our nonprofits are in a crisis situation related to all insurance. We did a nonprofit working group over the fall, winter, and spring, and we submitted recommendations as a group. Are you in support? I didn't know if you had submitted testimony on that behalf. You did?
Yeah, we did. And
okay.
Oh, wait, we didn't submit testimony on it, but we participated in the working groups.
Yep.
And we submitted information to the working group, but we did
Okay.
not submit testimony.
And any
to it.
comments on our final report?
Did we have? No, I don't think we had any comments. So, I mean, it's a national problem. All states are thinking through this, and when we talk with other insurance departments, they're also struggling with these things. And I think what Connecticut is doing is trying to do something. So
Right.
We're here to supply whatever guidance we can as you guys make the correct policy decisions.
Great, thank you.
Yeah, and I'll just add to that. It is a national, I think, issue. We've talked to a number of states. We hear from them. Washington State. We keep harping back on Washington State, but they did a great report just this past year. They were tasked, the insurance department, by their legislature to put together a report, and a lot of the findings are consistent with what you're asking us to study and look into, and finding solutions to this extreme problem that's affecting nationally, but Connecticut as well. So we're happy to work to find those solutions that will fit the communities and the service providers that we have that are providing services to the most needy that we have here in Connecticut. So look forward to continuing that work.
Thank you. Any other questions? Great. Thank you for being here.
Thank you.
Next up, we have Gabriella True.
Good morning, members of the Insurance and Real Estate Committee. My name is Gabriella True. I'm a CT resident and president of ASPIRE, the Alliance to Solve PANS and Immune-Related Encephalopathies, supporting HB 5374. Our son should have been diagnosed at 5 when his twin was, but we couldn't afford treatment for both kids, even with family support. No one should have to choose between one child over another. In 8th grade, due to untreated PANS, he wrote a suicide note and was hospitaled for an extended period of time. We paid for every bit of care we could, but IVIG was out of reach. In 10th grade, a severe flare erased his daily functioning and future, going from straight A's, jazz band, Eagle Scout, lacrosse football, to unable to participate in any of these activities ever again. He missed 1.5 years of school, returned to an outplacement setting, unable to attend college, suffering from anxiety, depression, OCD, rage. His doctors recommended IVIG again, but without coverage, it was financially impossible. So he was denied disease-modifying, life-altering treatment, leading to prolonged suffering and permanent losses. Families with means drain savings. Families without means watch their child deteriorate and risk losing their lives. Often a parent leaves the workforce, reducing taxable income. This inequity moves costs to the most expensive and least effective parts of the system via emergency care, schools, long-term systems instead of timely medical treatment. Aetna recently updated its policy to cover plans for children, demonstrating that coverage can be structured, criteria-based, and responsible. It is medically necessary care managed through the documentation, severity assessment, and objective measures. The Rhode Island Office of Health Services insurance report after their bill report found no meaningful increase in premiums resulting from its mandate. The cost was negligible. The mandate ensured that families could access appropriate care without imposing significant costs on the broader insured population. Similar mandates in 15 other states, including Massachusetts, Rhode Island, and New Hampshire, show that coverage didn't significantly raise premiums. The impact is only pennies or even fractions of a penny per member per month. However, lack of coverage increases human suffering and shifts increase to long-term costs to families, patients, and other state systems. The states and family lose more by not having insurance coverage. This bill is a practical measure to improve equity and access, align Connecticut with neighboring states, and ensure that medical decisions remain with qualified clinicians rather than being dictated by inconsistent insurer policies. We would not be coming and begging for this coverage for 14 years if it didn't matter. We really need your help. The time is now. I respectfully urge you to support this bill. Thank you for your time.
Thank you, Gabriella. Can you just educate us? Does the IVIG treatment start right away?
No.
Is it one time? It's like how often is it recommended?
Not every person with PANS will ever need it. We know, like probably any other disease out there, the earlier you're treated, the better outcomes. So the goal is always to start treating early and appropriately. Unfortunately, we have too many providers out there that will say, oh, we'll just wait and see. We don't do that for, if you cut your finger, with a big knife, you don't sit there and let's see if it festers and gets worse. Because we have lots of history here that shows that it's the cost of inaction that causes longer-term problems, both physically, mentally, and then financially. So no, not everybody needs it. Even, sometimes we do antibiotics at various terms. There's a lot of great research out of Stanford that's showing that even with dry signs of arthritis, not just wet, that certain rheumatological medicines that are incredible anti-inflammatories are doing wonderful things, which are, obviously much lower cost. They do have a lot of side effects, but what doesn't, like methotrexate, for one example. There are, IVIG does come into play. It's the sort of the most costly one. It's not a quick drug because it's a pooled blood product. But the transformation is incredible for some. Of course, there's a few people that it doesn't work for, and then you stop doing it. It's not like you just keep doing it because you got it. It just is that it can be disease modifying, whereas if we have seen cases where you start the antibiotic, especially good one, not amoxicillin, and I won't go into why, but that have really good anti-inflammatories built into it, azithromycin, for example, which doesn't work in all strains. So, you have to be able to have a clinician willing to try several of them and keep going, and working on doctor education about that continually. But, when you have a doctor that says your child needs IVIG, they know it's going to be a fight. No one's like, oh, just try it. It's not like taking some NSAIDs for 6 weeks. Like, it's going to be a battle for that doctor's office, everybody on their staff and that family, and it's, no one's saying just try it. There has to be, obviously, medical, reasons. You've got to do enough antibiotics, try some anti-inflammatories, whether it's a rheumatological med, whether it's NSAIDs or it's, longer doses of corticosteroids or even Solumedrol IV. There's a lot of steps that take you before you get to that point, because it's not an easy drug to even take. It's over generally a very slow infusion rate over 2 days, sometimes in an office, sometimes in home. That depends on the provider and what's happening with that patient. And of course, there's other, risks of it, but no one's just saying, oh, why don't you just try it? So as far as length of time, that's really going to depend on patient and probably some of their comorbid health diagnoses and how long they've gone untreated for. So we have seen patients who their severity is very acute immediately, and they have various supporting labs, and they've done some antibiotics and they've done some severe, because you're going to do all that in advance of even getting it approved. This is what's happening in other states that have an insurance mandate. So, and if something suddenly got better, then that doctor has pulled back on it and say, okay, well, this is fantastic. We actually have gone down this path, and we can, if we need to revisit it, we will, but at this point, we don't see that right now. But technically, if you start early and you get them in there early, then maybe you only need, say, a few rounds. We have seen kids who may have a primary immune deficiency showing up in their labs and may need high dose for a little while and then go down to low dose or even sub-Q, and then it's really covered under probably that primary immune deficiency. There's not an exact answer. Sometimes we don't have a study to show that it's worse after COVID, but I think the rate might have increased over COVID, like of needing one. Original studies, they had hoped that the answer would show one and done. But often it's more like 3 and done, where other cases go on for longer. But it's really going to depend on how long they've been situated with this disease, whether it's really moved from a post-infectious sequelae to a more autoimmune or autoinflammatory picture, because we can give these antibiotics and anti-inflammatories, but that doesn't mean our brain and our body's going to go, okay, we'll act right now. Like, in the simplest terms, it's not like, okay, we're all set, we're good to go. Our body and bad actors that we know that are tied with other autoimmune diseases like Th17 are really bad actors that we see in high levels in some of these patients, and also through mouse models out of a study at Columbia University that show that it doesn't just turn off. So sometimes we have to force the issue. Otherwise, when it becomes autoimmune and autoinflammatory, there's no off switch. And so IVIG, especially at a high dose, can serve to turn that off switch. Sometimes there is other further medications that one needs for the more chronic and very unstable, debilitated patients. But that's also incredibly rare, like even rarer than the need for IVIG. You will see a number of 1 to 200. That number is a made up number, and it would be less than that, obviously, because hardly anybody needs it. In the case of my son, if he had gotten it in 8th grade, he probably, I don't have a crystal ball into everybody's life, but I'll just use my example because it's in front of me. He might not have had the severity he then had in 10th grade, where then he missed 1.5 years of school and then had to be outplaced. Now, this was a kid who was straight A's. Like, his brother has had a full load of IEPs his entire life because he has autism and PANDAS. But he was treated early, and now PANDAS is not his issue. It isn't. So, in my own house, you see the story of the cost of inaction, of treating early and treating years and years too late.
This is very helpful, thank you. Any other questions from the committee?
Just in my written testimony, I also submitted it from myself in a longer story of this, and then our vice president did a more formal one, and then our professional advisory board, including the doctor from the NIMH that discovered this disorder, and some of the lead researchers at Stanford, Mass General, Columbia, and others have contributed to a letter. So we don't have a commission, but they're
Right.
like the commission.
Yeah.
And so that letter is an important one. I know there's a lot. Thank you.
Yep, thank you so
And
much.
I'm available for questions later.
Great. Next up, we have Barbara Witowski.
Good morning. Good morning, members of the Insurance and Real Estate Committee. My name is Barbara Rutkowski, and I'm here as a parent in support of HB 5374 to mandate coverage for certain healthcare conditions. My daughter was diagnosed with PANDAS or PANS at age 6, but insurance would not cover her specialists or her treatments. My husband and I were fortunate enough to be able to pay out of pocket for what she needed, and her condition early on was more mild or moderate, so she didn't need heavy treatments and invasive procedures. But that all changed on Tuesday, September 7th, 2021, and I remember the day like it's happening today. After a strep exposure, our 11-year-old child suddenly fell into a severe presentation of PANDAS, one I had heard horror stories about in the support groups for the prior many years. She was a thriving honor student, excited about high school, and she became almost completely disabled and homebound within days. Her doctors, the specialists we had been seeing who had been helping us all along, immediately said IVIG was necessary, but insurance didn't cover it. And at tens of thousands of dollars, they had recommended a few treatments at least. We couldn't do that out of pocket. This was common back then, and doctors assured us there were other things we could try, and we did. There's a saying that says, no one does better research like the FBI than a mother trying to heal her own child. The doctors offered every alternative, and we tried them, but it did not help. Little bits here and there. Eventually, I quit my job. I homeschooled her, and I was caring for her day and night. It was like having an infant at times. Eventually, I realized we really needed to fight for IVIG, and I knew Massachusetts had mandated the coverage for it for PANDAS, and I found a doctor in Boston who was doing it for PANDAS kids. We drove 2 hours, and within 15 minutes, she looked at me and said, "Your daughter needs IVIG, and I can get it for her." 3 months later, she had her first infusion. I would love to tell you it's a huge success story after that, but it had been 3 years prior that she needed it, and it was 3 months is all it took to actually get it once it was approved by insurance. I think we had 2 denials then. And although it did help, and I can say she is back in school part days, the damage of prolonging her treatment caused damage that IVIG alone could not completely reverse. Today, my daughter is a junior in high school. She's lost most of her high school years. She went from being an honors student and having friends and horseback riding and planning for AP classes. And as a junior, she now goes for only half days, spends that time in the resource room without her peers, and eats lunch alone. Gone are the horseback riding lessons and movie nights and the child she used to be. And although IVIG helped, we are now going to start the process over again to fight for additional kind of next level treatments for this disease. But here's what's important for the committee to understand. As much as the humanity of it all is important, the medical cost did not go away. It might have been delayed, but it has ballooned. In addition to the additional, more intensive, more expensive care she will now need, I left the workforce and stopped paying taxes on my 6-figure 30% bonus income. Our family didn't spend money and put it back into the economy here in Connecticut that we would have. And the school system has provided services and accommodations for years. We live in East Granby, and they've been incredible. It's costly, and now her medical needs are more complex and expensive. So mandating coverage for medically necessary treatments like IVIG changes lives. And it's not just humane, it is fiscally responsible. I urge you to pass HB 5374 so that children and families get the medical treatment they need. Thank you.
Thank you so much, Barbara, for sharing the story. I know how difficult it is, so we really appreciate and respect you taking the time to come up here. It sounds to me from your testimony and previous testimony that timing is extremely important when dealing with this, and a day, a week, a month can jeopardize the future of how these children, respond to this type of treatment. So thank you for sharing that with us, and your story is very impactful. Do you have anything else you would like to share?
I would just add on to what you shared, that you are 100% right, that this condition, we're talking about the brain, and for all the neuroplasticity we have, when the brain is under attack in this condition, the immune system targets cells in the basal ganglia. And when the brain system is under attack like that, the inflammation, and as Gabriella had shared, once it flips into autoimmunity and just this automatic response that keeps going, time does matter. And we wouldn't have a cancer patient or any other type of illness wait 3 years for something that could have helped had it been given 3 months. So I appreciate your time. Thank you.
Thank you. Thank you for being here today. Sorry, we have a question. Representative Meskers.
Less a question than a comment. I was in my office listening to testimony because I was multitasking. And I think I'm impacted in that sometimes I might miss testimony because I am multitasking. We're only as happy as our unhappiest child. And there's no question that the medical impact is and the decisions we make here are impactful. So having the courage to testify, having courage to expose yourself and expose your situation is very impactful to us. You're heard, I can tell you that.
Thank
and
you.
I appreciate you coming up. The only corollary I have is a patient, a personal friend of mine who was suffering from MS. And the medicine came off the formulary, and she was stuck with a generic, and she said normally that she moves, and the baseline goes down, and the performance and her functionality reduces, and then she establishes a new baseline on the shift. And those are quality of life issues, too, that I think are so devastating. But your case, I mean, the fact that the state and yourselves will now bear the cost of those decisions is very impactful, so I appreciate it. Thank you for the courage to come up and share with us.
Thank you for sharing that.
Thank you, Barbara. Next, we have Elizabeth Salcedo Suvorov.
Good morning. Thank you for the opportunity to speak today. My name is Elizabeth Salcedo Surovov, and I'm here with my family in support of HB 5374, which would require insurance coverage for the treatment of PANS pandas. This issue is deeply personal. Like the other stories you have heard from today, both of my sons have PANS pandas. 9 years ago, my oldest son, who is here today, was only 4 years old. He was bright, joyful, and thriving when he suddenly regressed in all areas of his life. PANS pandas caused severe and sudden neuropsychiatric symptoms, including OCD, pain, sensory overload, and profound emotional distress. My child lost the ability to attend school, eat normally, sleep, or function independently. Our lives were completely upended, and they remain forever altered. This physical suffering was compounded by the financial burden of treatment that my family bore, and also the system surrounding us absorbed. Because insurance did not cover PANS pandas, his diagnosis and appropriate care were delayed for over a year. This delay changed everything. What was treatable became chronic, at times my son was severely disabled, unable to get out of bed due to pain. Our home became a place of constant crisis management. We faced repeated medical visits, and our home became a place of special education, homebound instruction, paid for by our district, therapies such as ABA, and many work absences for my husband and I. I want to be clear, I am a lawyer and I can advocate for my children. I have a 2-income household with strong extended family support, and yet Pan's Pandas nearly broke our family. We ultimately paid out of pocket for care to save our boys. I want to say this plainly. Most families cannot. Expert-informed clinical care for Pan's Pandas that we heard about today includes immune-targeting infusion therapy such as IVIG. Yet families routinely encounter insurance denials, prolonged appeals, and delays that worsen medical outcomes, while compounding emotional and financial strain. 9 years into this journey, my son has still not received IVIG because it is not covered by our insurance. Access to necessary medical treatment should be equitable and not depend on whether your insurance provider chooses to cover it, how hard and how many resources you have to fight it, or whether you can afford to pay out of pocket for treatment. The families you are hearing from today, like mine, continue to show up year after year, 9 years, 14 years, because we know that with timely and appropriate treatment, children and families can get their lives back. Passing HB 5374 will ensure equity and access to medically necessary treatment. It will prevent avoidable disability, and it will stop families from being financially devastated just to save their children. Please pass HB 5374 for Connecticut's children and families. Thank you.
Thank you, Liz, for being here. I just really appreciate your advocacy on this issue, because you are doing this not just for your family, but I know that you're doing this so that other families don't have to go through what you are going through. I mean, it's been 9 years and you're still seeking the treatment. It sounds like the other costs that this disease has had on yourself, on your town, on the school system, are things that we weren't really considering before. And I want to thank all the speakers for pointing that out to us. I mean, the school system is taxed, having to homeschool or, send people into the school. So that's a really good point for us to have too. I think there's a lot of other costs that you're not even talking about, and other things, daycare and, can you and your husband, having personal time and things. I mean, there's just a lot of things that you've really given to us to think about, and they're not really part of medical coverage sometimes. So we just appreciate that. I don't know if there's anything else that you want to share that you didn't get to today, but we'd love to hear it.
Yeah, thank you so much for the statements you made and also the question. There's an immense financial burden because of this illness. Had this legislation passed 14 years ago, my son would have been treated right away. He's here today. That being said, we have an opportunity now. And I do think we need to look at the costs that the families have to bear includes, when your child is sick, you will do anything to get them better. whether it's your child, your grandchild, your niece, your nephew, someone you care about in your family, you will do anything possible. Families like mine cash out savings. They take from their retirement. They take from their future security to pay for the present. Families like mine seek special education. We have homebound services since second grade. My son's now in 8th grade. That's 6 years, practically 6 years, almost 6 years. We have 2 children. Times that by 2. These are costs that the family bears, but also the educational system bears. Special education that might not have ever been there. Homebound services. Medical treatments, ABA therapies that we might not have had to have otherwise. All paid by the system surrounding us and by us personally. It's a huge amount of time and effort taking off work. We're lucky in a lot of ways to have a lot of family support, but again, not every family has that. And so I'm here today for my family, but for all of the families impacted by this illness. Thank you for your time.
And thank you so much for being here. Any questions from the committee? Great, thank you.
Thank you.
Next, we have Lauren Brush.
Good morning, distinguished committee members. My name is Lauren Brush. I am a Connecticut resident and a licensed clinical psychologist at the Institute of Living at Hartford Hospital, where I work with individuals with schizophrenia spectrum disorders and severe mental illness. I am here in strong support of HB 5374. I'm also a mother of a child with PANS.
You can take your time, Lauren.
Thanks. 3 weeks into 5th grade, my 10-year-old son went from being a high-achieving, socially connected role model student to a child I did not recognize. Following a virus, he developed an abrupt onset of severe psychiatric symptoms. Suicidal ideation, self-harm, rage, panic, OCD, motor tics, trichotillomania, behavioral regression, cognitive decline, and intense fear of vomiting that led to rapid weight loss and a diagnosis of ARFID. Within a month, he was hospitalized at Connecticut Children's, where he was diagnosed with PANS. He required tube feeding, steroids, antibiotics, IVIG, a safe room, and both physical and chemical restraints. He was later transferred directly to the inpatient psychiatric unit at the Institute of Living, the very hospital where I work. As a psychologist who understands hospital systems from the inside, I can tell you this. The system is not built for these children. PANS sits at the intersection of medicine and psychiatry, and when care is fragmented, children fall through the cracks. I was able to advocate aggressively. I knew who to call. I had relationships with hospitalists and leadership. I understood the language of documentation and medical necessity. Because of that, my son received IVIG and specialized care. But access should not depend on who your parent knows. I am a single parent. I took FMLA. My sister left a lucrative career as a costume designer in New York City to help care for my younger child. We depleted savings and incurred debt. We lost wages, the state lost taxable income, and I am one of the lucky ones. Without IVIG and specialized treatment, my son would likely still be hospitalized, out of school, or cycling through higher levels of psychiatric care, far more costly to insurers and to the state. Today, he is in 7th grade in honors classes with an IEP and 504 plan. He still requires monthly IVIG. He is not fully recovered, but he is functioning because he had access to treatment. As a clinician, I see what happens when children with complex psychiatric presentations do not receive timely, appropriate medical care. They become long-term burdens on every system: schools, hospitals, disability services, families, and government support programs. HB 5374 is not just about coverage, it is about equity. It is about preventing chronic disability. It is about reducing long-term costs by treating the underlying medical condition early. Families should not have to be medically sophisticated, professionally connected, or financially depleted to save their child's life. I urge you to support HB 374. Thank you very much.
Thanks, Lauren. Appreciate you taking the time to testify today. I'm glad you have a positive story to share, but I do just want to reiterate what I think I heard is that you were able to get IVI treatments because of your job and your connections. Is that correct?
It seemed like I was given different preferential treatment on some level. And
I think that's really important for us to hear because, not everyone is going to have those connections. And I'm, just really thrilled that you were able to get that for your child. But, what about all the families that were not able to do that? We've heard from families here today that have not been able to do that. So, it's a really impactful story that you shared with us. Any other questions from the committee? Thank you, Lauren.
Thank you.
Next up, we have Paula Penna.
Good morning, everybody. Hello to members of the Insurance and Real Estate Committee. My name is Paula Penna. I live in Manchester, Connecticut, and I'm strongly urging you to vote yes on HB 5374. And what we're asking you to say yes on today is not unreasonable. I want you to realize that there are over 17 states and counting who already mandate insurance for pandas and pans, and Connecticut has now fallen behind. My horror story with my daughter is very similar to everything that you've heard before, so I will not go into those details. Those are in my written testimony. But suffice to say that she lost years of school. She went from being a straight A student and a prized viola player to having to go to a special school. I own Music Makers Academy in Manchester that I've owned for 28 years. When she was younger and diagnosed, I was in the building phase of that, and I ended up having to lose most of that business because I could not care for her and work full time, especially as a single mom. And that led to the loss of the state for my taxable income, which was formidable, and also employment for many of the people, the teachers that worked for me. So I want to be clear about one thing. When insurance does not cover pandas and pans, the cost does not disappear. It gets dumped somewhere else. It gets dumped on families, on schools, on hospitals, and eventually the state. That's exactly what happened to me. I'm just going to skip ahead a little bit here. I want to speak about something that has not been spoken about before as one of the unfortunate ramifications of having a lack of insurance coverage. As I said, I'm a divorced mom. I was divorced when my children were very young. It was before Pandas and Pans was diagnosed. And as my daughter got worse and worse and required more and more doctor's appointments trying to figure out what was going on, my ex-husband, her father, fought in court about the rising medical bills. I ended up losing that fight. That was a 5-year fight in total with tens of thousands of dollars in legal fees. I lost that fight primarily because the judge said that Pandas and Pans was not a real disease because insurance did not cover it. And so we often don't think about that. There's a lot of us divorced parents out there. And on top of not being able to work the way we would normally be able to work, I have a master's degree in education. I've been a teacher for over 35 years. I'm a permanently certified teacher. I've never used the state for anything. I've only contributed to the state. But you go through something like this and the family court says, well, if it's not covered under insurance, it can't possibly be real. And therefore I lost. So I ended up having to cover and not only taking the time off from work and taking her to all of these doctor's appointments, taking care of her every time there was a flare-up, managing the household with a younger child that was suffering as a result as well. But I ended up having to pay for all of her medical, which turned out that I could not. So I have some figures for you. I spent more than $60,000 out of pocket on medical care. I spent over $50,000 in family court fighting for my daughter and for her dad to pay for what he needed to pay for to help us to get her treated. I estimate about $40,000 a year in wages because I had to keep missing work. I ended up having to make the choice between paying my mortgage or helping my child. So I did not pay my mortgage. I'm sorry. And I had to foreclose on my home and file for bankruptcy. It was literally a choice between my mortgage and my child's appointments. She had needed IVIG when she was 16 years old, about 3 or 4 years into this mess. She was literally in her pediatrician's office begging for IVIG because we had tried everything else that the doctors had recommended and nothing was working. She was in danger of not being able to graduate high school, and this was a straight A student. We were very lucky. We had an angel donor come out of literally nowhere. Still don't know who that person was, but I got a message saying that my daughter's IVIG treatment was covered because another parent who had the money and her or his children had been able to get the treatment and recover had heard my testimony in 2013 in front of this legislative committee and paid for it. And we were extremely lucky because many children need repeated IVIGs. My daughter had one IVIG and 2 weeks later was in school as a junior. She was able to bring her GPA up from a 2.5 to a 3.74. She was able to socialize. She was able to go to school regularly. She barely missed school after that. She wrote her college admissions essay about her ordeal with PANDAS and PANS. She ended up getting into University of Hartford on a partial scholarship. She graduated from University of Hartford summa cum laude, and she's now a 28-year-old thriving event manager who travels all over the place. And she had strep about a year ago, and the PTSD that I have suffered, and that is a diagnosis, was ramped up because I thought, oh my God, she's going to fall from this place. And thankfully she did not. She just had a normal strep infection and did not go any further. So I am urging you to jump on board with the other 17 states and counting. And please allow these children to get the treatment that they need sooner and not have to go into special schools and not have to have mothers and fathers lose income, not have to have business owners lose their business or people lose their home. I would do it all in a heartbeat again. But as a 58-year-old woman, I am nowhere near retirement because I used my entire retirement savings and I still do not own a home. So I am still recovering myself 10 years later. I would do it again for my daughter, but this is too much. And to think that Cigna, who denied us 6 times and we appealed 6 times, could have gotten her the IVIG sooner before it caused the rest of this financial devastation to me, to the state, to the schools, to the community, to my teachers that lost their jobs. To me, it's a sin. So thank you very much, and I strongly urge you to get on board and finally pass this insurance mandate as many other of our neighbors have. Thank you.
Thank you, Paula. And we're very sorry to hear your personal journey. I'm also just want to say I'm happy to hear that all the efforts and all the pain that you went through resulted in having a daughter who is healthy and happy and functioning today. So
may I add one thing? I'm sorry that I left out because I went off script a bit. My younger daughter most likely also has PANDAS or PANS, but she was having the symptoms arise when we were in family court, and the family court told me that I would be in contempt of court if I brought that daughter to any of the doctors that did not take insurance. And she never got diagnosed, and she is still suffering to this day.
thank you for sharing. Any other questions from the committee? Paula, thank you for being here with us.
You're welcome. Thank you for listening.
Next, we have Rosanna Ferraro.
Good morning, members of the Insurance and Real Estate Committee. And I just want to say to some of the testifiers before me, thank you for coming to the legislature and sharing your story. I'm Rosanna Ferraro. I'm a resident of North Branford and the policy director at Universal Healthcare Foundation of Connecticut. I'm here to speak in opposition to HB 5378. There were some concerns raised by the Commission on Racial Equity and Public Health and the Office of the Healthcare Advocate that we echo. I'm testifying today to ensure that we don't allow the MIWAs in the state. All we know about them is that they are not an insurance product, as noted in the bill language. That is, for me, all we need to know. These have been prohibited in Connecticut for a reason. I'm also worried that lower costs in MIWAs could result in negative consequences in other insurance markets. I'm not an expert. I cannot claim to be, but I know enough about health insurance to know that you pull one string and it could cause harm in another. As written, we also oppose the study. The goal of the study is to reduce health insurance premiums. This is only a quarter measure to our affordability problem. It ignores all other costs associated with coverage, including copays, medications, deductibles, any number of out-of-pocket costs that folks need to ensure that they can cover to be able to actually use their insurance. We offer that the study's goal should be broadened to include the true cost of purchasing and using healthcare. I also just want to mention that we really do need the final results of this study before MIWAs are implemented. Right now, it's only an interim report due at the beginning of next year, and MIWAs are slated to be authorized for licensing starting in the following April. Just want to add that we strongly believe that the study should also include proposals like the basic health program, state subsidies, potentially allowing people to buy into a state-run health program. I think that we need to look at any option that ensures quality, affordable coverage for everyone in Connecticut. Thank you so much for your time. I do want to mention that there was a study referenced earlier. I think that was referenced earlier that I'll include in my testimony. It's a 2022 report from RAND Corporation around increasing subsidies and expanding health insurance options in Connecticut. I'll be sure to attach that to my written testimony. Thank you.
Thank you for your testimony. Representative Pavlak D'Amato has her hand up. Go ahead.
Thank you. I was just wondering how many employees are in your small business?
At our foundation, there are 5 of us.
Okay, and what do you guys, what does your organization use for health insurance?
So because we strongly believe in ensuring that folks have access to quality, affordable coverage, my company pays almost entirely our premiums, as well as insulates us from our out-of-pocket costs through a benefit program that's set up for us.
And so what does the benefit program consist of, and how much is it for premiums every month for each employee?
So we are not, as far as employees shouldering the cost, we pay a small percentage of our premiums in our monthly paycheck. And then once we pay $1,000 out of pocket, which we can use our FSA for, our HRA, which is funded by our, which is funded by Universal Healthcare Foundation, our employer, covers the rest of our out-of-pocket costs.
Right. So how much is the cost of the premium though every month? I know you mentioned about I think the $1,000 deductible, right?
It is right, and it's an insulation for us. Yes.
So how much is the premium every month for each employee?
To be perfectly honest, I am not privy to that line item in our budget. I could follow up though and get you that information.
But isn't it it's your organization? You don't know how much you spend per employee on health insurance?
I am not, oh, I'm sorry. I do apologize. I misunderstood your question. So because I do not, I do not facilitate our benefits. It is the purview of the president of the organization, but we're more than happy to provide that information. I'll just follow up with her and make sure you get that.
Okay, but you're advocating for saying that MEWAs are not a viable option for, I'm not sure what reason, but you don't know how much your health insurance costs exactly. So how?
I know how much, I'm sorry, I know how much my own personally, I just don't know how much the company pays in total for our 5 employees.
But aren't they the ones, they're paying for your health insurance, so you don't know how much it actually costs?
Oh, I know that it's roughly around $20,000 worth of premiums a year that they are covering, yes.
$20,000 a year in premiums for 5 employees?
I'm sorry, just for myself, I couldn't speak on the other employees.
And so would MEWAs be, do you know whether if we implemented MEWA, the cost would be more or less?
I believe that I'm not sure, but one thing I will say is that part of the reason why we have a benefit structure that insulates us from the out-of-pocket costs is because of the knowing that you could have a plan with a lower premium, but we've looked at some of those plans that would have lower premiums, and it's my understanding that the benefit structure leaves much to be desired. And so we're willing to invest in our employees and our people this way. I know not every small business can do that.
Right. So, right. And a small business like mine that I own can't do that because I can't afford it. So, and that would give an affordable option that I could provide for my employees. You wouldn't want me to do that?
Representative, I would want you to do that as long as it doesn't harm other insurance markets, does not disproportionately pull out healthy folks from our other insurance pools, and any other number of ideas. I just want to point out that the report that I'll make sure that I send it along, did look at potentially other health insurance options. And there were some really great viable ideas for the small business market that didn't, those proposals did not pass, but we could always revisit them. Because I think there were some good options there that do not run the same risk to the folks that would be using the insurance. I think that is our biggest concern. Also, it'd be great to have that report that really looks at the impact. So because we are not looking at, look, I know enough about these types of studies that a study that was done in 2022 could look very different. We have different market experiences, things going on, different regulatory structures. So I would just love to see all of these ideas lined up together and really look at who where the benefits and what are we exchanging for, it may be less out of pocket every month, and I understand that. It's just hard for me also to know that the number of stories I've heard over the years of folks who are like, oh yeah, I got the less expensive plan, but then something happened to me. And so those are the sorts of concerns that we have, which is why simply I feel like implementing MEWAs before there's a final.
But that's already happening now. But from what you're saying, without MEWAs, that's already happening now. People are having plans, right? From the stories that you're talking about, don't have the adequate coverage that they're looking for. I mean, I just had a constituent come to me with a huge cost, right? And she works for a small employer, and it's not affordable. And I mean, at least I know, let's say my employees, and of course, not everybody's healthy, right? Everybody has medical costs and medical concerns that they have to pay for. So I don't know why it's plucking healthy people out that's an automatic assumption, but I'm not sure why we're not providing at least other options, because it seems that the universal health care, I mean, wouldn't that be taking away from Access Health and what we have currently now?
That only depends on, so universal health care to us simply means that everybody has access to quality, affordable coverage. There's any number of ways for us to get there. Right now, we are not there. I think we are also, one thing that folks seem really concerned about, which I think is a legitimate concern, is the healthcare coverage crisis and the potential that more folks will be uninsured. I think we share goals. What I think that we may not necessarily agree on here is that these particular options, while may lower monthly costs, may exacerbate other costs. So we've seen different types of plans that try to lower the monthly premium, but what we see now and what we've seen for any number of years are, for example, in the private market, a high deductible health plan that becomes almost impossible to use, right?
You mean Obamacare? That's what it's called. Thank you.
Is there another question?
No, I'm just saying you called it high deductible health plans, but it's actually called Obamacare. That's the name of the program that you're talking about. But no, I don't have a question. Thank you, Madam Chair.
Thank you. I don't see any other questions. Thank you for being here.
Thank you for your time.
Thank you. Next up, Jennifer Duran.
Looks like we're having some technical issues with her, so we're going to move on and circle back around.
Next up, Katie D'Agostino.
Good morning, chairs, ranking members, and members of the committee. I'm Katie D'Agostino, President and CEO of the Central Connecticut Chambers of Commerce. We represent approximately 1,700 businesses across Bristol, Burlington, Farmington, Plainville, Plymouth, and Wolcott. And I'm here today in support of HB 5378 because of what it represents to our small employers. I'd like to tell you what I hear literally every day. The cost of health insurance is crushing our small businesses. It is consistently one of the top concerns raised to our chamber, not occasionally, but constantly. For many employers, premium increase year after year with very little predictability. Small businesses don't have the purchasing leverage of large corporations, they don't have the bargaining power of unions, and they don't have the scale of municipalities. And yet they are competing for the same workforce. When a small employer cannot offer affordable, competitive health benefits, it becomes more than a line item. It becomes a recruitment and retention problem. It becomes a growth problem. In some cases, it becomes a survival problem. What this legislation offers is relief. Relief through scale, relief through stability, and relief through the ability for small employers to work together rather than struggle alone. This is about giving small businesses access to tools that allow them to better manage costs over time. It is about creating more flexibility so employers can design benefits that meet the needs of their workforce instead of being locked into limited, increasingly expensive options. Our members are not asking to lower standards. They are not asking to cut benefits. They are asking for affordability, predictability, and a fair opportunity to compete in today's labor market. Connecticut's economy depends on small businesses. They are the backbone of our local communities. If we want them to grow, hire, and stay here, we must address one of their biggest cost pressures. This bill represents a meaningful step toward giving them that relief. On behalf of the Central Connecticut Chambers of Commerce and the employers we represent, I respectfully urge your support. Thank you for your consideration.
Thank you, Katie, for being here, and thank you for your support over the years for this initiative. Can you tell me about the members of your chamber and who you represent and who this would help?
Absolutely. So we have about 1,700 members throughout the region in central Connecticut. 87% of them are small businesses. A grand majority of that 80%, I'm talking small businesses less than 10 employees.
Excellent, thank you. Representative Muskers.
Yeah, I just want to thank you for the testimony. Look, I sit here on insurance and I'm co-chair of commerce. Capital formation, the growth of the economy of the state is dependent on small business. And I think if we go and stitch your testimony together with the testimony on the PANS Panda, what we're asking people to go is either to forego insurance or eventually that small group plan, to the extent that anyone's even participating in the small group plan, those plans either get bankrupted or people are no longer part of the system. So I think, some of the testimony, I think what we've looked at on the insurance committee is an association healthcare plan termed as a MIWA, because it's not an insurance product per se, but it is essentially the same as private sector insurance, which is also not an insurance product for all the self-insured companies by definition. But we're putting them, I think we've been looking at putting them under regulatory review by the insurance commissioner. We're looking at the strength of the plans. We're looking at making them a standalone and an ability to pool the risk so that small business can purchase affordable insurance. So I appreciate the testimony. I think I'm a strong advocate. I think you have to be clear-sighted about the issues in insurance, and I think the association healthcare plan becomes one piece of a toolkit. I think the problem, and you hear it in the U.S. about whether there's debt forgiveness for college student loans, or whether you hear about Obamacare, which I'm not an opponent. None of this is dealt with the incremental rising costs of healthcare, whether it's from the pharmaceuticals, the hospitals, the structural issues we have. I don't think that this will ultimately be the structural solution 10 years from now, but it's a piece of the toolkit to provide our smaller businesses to survive and to compete and to make sure that the employees of small businesses have health care insurance. So I really appreciate what you've come to speak about. I'm not under an illusion that this is the cure-all, because the cure-all is how do I get control of the price rises. The same way, the corollary being, I can forgive student loans for college education, but when the college education gets to $80,000 a year, I have a problem. I'm forgiving loans so people can charge $80,000 a year. So I think the cost containment issue still is a battle that has to be fought. And on insurance it will too. But I think it's important, and we've heard it, I think, on commerce, it's a clarion call from our small businesses. They need access to affordable health care to compete. So, I'm certainly going to take it under advisement, and I thank you for your testimony.
Thank you, Representative Muskers. I appreciate that.
Thank you for being here. I don't see any other questions.
Thank you.
Have a great day. Next up, Catherine Krashel.
It doesn't look like she is on Zoom.
Okay. Amanda Pascaluco.
Not on Zoom as well.
Justin Farmer.
Not on Zoom as well.
Peter Hahn. Okay. Megan Gorman. We got one.
Hello, everyone. Chairman Wood, Chairman Cabrera, Representative Pavlak-Diamato, Senator Huang, and all members of the committee. My name is Megan Gorman, and I am the Government Relations Coordinator for CMHA, Community Mental Health Affiliates. We are a local mental health authority across central Connecticut that serves upwards of 7,000 individuals, families, and children every year. We are a nonprofit and a business, serving also as a proud member of the Central Connecticut Chambers of Commerce, the Waterbury Regional Chambers of Commerce, the Greater New Britain Chamber of Commerce, and we are also a newer member of the CBIA. I want to thank you for this opportunity to testify in support of HB 5378, an act concerning MUAs and requiring a study of the Connecticut Option Program. While my organization is a nonprofit, we are also an employer and a small business with about 325 employees, of which about 165 of us elect medical coverage through our health plan. For organizations like ours, healthcare costs have become one of the most unpredictable and difficult expenses to manage, often forcing decisions that directly affect employees and the individuals we serve. Being a healthcare provider puts us in a very unique situation in this way. Our most recent medical renewal came in at about 44.1% increase, which would have represented a financial increase of approximately $907,000, almost $1 million for our organization. After very extensive negotiations and some difficult internal planning, we were able to finalize the renewal only at an increase of $252,000, which still required us to change our insurance carrier as well. But even this reduced increase was not feasible without shifting additional cost to our employees, including myself. These types of choices are not ones that any employer, let alone ours, makes lightly. They impact families' budgets, they create barriers to maintaining coverage, and can ultimately affect employee retention and recruitment, especially in a sector where compensation is often already stretched. Remember, we're a nonprofit. Stagnant and inadequate funding, combined with ever-increasing demand and high renewal costs, continue to erode our ability to fulfill our mission. We have the skill, experience, and compassion to do this work, but we need your action. Despite our continued efforts, we have many examples, and they're growing, of negative consequences that have impacted our organization. The rising operational costs constantly force us to make painful decisions about which vital programs must be reduced or restructured. The workforce shortages remain critical. We should be employing about 70 clinicians across our agency. I believe we're struggling at the 50 mark. We have capped admissions and reduced census then for some of these programs because we simply cannot meet the need of our communities if we ourselves cannot keep the staff, and we cannot keep the staff because we're unable to provide competitive, let alone comparable, insurance or healthcare options. So I'm in support of this bill and others similar to it because, similar to what Representative Masker said, we are in this matrix of inaffordability, and there are numerous causes to it when it comes to medical equipment costs, when it comes to insurance rates, liability, the rate of, how many car accidents we have in Connecticut. All of this factors into how this is calculated. But at the end of the day,
summarize.
Yes, I will. Thank you. I'm not a commissioner. It's okay to interrupt me. It's fine. So lastly, I'll close with CMHA, my organization. We are committed to offering meaningful benefits, but the volatility and scale of these annual increases are not sustainable. We need solutions that improve stability and affordability for employers and employees alike, so we are not forced year after year into benefit reductions and cost shifting. So I encourage your support of HB 5378, an act concerning MUAs, and if anyone has questions about the Canadian healthcare system, I am also a Canadian and would be happy to answer those.
Thank you so much, Megan. I do have a question for you. So you, do you get insurance through your employer?
I do.
And is it a high deductible health plan?
I am fortunate in that I do not have dependents, nor do I have long-term health issues at this point in my life. So I have opted for the out-of-pocket least expensive option, but means that I pay the most out-of-pocket over the course of my year.
And
Yes.
your colleagues that do have, families and spouses and other health issues and things, are they mainly getting like a high deductible health plan? Or do you know?
I cannot speak for all of my colleagues. I can pull data on that to see what the majority of those who have dependents are opting for.
Okay.
But it is part of my written testimony that due to the insurance change that we had to take this year to mitigate that huge hike, we changed insurance carriers, and the offsetting cost most impacted individuals with dependents or individuals with more intensive medical health needs. Yes.
Yeah, that's, your nonprofit is exactly who this bill is intended to help. We're finding that a lot of the nonprofits, they're a nonprofit, so the salaries aren't as competitive as the private market. They don't have as much money to put into the co-share with the employees. So there's a lot of high deductible health plans being offered currently. And that's what the MIWA is designed to do, is allow you to purchase allow your employer to purchase insurance with a large group so that you'd have tens of thousands, 50,000, 100,000 members, and it helps spread out the costs. You said it would help with predictability and stability. That's exactly, what the ME was designed to do, so that when life happens, when someone is diagnosed with cancer or has a baby or needs a knee replacement or any of those things, all of that 50, member that you said, 50, employees don't have the highs and then the lows when utilization is down. It's really a much more predictable healthcare system that you can plan, to hire new employees, maybe hire at a, put more money into salaries versus healthcare. So thank you for just sharing what your company's going through, because this is exactly what we're trying to do here. We've listened for 4 years to these concerns, and we made sure that we put forward a plan that is regulated by the Department of Insurance, that has guaranteed issue, so you can't deny someone coverage, that has all the protections through pre-existing conditions, and if we did skip something or miss something, we're totally open to making sure that those coverage, components are part of this bill. So thank you for testifying today. We appreciate it. Representative Meskers.
So thank you for the testimony. I'm not going to question the testimony because I think it was comprehensive. I just have, grabbing the mic for a question related to both insurance and commerce. You have a 70-person goal in staffing, and you're at 50 on psychologists or psychiatrists.
The role of clinician across my organization. Yep.
So just as an aside or as a point of information to the particularly to me and maybe to the insurance committee as a whole, if there are any barriers or structural issues in the state in terms of getting people licensed and with the ability to practice in the state, to reduce the headcount issue as well. I'm trying to make sure we've done compacts on various parts of the industry, in the healthcare industry. I want to make sure that we're, not bringing in people who, who've graduated from with a high school degree to treat people, but that people have both clinical experience and background in other states, and see whether there are strictures or barriers to entry. And if you're finding those issues, we'd love to hear that, because it's another piece of legislation, whether from commerce or insurance, to make sure we have the full range of clinical staffing available to yourselves and to the state. So.
Thank you. I appreciate the legislature's attention to that matter, and if I may, I will follow up with some items that are legislatively being introduced this year in regards to varying requirements on exam fees and licensures in terms of the discrepancies or differences between LMSW and LCSW. It can be a little hard to weed through, but I'd be happy to share that information with you and any others that we may have on what we see as a hindrance or something that could be remedied to fix that in the future.
Yeah, if you give me a phone call and give it to me in English so I can file it away.
Anytime. I may be Canadian, but I don't speak French. Don't worry.
Thank you. Bye.
Thank you, Senator Wong.
Thank you again, Madam Chair. You bring up some of the nuances in regards to the challenge of affordability, and you're looking for solutions. But you did quip and said, "Ask me, I'm Canadian." I think one of the challenges I have extended family members who are primary care providers and physicians in Canada, and I know of many physicians along the U.S. border of Canada in regards to many of the care that they give for Canadians. Can you talk a little bit about the Canadian system that we always hear so much about as a successful kind of single-payer government-run system? And the reality of it, because we're always hearing about the grass always greener on the other side, and how a single payer system is the solution to affordability and access, and it doesn't account for the sometimes irrational as well as unsustainable, but nevertheless increasing cost of healthcare because you're caring for loved ones. Can you offer some context in regards from your expertise viewpoint, but also as a a utilizer of the Canadian system that the grass is truly not greener on the inside. And ultimately, if the government can't afford to do it, then there's a real cutback in the quality and the array of services that may be available.
If I may, as I said, I don't know how much of an expert I can be considered as a Canadian citizen, but I won't make it an international matter. The differences that I would line out to your points in the matters of affordability, accessibility, and timeliness. In the Canadian single-payer option system, you've essentially made it so that everyone can get in line for care. You are likely going to have a longer wait in said line for the care that now all individuals are able to access through their insurance. In terms of affordability, in terms of what the government pays, I don't have the exact numbers off my head, but the entire country of Canada pays less for their healthcare system than what the United States pays comprehensively for their healthcare and insurance. I don't think the grass is necessarily greener because it's still March and there's plenty of snow on the ground here and north. I think just like any system, as we talked about here, exploring the varying options that we can allow. And I think at the end of the day, people want choice. They want the options to make a choice for what is affordable, what works for their small business or large business, and whatever this body or our state can put forward to meaningfully allow for a Connecticut option. And again, as we know, in pooling of insurance, the ability to have a number of individuals in the pool reduces the overall cost for the individuals. So any CT option would just be for the state of Connecticut, and I don't think that it could be compared favorably or even fairly to the Canadian system, which, as we said, is a national, provincially based, but national system. I believe that answers some of your question, but if there's anything else that I can elaborate on?
No, I appreciate that. And you're right. The grass isn't greener on either side because there's still snow. So thank you for that feedback.
Thank you.
Megan, thank you.
Thank you.
Next, we have Peter Hahn.
Good morning. Thank you, Chair Wood and honorable members of the Insurance and Real Estate Committee. My name is Dr. Peter Hahn. I am a solo cardiologist and practicing vein doctor in Eastern Connecticut, and I am here to provide testimony in support, qualified support for SB 342, an act concerning health coverage. As you know, this act contains 7 provisions, most of which are aimed at eliminating or mitigating specific issues or obstacles facing providers as they provide care to patients in Connecticut. I will be focusing strictly on section number 4 regarding a practice known as downcoding. As some background, I have been in Eastern Connecticut for the last 10 years after switching out of primary cardiology practice and treating patients with venous insufficiency in the eastern part of the state, which is grossly underserved compared to the central and southern parts. Throughout that time, I've been fighting an uphill battle with various insurance carriers as they create an endless stream of ways to delay and deny appropriate care and payment. Lately, I've been spending an inordinate amount of time dealing with an issue of downcoded office visits, which is when insurance companies will arbitrarily decide to reduce the claims that I submit without reviewing the medical records whatsoever. Most of the carriers in Connecticut are already doing this in some form, and I've been involved in fighting this since the beginning of last year, eventually enlisting the support of Senator Blumenthal and Lieutenant Governor Bystowitz last fall when dealing with Cigna and Aetna. The worst offender by far, however, is Anthem. I have personally spent over 100 hours in the last year of uncompensated time dealing with Anthem alone. Overall, Anthem has downcoded me on 50 to 60% of every office visit I've had with my patients since 2022, and they are still doing it. Their downcodes reduced what I am paid by between 25 to 50% per visit, and all of this occurred without notification to me, which they claim they're required to do and provide. I cannot think of any other industry where this would be tolerable or considered even vaguely legal or ethical. Overall, insurance downcoding and other delays in payment have cost me personally approximately $100,000 in lost claims over the last 4 years, and I am just one physician in a solo practice with 3 employees. Think of the scale of this across physician practices across Connecticut, although the trends indicate that Anthem is doing this primarily to smaller practices like mine because they know that we lack the time or resources to fight back. Anthem, however, grossly underestimated how stubborn I am and how angry they made me by essentially calling me a liar when submitting my claims, and then intentionally misleading me for at least 6 months last year by claiming there was no downcoding list and that I wasn't on it, when later they eventually admitted that there was a list and that I was on it. Section 4 needs to ban all automatic downcoding and set up transparent, published criteria for downcoding only after they have reviewed the clinical notes. And each downcoding event must be accompanied by notification that is verifiable to the provider so that we know we have to appeal.
Your 3 minutes are up. Please summarize.
Thank you for your time and attention. It's perfect. I'm open to any questions, including a quick explanation of what E&M coding actually is, how it changed in 2021, how downcoding impacts physicians and patient access to care, and how Section 4 of SB 342 can be strengthened to prevent this abusive behavior on the part of the insurance companies. Thank you.
Senator Marks.
Thank you, Chair. Through you. Good to see you, Dr. Hahn, and thank you for working so hard on this and for your advocacy, being the voice. So I just took, I work for the healthcare system, a corporate compliance learning module where we just get talked about fraud, fraud, fraud. If you upcode, it's fraud. Upcoding is fraud. So I just have a hard time understanding if I was to upcode everybody, I would probably get fined and get fired from Yale New Haven Health, but yet it's okay for the insurance company to downcode you. Can you explain how that process works and if it's equal across all physicians?
So I'm going to tackle those questions in reverse order. It's clearly not equal across all physicians. I've talked to providers who are employed by Hartford Healthcare and Yale, and they say they never see this, although they may not know if it's happening because they're salaried and they don't really care if they get downcoded because their billing department takes care of it. It's also likely that both Hartford Healthcare and Yale have separate agreements with the insurance carriers that prevent them from downcoding. Regarding the issue of upcoding and fraud, there is definitely fraud out there. There's fraud in every aspect of life, right? But I will tell you, and there was an interview that I was in that got aired yesterday on NPR where they also had comment from the Connecticut Hospital Association. And they actually have the data on this that looked at whether or not doctors routinely upcode or not. And I don't have access to that data. All I know is my own personal practice. But according to their data, they say that widespread upcoding is a myth and that hospitals themselves have education programs in place to identify physicians who are upcoding and then stop them from doing it. I did talk to the head of New England Medical Group, which is the outpatient arm of Yale, who used to be my cardiology program director when I was in New Haven. And he said that Yale had an issue where the third-party company that they hired actually started downcoding them internally before the charges were even released to insurance companies because they were so afraid of upcoding. So the idea that there is widespread upcoding is completely not true. Are there bad apples out there? Of course there are. But if you look at the overall behavior of physicians on this issue compared to the behavior of insurance companies who have a clearly documented pattern of delaying and denying appropriate care, I think that's going to, it's a hard argument to say that physicians are the ones who should be penalized and the presumption should be against the physicians because it's insurance companies in general that are doing this type of behavior. Would I call it fraud on their part? No, but it is yet another tactic that they use to harass physicians and to basically bludgeon us into submission because nobody wants to do what I'm doing. Nobody wants to spend a total of 200 hours a year or 300 hours a year fighting with insurance companies. But I'm not married, I have no kids, and I have a love for a good fight that is honorable, and this is what I'm doing. So there are, as far as what downcoding is, I don't want to bore the members of the committee on this, but would any of them want to know what exactly E&M coding involves and why this is a problem? So whenever doctors or other providers see patients, we can bill for that visit on the basis of either the complexity of the patient or the time that we spend with the patient. And that second part, the time, that's new. Prior to 2021, you could only bill for how sick a patient was, how many diagnoses they had. Basically someone coming in for a stubbed toe had a much lower diagnosis severity than someone coming in with untreated diabetes, high blood pressure, and having a TIA. Then in 2021, Medicare announced that in order to fairly compensate primary care physicians who were spending a lot of time with patients, but not necessarily having high acuity patients, they were going to add a time modifier or a time-based billing so that if you spent an hour or an hour and a half with the patient, that would automatically qualify as the highest level visit. What downcoding does is it takes these visit codes, and they go from 1 to 5, although realistically nobody bills less than a 3 if the doctor is actually involved. So a 3, 4, or 5. And what automatic downcoding does is if I spend an hour or an hour and a half with the patient, as I typically do with my new patients, the insurance company will come in, and Anthem has done this. They have downcoded my initial visits 50% of the time 2 levels. So that cuts my reimbursement to a 30-minute visit at literally half the reimbursement rate. And then they don't notify me that this is occurring, and then they claim that they sent me a letter that they did notify me, and they didn't notify me. Aetna claimed the same thing. Aetna did not notify me until Insurance Commissioner Mace got involved last fall at the urging of Lieutenant Governor Bysowitz about this. And then they said, oh, you were on the list, and then we took you off. I was notified about neither of those events. So when downcoding happens, it drains the life out of physicians in our practices because someone has to fight this. Whether it's a small practice and that becomes the doctor, or whether it's a larger practice and it's a billing company, it means that we have less time to spend with our patients. It means that 120 hours a year, that's 3 weeks of seeing patients. So right now there's a almost 2-month waiting list to see me. That would get cut down to 0. It also means that doctors won't be penalized for spending time with patients. Because right now, I've talked to committee members, I've talked to my friends who all say they hate the fact that they go to see their primary care doctor, they have 5 minutes, they're told they can only bring up one problem, and then they got to go. And that's not fair, but the doctors do that because they're not paid for their time, and they don't want to deal with fighting the insurance companies like I do, so they double the number of patients they see for half the amount of time each. And that's the downstream impact of this type of downcoding behavior. The other thing that happens is that patients who can afford to do this go elsewhere. They will go to direct primary care or concierge care or naturopaths or similar type practices where they can get in immediately. Those providers will spend infinite amount of time with them because they don't have to deal with insurance companies, and they will get paid for their time. So it's creating an economic disparity in how healthcare is delivered at the primary care level, and it's sucking the life out of physicians who have to fight this kind of thing. And it's not fair, and it's not right, and it wouldn't be tolerated in any other industry.
Thank you, Dr. Hahn. I had a couple questions. We have some other questions up here as well, but just going on the coding, thank you for explaining that to us. So basically, you're being penalized for spending additional time with your patients. And if Anthem or whatever carrier does the audit and finds that you are justified in that time and you get put on, I think you're referring to it as like the list. Mm-hmm. How long are you on the list for?
I cannot tell you that because they haven't officially given me anything in writing. So when I worked with Anthem last year, I met with them 4 times virtually over the space of 9 to 10 months. For the first 6 months, they looked me in the eye virtually, and they claimed that there was no list and that there was no downcoding that was going on and that this was all a misunderstanding. And for 9 months, or for 6 months, they made me submit over 400 different encounters where we found out that they had probably downcoded us, not because they told us, but because the amount that we were actually reimbursed was exactly where 2 levels below or 1 level below would have been. So we kind of had to go back and reverse engineer which visits had been downcoded. Eventually, after presenting them with this evidence, they came back and said, you know what, there is a downcoding list and you're on it, and you just have to appeal. And I said, how many do I have to appeal? And they said, all of them. So they wanted me to appeal over like 400 different encounters, which means writing letters, sending all the records that they should have requested initially before they downcoded me. As you used the word audit, they used to do audits where they would actually say, okay, we don't, and United Healthcare does this. United won't pay unless they get the notes, and then they may pay or not. But Anthem just downcodes you and then waits for you to appeal. What they then told me 9 months into this whole process was that I had to have a successful overturn rate of 75% or more. I think you had told me they told you 25%. Mm-hmm. So it's at least what they told me was 75% of my appeals, and that I would be on the list, be removed from the list for anywhere from 3 to 6 months. But they couldn't even give me those details because they won't share the details of this downcoding initiative. Just like Cigna and Aetna didn't last year until the insurance commissioner got involved. They sent formal inquiries when Cigna announced its policy that they were going to do it last fall, and then all of a sudden, miraculously, they came up with these plan specifics. Anthem still hasn't done that, And I will tell you that I have submitted over 200 appeals so far since last September. Over like 90 or 100 were immediately denied because they were filed too late. And I said, well, how can they be late if I wasn't notified that you downcoded me? And they said, that's just our policy. So I've now contacted the AG's office on this, and they said there might be, I'm not a lawyer, tolling, I think it's a tolling issue.
Okay.
But I don't want to go through that. I want to be able to see my patients, take care of them, and then be paid fairly for the amount of time I spend with them. And I will tell you, not everybody does what I do. I am in solo practice because I used to work for groups. I work for hospitals. I don't like spending 10 minutes with a new patient, 20 minutes with a new patient. I have to see them, examine them, take pictures of their legs, go over their ultrasound findings, consent them for procedures, and do all of this, and try to convince someone in the space of one visit that they should trust me enough to do surgery on them. And that's not easy to do. And that usually takes 60, 70, 80 minutes. So when I spend that amount of time with them, I should be paid for that time. I shouldn't have an insurance company come in and say, well, we don't believe you, and we're just going to downcode you.
Some of the other issues that you and I had talked about, because we're trying to, solve this problem, was the reimbursements once you go through the appeals. Could you just share with the committee on how you were being paid? And I'm talking about the faxing of a number that, like a credit card. Is that something that you were dealing with?
Faxing a credit card?
Yeah, a credit card number.
I don't think I understand, or I don't have a recollection of that.
Okay, so there's no faxing going on between any of your appeal process.
So when Anthem requested the initial list of patients for us back in February of 2025, we gave them a list of between 600 and 800 encounters. And then they requested another list on a different formatted Excel template, which we submitted all through secure email. Now, when we submit the appeals, our third-party billing company then basically writes the appeal letter and then sends the documents. But I'm unaware of anything involving a credit card.
But nothing's done via fax currently with the appeals process?
So the third-party billing company may be faxing something. I mean, honestly, they're based offshore, so I don't know if they do it electronically. Presumably, they should be doing it electronically, but I don't know for how they could be faxing stuff from, in India or Pakistan, but I suppose it's possible.
I'm glad to hear they're not faxing, because one of the things we did talk about in this committee and passed was getting rid of the faxing for confusion and error and just being an outdated technology. So I'm glad to hear that that's not going on. Representative Meskers.
I can't speak explicitly to the merits of your case, but I'm certainly listening closely. I would be particularly concerned about the denial and the denial of claims, and particularly if it turns out to be targeted against independent practitioners, because we're in a system with a ridiculous amount of consolidation already between both the hospitals and the insurance industry. And the only competitive leverage in pricing we have is not by underpaying those individual primary care physicians. It's by fostering more primary care physicians to provide competition with the networks that are going to would certainly know how to harvest and maximize their return from the insurance companies. So I would be hoping that the insurance companies would be doing everything within their power to facilitate the claims and the process versus putting people on lists arbitrarily who are potentially smaller players. So I hope we get this. I'm definitely want to look more into the case, because I'm concerned that the system becomes weaker when we have three major players, whether it's the insurance and hospitals and the group, and we lose all the independent physicians, because what you speak towards is the care you bring to the system, and ultimately I'm hopeful that there are benefits to that. Can you tell me, in the claims process, what your experience has been? When did you go as a, I guess, independent, right? Single care physician. When did you leave and what's been your experience in terms of the cost of, because you talked to me about the hours, but it sounds like there's a lot of manual intervention, there's a lot of back and forth arguing, bickering to get your claims acknowledged. That can't be just your time. I'm assuming you have a person who's your advocate in the
No,
office.
that's me right now, and I have a billing company that, the manager of the billing company is often dealing with the calls to the insurance companies, but when there's a denial, we do what's called a peer-to-peer to try to get care approved, and that's all me. The number of times I've done peer-to-peers fortunately has been relatively low, mainly because I am so fastidious about my documentation that for the most part, most insurance carriers don't deny the treatment I request, because if they do, then they read my note and then they try to have a peer-to-peer with me, and it's really hard for them to say no. Regarding what you said earlier about consolidation and private practice physicians leaving private practice, that is true everywhere, I'm sure, but in Eastern Connecticut, it's horrific. The number of primary care practices that have shut down and been acquired by either, or they've just been shut down typically. Sometimes they're acquired by Hartford HealthCare. NEMG typically just waits for the practices to close and then they take the patients. But I don't even have a primary care doctor in Eastern Connecticut because I couldn't find one, because every time I had one, they left, and then I was on another wait list for a year at a time, so now I'm between doctors again. And this is a horrible problem for all the patients in Eastern Connecticut. I'm sure it's true elsewhere as well, but it is an endemic problem caused by this push for massive consolidation. So the primary care providers who do try to stay open, when they start to falter, they're given sweetheart deals by the bigger hospital groups, and then they're bought out for a couple of years, and after 2 years they hate it, but they can't leave because of either contractual issues or who owns a patient list or things like that. But I agree with you that it drives up care, because it's pretty obvious that when the larger health institutions come in, like Hartford HealthCare or Yale, costs don't go down, right? That's always the argument that they make, but we know that the costs don't go down, and patients don't like it, because when you go to those bigger institutions, you are a cog. As a patient, you don't have a doctor anymore. You have a team of doctors, and any one of them will be able to see you on any given day probably, but you don't have a doctor anymore. And I don't want to practice medicine that way, and I don't practice medicine that way, and my patients appreciate that, but it is harder and harder to do this. As far as targeting smaller practices, you are on the money on that as well, because I asked my billing company not to give me direct data, but I asked them, are you aware that this downcoding by Anthem is happening, or if it's happening to other practices in Connecticut? And they said, yes, it is. And I said, is it targeting larger groups, smaller groups? And they said it is at least 75% of their smaller practices are being targeted in this way by Anthem, because they don't have the resources to fight back against this.
And again, you're coming at it from a very noble point, but as a person from commerce, there's as much a monetary concern I have as a noble cause for good care. If I don't have a competitive system, the prices just go up. Regardless of whether I have a good doctor in a group plan or a good doctor in the individual side, there's no negotiating a price once it's gone into the group, or that negotiation is group to insurance company. And I don't know how we ever reduce the costs of medical care if we don't have a robust system of independent contractors being medical doctors working independently. And I can see the consolidation, so thank you for the testimony. Thank you. No further, Madam Chair.
Thank you. Senator Anwar.
Thank you, Madam Chair. Thank you, Dr. Hahn, for your testimony. Dr. Hahn, you touched on Section 4 and how it could be strengthened. Would you be able to speak to that, please?
The way it's written right now, I think there are a couple loopholes that if I were playing the opposing side, as it were, that I would maybe take advantage of. Number one, it seems to specify that AI and algorithmic downcoding should be banned, but that's it. But there's nothing to keep insurance companies from doing what they've been doing, which is just to have a person do it, or to have an AI list be generated, and then the human basically just says, okay, I direct this to happen, and then all of a sudden it's not AI only, it's at human direction. I think downcoding, I think automatic downcoding without clinical review of the note or review of the clinical notes should be banned outright, whether or not it's AI or human directed, because someone should look at the notes before they waste my time in making me defend myself. You know, this comes up in a later section of the bill, I think, talking about highest tier utilization management review, talking about how there should be a presumption of medical necessity and things like that. And I think the presumption should be that we're not lying. And I've kind of half in jest but half seriously invited the Anthem reps that I was talking to on the phone last year to come to my office and see the visits I do so that they can report back to their superiors how I run my practice. So one thing would be just to ban it entirely, getting rid of the reference to AI or algorithms. Another issue is that without teeth, this will go nowhere. There has to be some sort of cost to the insurance companies for filing these downcoding claims, because if there's not, there's nothing to keep them from what they've been doing to me. They're going to downcode me 50% of my visits, and I'm going to have to respond, and I don't have the time to do that. So there should be some mechanism in place, and I can come up with a couple of different ways of doing this, where we penalize them, just like they penalize us if we're on this downcoding list. We should penalize them, and they should pay 50% of the claim fee if they frivolously downcode us and it's overturned an appeal. Because of the appeals that I have sent in that have not been rejected for timely filing, over 75% were overturned just upon review, very quick review of the notes. And I don't want to spend time doing that. The point is that they should be auditing me. If they have questions, they can audit me, but they need to be clear what the criteria are, because Anthem still hasn't told me what the criteria are for downcoding, and that should be part of Section 4 as well. If the insurance companies want to downcode someone, then they need to publish what the criteria are, and they should only be able to do so after somebody reviews the clinical notes. I don't know if it has to be a clinical peer as written, but someone should review the notes to determine very quickly if the documentation supports the level of billing. And if it doesn't, then they can downcode, and then we can go through a formal appeal. But I don't want to waste my time, and the insurance companies should face some kind of penalty for wasting my time.
Thank you so much for your testimony. Thank you for speaking up for such an important issue, which has become an existential threat to your profession. Thank you, Madam Chair.
Thank you. Senator Marks, did you have another question?
Yeah, I had my hand up before, through you, Chair. So there's a lot of parts in this bill, Dr. Hahn. Do you have any opinion on any of the other parts?
So that's a complicated answer, because I do, but I'm not actually sure I understand all of the other parts. I think the intention of all 7 provisions was to reduce obstructions to patient care. But I think that some of the language on a few of the sections is very confusing, even to me, and it was confusing to several other physicians when we reviewed it. Even the part about the utilization management review, which in principle I'm in favor of, I think, when I read it, but it's so complicated and the language is so tricky that I'm not sure whether it's going to help or hurt the situation by creating more work for people to do. But there are other things that seem much more straightforward, like getting rid of long delays in mandated step therapy by insurance companies, because if we know that a treatment doesn't work for a patient, why do we make them go through months and months of it just before they progress to the next medication? And this goes back to some of the previous testimony on PANS and PANDA that we were hearing here today. We know what works, we know what reduces cost in the long run, and yet they have these very rigid models where they say, just nope, we won't cover that. When in reality, they should really have to cover everything that is FDA approved and it is found to be recommended by their treating physicians, or in some cases 2 treating physicians, if they want to have some kind of gatekeeper model in for expensive things and have 2 physicians sign off on it. But they shouldn't be able to arbitrarily deny a treatment that has been approved by the FDA for a given condition just because they don't want to pay for it. I mean, that's why we pay for insurance, right? I'm paying $1,300 a month to Anthem, of all people, for my insurance, and I've needed 2 things covered in the last 2 years, and they've denied both of them. So it's something I deal with both at the patient level and at the provider level, and as we are all aware on this committee, things need to change with health insurance, right? There's no easy fix for this. But it seems to me right now the insurance companies have all the cards. They have the money, they have the premiums, they control what types of procedures we can do, when we can do them, and they have basically no accountability. So something needs to change.
Thank you. Thank you for being here, Dr. Hahn.
Thank you for your time and attention.
Next up, Grace Brangwyn. Brangwyn.
Good morning to the chairs, ranking members, and members of the Insurance Committee. My name is Grace Brangman, and I'm the Policy Director for Healthcare, Insurance, and Housing at the Connecticut Business and Industry Association. I'm very excited to come before the committee today to testify in very strong support of House Bill 5378, an act concerning self-funded multiple employer welfare arrangements and requiring a study of the feasibility establishing the Connecticut Option Program and MEWAs. This bill would legalize association health plans, which allows small businesses to pool their risk and purchase health insurance through a trade association or a chamber of commerce. And this really is a viable solution to really bridge the coverage gap in the small group market, as the speakers before and after me will attest. My role in this conversation today is simple. It's to be a subject matter expert, and today I want to focus on putting the voice of businesses forward. And that is why I brought a guest with me today from Bristol. I have accompanying me testifying, Shelley Bovey, who is the VP of HR for the Arthur G. Russell Company, again, based in Bristol. And Shelley's company story is really just a microcosm of what we're seeing in the small group market today. So I want to make sure that she has ample time to speak to you all, and I'll turn it over to Shelley.
Thank you. So AGR, Arthur G. Russell, is a small company run and owned business by Robert Ensminger and Jason Ensminger. It's a father and son duo. They're a very family-oriented company. We have about 102 employees. Health insurance is extremely important to both Bob and Jason, and to make sure that there's coverage for the employees and their families. We have changed insurance companies over the last 4 years, with our next negotiating period beginning in April. We change insurance companies so often to get the introductory rate, because we were always looking at an increase from the current company of at least 15 to 25%. By changing, we are usually able to stay in the 5 to 10% increase range. There are several setbacks to switching insurance companies so often, but we do it to try and maintain high quality benefits to retain our highly skilled workforce and attract skilled employees. But we are increasingly forced to raise deductibles and raise company and employee contributions. When premiums rise, we have to absorb the cost, which reduces the budget for innovation and expansion. Beyond the cost of insurance, there is administrative costs of constantly reevaluating plans every year, and to find a balance between cost and coverage. And also, it's very trying on our employees to have to change so often, because every plan, although we try and keep the same plan over and over again, there's always nuances to it that are different. We always run into people who are on certain medications that this insurance company rates at a different tier, or they have to fight to get that same medication after they've already fought for it previously, So just to put a little perspective into it, we have about 75 employees that are enrolled in our medical plan. The total cost of that is $1,930,000 a year. 70% of that the company covers, and the other 30% employees are responsible for. So that leaves the company at paying $1,351,000 a year. A family coverage is $230 a week. And yes, it is a week because we still pay weekly. But $230 a week for a family. So, that's $12,000 a year for a family to cover for their insurance. Also, I know that there was somebody else before that talked about the high deductible plans. That's one of the things that we have to do every year, is raise our deductibles in order to keep the cost of the insurance down. So right now, if you're a single person, the deductible is $8,000. If you're a family, it's $16,000. We are fortunate enough to work for an organization that is very concerned about this. So we do offer an HRA that covers the first percentage of that deductible should they need to use it. And with that, that's all I have.
And we're happy to take any questions.
Thank you both. Thank you for being here. Shelley, I wanted to ask, it sounds like your company is in a position where you have a full-time staffer, I don't know if that's yourself or if it's a team, that is able to go out and negotiate every year to find new insurance. Is that correct?
That's correct. We do have a broker that we've been working with for many, many years, and he's, been able to negotiate for us, but it's the constant changing of plans that's really taxing.
Yeah, constant changing of plans, and then you're saying you're working with the employees to try to make sure certain medications are covered. I mean, that's a lot. I mean, if the company was even smaller, that would even be more of a challenge. That's what we're trying to do with allowing businesses and nonprofits to pool together, is that there would be one fiduciary or a board of the plan doing that work, so that it's not every 20 person or 50 person employer doing that, because you basically need to hire a full-time person. The high deductible plans are really becoming a problem. That's great that your company offers an HSA, others don't. But when you think about someone that has a high deductible of $8,000 as a single and $16,000 as a family, without the HSA, people are acting like they're uninsured because they have to take that first $8,000 or $16,000 and pay out of pocket. So the data that we have seen over the years shows that people aren't going to the doctor. They're not doing their preventative care. They're showing up to work sick rather than going to the urgent care, their PCP, to get medication. And there's all kinds of consequences to that type of behavior. You're looking at longer term health issues down the road for your employee makeup. So the MEWA is designed to curb that high deductible plan. We are aligning our costs with the ACA, which that's directly written in the bill. I heard previous speakers say that there would be different costs for different businesses. That's not the case. That's all in here. It's a guaranteed issue. It's all the things. So it sounds like this type of plan would benefit a company like yours, and even move some of the resources that you're currently using in HR into other parts of the company, like innovation and expansion and hiring more people. So thank you for your testimony. Any questions? Representative Berry.
Thank you. Thank you both for being here. Grace, in your position, you talk to small businesses every day. What is the biggest concern you hear from them?
Sure. The biggest concern that we're hearing from small businesses is that their premiums are really skyrocketing. I work with chambers of commerce every single day, and I hear the same exact thing. Our premiums have really increased on the exchange, especially with the expiration of the enhanced premium tax credits at the federal level. This means that their premiums are going up hundreds, potentially even thousands of dollars, and that's forcing small businesses to cut in other essential areas, such as other benefits. It prevents them from hiring more staff and providing those tools of innovation that really make our small businesses so great. So this is a very urgent time, and I think association health plans really target a very specific market at a very urgent moment in time. And just for the record as well, I think we need to reframe our narrative about association health plans and recognize that this proposal really works in addition to the existing models of insurance coverage instead of, with the existence of association health plans, the ICHRAs will still exist, the exchange will still exist. Having MEWAs is just another option for small businesses to attract and retain employees and obtain high quality, affordable health care. And another thing as well, every single dollar under a MEWA has a purpose. It is codified in this bill that any surpluses would go towards paying down future premiums for those enrolled in this plan. So we really are taking into consideration the financial implications of introducing a MEWA in order for our small businesses to thrive.
Excellent, thank you. That being said, can you explain how a MEWA would work and how that would help small businesses?
Sure, and this is, something that I've talked about with many small businesses in order for them to really understand the fundamentals of a MEWA. So let's start with the components, right? I want to address what a MEWA trust is, because I think there's been a lot of confusion over that component of the plan. So in the most basic language, the MIWA Trust is the bank account that a sponsoring association sets up to pay the claims of those enrolled in the plan. And this is all going to come back full circle. So let's say we have a sponsoring association, a chamber of commerce, for example, and that chamber of commerce has about 30 member businesses who want to enroll in this plan. And to break it down even further, I use the example of, a credit union who may have 5 employees, and the problem kind of starts when they go to receive a quote from a carrier and realize that their premiums are too expensive, right? So if these businesses are, part of a chamber of commerce, then they can pool their risk, not going to a carrier as a single employer of 5, but a pooled group of maybe 100, 200 people, which will ultimately drive down the premiums at that group level. And I also want to emphasize too that the underwriting process does not occur at the employer member level. It occurs at the group level. So instead of one credit union being underwritten as a group of 5, now you have a pooled group who's being underwritten as a group of 100, 150. I think we can also think about that, pooled group as kind of like the equivalent to a mutual fund, right? If one person gets sick, it's not going to spike premiums for the rest of the individuals in that pooled group. So there's that. So when a sponsoring association establishes a MIWA trust, they will have a board of trustees of 5 people who are tasked with that fiduciary duty, meaning that they have to act in the best financial interest of their beneficiaries and provide them the highest possible quality coverage at the most affordable cost. So when the sponsoring association sets up this type of plan, basically the employer members will be underwritten by a carrier. There's also that aspect of working with a broker as well to kind of make sure all the parties are on the same page. When a claim is incurred, typically the sponsoring association will partner with a third-party administrator who will then process that claim and take the money out of that MIWA trust. So it kind of is a full circle loop, and I'm happy to clarify it further, but I do want to put it on the record that is how an association health plan would work.
Excellent, thank you. And I thank you for your advocacy for small businesses. And thank you, Shelley, for being here and telling your story.
Thank you.
Thank you.
Shelley, can I have you state your full name for the record?
Michelle Bove, B-O-V-E.
Thank you. I do want to address some of the myths that I keep hearing over and over again. This notion of cherry picking healthy people. When we have addressed in the bill that we would not do that. In fact, the bill says the opposite, that you're guaranteed issue. I was wondering if you can explain that, Grace.
Yeah, absolutely. So it is codified multiple times in the bill that you cannot discriminate on anyone based on any pre-existing conditions. And there's also language that ensures that the MIWA is compliant with all of the insurance statutes that are currently present. So all the statutes that are present in Chapter 38A. Actually, I do have the statute that specifically dictates that you cannot discriminate based on any pre-existing conditions, and that's Connecticut General Statute 38A-476, and essentially says any group health or individual health plans and insurance arrangements, which include a MIWA, cannot impose a pre-existing condition provision on any individual.
Thank you. And it sounds like Shelley's plan currently is a self-funded plan. She was saying that the cost is about $1.7 million a year, and the employees pay part and the employer pays part. A self-funded plan is the state employee plan that several of us that work for the state are on. The partnership plan is a self-funded plan. However, there's a lot of testimony that I keep hearing over and over again that we can't support a MIWA because it's not insurance. I don't know what that means because, if it says it's not insurance, but all these plans are self-funded that people support, what am I missing?
Sure. So the actual bill language says that the MIWA trust is not insurance. And I'm not going to speak what that language says because a bank account is not an insurance policy. A employer member would buy insurance through a trade association, and that's kind of the verbiage that we should be using, similar to how people obtain insurance through the exchange. Employer members are obtaining insurance through the sponsoring association, just to clarify.
Yeah, thank you. I think that's really helpful just to clarify because the goal is not to not offer an insurance product. And in fact, it seems like there's so much teeth behind this product saying even though you're self-funded, meaning it's only federally regulated, we, in addition, are going to have the Connecticut Insurance Department regulate it as well, correct?
Yes, there's a lot of consumer protections with this bill. There's specific separate sections that outline the role of CID in regulating these MIWAs. So if there's an issue with a plan enrollee, the enrollee can go to the insurance department and essentially file a complaint and use the process that way. The MIWA is also subject to regular examinations as well on a regular basis, and the plan will also have to foot the cost for that examination as well to ensure solvency, excuse me.
Thank you. This is really helpful. Senator Wong.
Thank you, Madam Chair. And Grace, good to see you. And we talked a lot about the technical aspects in regards to the MIWAs versus the Connecticut option. But I really wanted to talk to the small business owner, because you're the critical engine, as Representative Metzger mentioned earlier. So tell me, how does healthcare cost affect your ability to retain and attract employees? We talk about that a lot. As a former member of the Governor's Workforce Council, we talk about being able to attract and retain really strong employees, not being able to offer that benefit, health insurance. How does that impact your ability to retain and attract employees?
Well, I can't really answer to that because we have always offered medical benefits. So what the whole purpose of having a rich benefit plan is to attract and for our current employees to be able to have the coverage that they need. Like we were talking about before, one of the big concerns is if we go too high with our deductible rates, that people won't use the medical insurance. They won't be able to afford to go for their yearly visits and whatnot, get the care that they need. So that's why I know Representative Wood said an HSA. Our plan is an HRA, which just means that we fund an account. We fund so much of the deductible up front. So if they should need to use that deductible, because it's major medical deductible, then they'd have some relief there. But another point that I want to bring up really quickly, we are not a self-funded plan. We go through an insurance company, and that's the premiums that we pay. I don't know if that answered your question.
Well, obviously you made a commitment as a small business to kind of offer health benefits to kind of keep your best talent. Has that differential been able to keep you competitive in the marketplace that you're dealing with, not only within regionally and statewide, but nationally? How critical it is to be able to provide those benefits for competitiveness and marketplace competition?
I mean, I think it's very vital. The thing is in order to attract employees, a very rich benefits plan. I mean, when I'm talking about this right here is just our medical and vision. I mean, we offer a lot of other benefits that go along with this, such as long-term disability, short-term disability, and those are all company paid, and life insurance that is also company paid. And we really feel that offering these strong benefits does attract people.
Yeah, one final point. I mean, you mentioned you're not self-funded, so you retain a commercial vendor, Aetna or Cigna, to be able to manage your plan, even though you pay for it. I guess my question would be, would you trust a organization, despite their challenges of an Aetna or an Anthem, to run your program with their actuarial analysis, or would you trust a government-run single entity system?
I think I'd rather. That's very hard to answer because I don't know enough about a government-run entity. If you're talking about the Canadian versus, but I mean, I think that the organizations such as Chamber of Commerce, they work strictly for their members, and I feel like they would do their homework to make sure that whatever product they were putting out there that was going to be just as good as buying it through the carrier individually.
And Senator, if I can elaborate on Shelley's point, I think the broader message here is that businesses have to do right by their employees, and that includes taking care of them in the sense of providing very competitive health benefits. As Shelley has noted, a competitive benefit package is a very attractive tool to grow and retain the workforce, and I can't emphasize that enough in this discussion. So when we talk about, providing health benefits to small businesses, we're talking about, tiny businesses who have at least 2 employees, and we're seeing a huge coverage gap for those, especially in the 2 to 50 range. So that's what we're trying to accomplish here by closing the coverage gap and providing association health plans.
I appreciate that. Thank you. Thank you, Madam Chair.
Thank you. Thank you both for testifying.
Thank you.
Thank you.
Next, we have Scott Schweffel.
Chair Cabrera, Chair Wood, members of the Insurance and Real Estate Committee, good afternoon, and thank you for raising House Bill 5378. My name is Scott Schweffel. I live in West Hartford. I am a partner in a 3-attorney law firm also in West Hartford. I've held several leadership positions within the Connecticut Bar Association, including the House of Delegates, and last year I had the privilege of serving as the co-chair of the solo and small firm section of the association. One of our meetings last year occurred around the time that this committee was holding its hearing on House Bill 7079, which could have moved us towards association health plans. At our meeting, I encouraged members to submit written testimony in favor of that bill. What followed, however, was a lengthy discussion about the cost of health insurance for solos. One solo told us that her insurance premiums exceeded all of her other expenses, and each year the deductible increased while coverage decreased. Numerous solo practitioners explained that they won't hire employees simply because they cannot afford to shoulder the responsibility of another person's insurance. We have younger members that are solos that are still paying off law school loans. Representative Wood, you touched upon with the previous speaker with regards to the deductibles being so high. We have members that have health plans with deductibles so high that they avoid seeking medical care altogether because they simply can't afford to use the coverage that they are paying for. So I can speak anecdotally from my personal experience as well. My own firm, the cost of insurance has risen year after year. Each year we choose a plan with fewer benefits than the year before, and that's just simply to keep up with the premiums. When we meet with prospective employers, they always ask about health benefits, and in many cases, we simply can't afford to provide what they need, which in most cases is family coverage. Many of my clients themselves are small businesses, and this was touched upon by Senator Wang in his questions to the previous speaker. Like small firms, they can't attract workers because they can't offer basic coverage. I've had clients tell me that employees leave to work at big box stores, large national retail chains, and they're doing work that is beneath their education and their training, and they're doing it only because those employers are offering health insurance. Our association president, Emily Jean Quinto, she's going to address this committee later on this afternoon, and she's going to discuss the CBA's official position on the bill. From my perspective, however, my concern, though, is that the bill excludes solo practitioners that don't have any employees, along with many of the smallest businesses in our state. And these are people who need relief the most. From my perspective, I would urge that House Bill 5378 be amended to include single-person businesses so that solo practitioners don't have employees can access the benefits the bill intends to provide. Thank you for your time and attention.
Thank you very much. That is a very interesting point that you're raising regarding the solo practitioners. We do have some colleagues that are solo practitioners here in the legislature. We learned that most of the solo practitioners are female. Many are heads of households, raising children on their own. So there is a lot of, women that we're impacting when we are excluding, that from this bill. So we appreciate that and appreciate your testimony, your continued advocacy, and we'll keep on working to try to get this bill over the finish line.
Appreciate it. And I will also add a lot of these solo practitioners are also representing low-income clients too.
Thank you for that. Thank you. Next, we have Ed Schreiner.
Hi, good afternoon, Representative Wood and members of the Insurance and Real Estate Committee. My name is Edward Schreiner. I'm a registered pharmacist and Vice President of Network Development for Northeast Pharmacy Service Corporation. We currently provide business support services to 115 Connecticut pharmacies. I also serve as a network facilitator for CPESN New England, which is a clinically integrated network of independent community pharmacists offering advanced patient-centered care in coordination with physicians and health plans. I'm here today to speak in support of House Bill 5375, an act concerning recommendations of the Insurance and Real Estate Committee working groups. I'd like to specifically address Section 7, which establishes a sustainable payment pathway for pharmacist-provided patient care services. Last year, I had the privilege of serving on the bipartisan work group to study pharmacist compensation chaired by Representative Wood. And the work group's discussions reflected broad recognition of the value pharmacists bring to patient care and expressed significant support for creating a pathway to compensate pharmacist-provided patient care services. The group conducted a thorough review of pharmacist payment models and examined how other states implemented payment models for pharmacist-provided services and care. And during those discussions, I was able to share how CPS and pharmacies in numerous states successfully contract with payer partners to deliver and be compensated for that care. I strongly urge the committee to adopt proposal number 2 from the work group's final report. Proposal 2 does something straightforward and reasonable. It requires insurers to make their reimbursement processes and provider networks inclusive of licensed pharmacists for covered clinical services when those services are already covered by the plan. So we're not looking to expand coverage here. Importantly, this proposal does not mandate new coverage or set payment rates. Proposal number 2 preserves payer discretion in negotiating contract terms, pharmacist credentialing requirements, compensation rates, utilization management, and claims processing, which is consistent with existing practices, physician assistants, and APRNs. This ensures flexibility within the marketplace while creating a clear, lawful pathway for pharmacist compensation. What Proposal 2 does do is remove license type discrimination. If a service is covered when provided by another qualified provider and it falls within a pharmacist's legal scope of licensure, reimbursement cannot be denied solely because the provider is a pharmacist. Independent community pharmacies are among the most accessible healthcare providers in our state. We're trusted, clinically trained, and positioned to improve medication adherence, chronic disease management, and preventative care outcomes. As of late 2025, Connecticut remains one of only 6 states without an established pharmacist payment framework. House Bill 5375, under proposal number 2, would provide a balanced and practical solution. It creates opportunities without mandates, ensures fairness without overregulation, and allows Connecticut to fully leverage the expertise of pharmacies to help improve patient outcomes and to reduce overall healthcare costs. For these reasons, I respectfully urge you to support passage of House Bill 5375. Thank you for your consideration.
Thank you, Ed. And again, just wanted to reiterate how grateful we are for your time and support. Ed has been fantastic with the working group. We met all summer, fall, winter, and into this year. And Ed, we appreciate all the work that you're doing and look forward to getting this bill across the finish line.
Thank you very much.
See any other questions? Great. Thank you for joining us, Ed. Next, we have Marie Smith.
Good afternoon, members of the Insurance and Real Estate Committee. My name is Marie Smith. I'm a pharmacist and a professor at UConn School of Pharmacy. And also, like Ed, the previous speaker, was an appointed member of the work group to study pharmacist compensation that met last July through December. I'm here to comment on Bill number 5375, especially Section 7, that indicates the insurance commissioner shall conduct a study concerning various revisions to the insurance regulations regarding compensation of pharmacists. And as you heard before, we have had this work group for the past 6 months or so. It was authorized last year by the legislature under Public Act 25-167. And we studied the issues in depth, brought in experts around the country, issued our final report in January of 2026. And the recommended language of that states that that a health plan shall not deny reimbursement solely based on a provider's license type, especially when it's within the legal scope of a pharmacist's license under Chapter 400J in the Connecticut statutes, and otherwise it's a service that's eligible for reimbursement when provided by a physician, a nurse practitioner, or a physician assistant. Therefore, we do not believe that there's a need for another study. Rather, we would like to encourage the committee to look carefully at the language in the final report and to work with our proposed number 2 language going forward. As Ed mentioned, we now have approximately 44 to 46 states, depending on which report you look at, that do recognize pharmacists as providers of patient care services with corresponding payment. So we should not be proud of the fact that we are one of those lagging 4 states that do not pay pharmacists for such services. As an example, in Connecticut, the legislature in June of 23 passed a law saying that pharmacists could prescribe self-administered hormonal contraceptives in the manner of pills or patches. So here we are 2.5 years later, and that service is not being provided by pharmacists because there's no compensation for it. No payer is going to compensate pharmacists for the time that they are involved in that service. We do understand there's one mass merchandiser in Connecticut who's offering the service for a cash pay of $70. However, in talking to pharmacists who work there, no one is able to pay that or wants to pay that, that amount of money out of pocket. So in closing, we urge the Insurance Committee to move forward on the report that we posted in January with the proposed language that the group undertake a bill to pay pharmacists for patient care services that they're licensed to provide in Connecticut. Thank you.
Marie, thank you, and thank you for being a member of the working group. We are not going to be putting forward a study. We just were short time in getting the language written. So we will be putting forward the recommendations of the working group. I want to let everyone know that one of the things that we all learned was really how important the role of the pharmacist is in a person's health. Often the pharmacist is the only person in the healthcare spectrum of a person's care that sees the entire picture. So we want to make sure that we are properly compensating you for your time. Appreciate your testimony.
Great, thank you.
Next we have Tracy Lee.
If you can both state your names for the record.
Good afternoon, members of the Insurance and Real Estate Committee. My name is Tracy Lee, and I am a pharmacy student at the UConn School of Pharmacy.
Hi, my name is Emma Bourgeois, also a pharmacy student at UConn School of Pharmacy, and I'm here today to comment on House Bill 5375, Section 7, on the payment for pharmacist patient care services. I respectfully request that Section 7 be amended to reflect the 2025 Working Group's Proposal Number 2 language to simply ensure that insurers cannot deny reimbursement solely based on a pharmacist license type when the service is already covered and within our scope of practice. During my clinical rotations, I worked with the pharmacist to care for a patient who came to the pharmacy because she could not get a timely appointment with her primary care provider. We helped her adjust her inhaler technique, and when she returned to the pharmacy the following week, her breathing had visibly improved. However, none of that clinical care was reimbursed. Her insurance plan paid for the medication, but not for the pharmacist's expertise to train her so that the medication worked. Connecticut invests heavily in training pharmacists, but without a pathway for reimbursement, graduates like me face limited opportunities to sustainably practice here. With 46 other states paying for pharmacist services, I respectfully ask what will motivate recent graduates to stay and practice here. Payment for pharmacist clinical services will help ensure pharmacists can stay and build their careers here in Connecticut. At this time, I would like to turn it over to Tracy to continue our testimony.
As I prepare to enter practice, whether pharmacists are recognized and reimbursed for the clinical services we provide will strongly influence which state I choose to practice after graduation. It's difficult to justify staying in a state where those services are not reimbursed when neighboring states do. While working at CVS at the height of the pandemic, my pharmacists were overwhelmed with the number of vaccination appointments to the point where one pharmacist had to be scheduled solely to immunize. I heard their frustrations at the time of not being able to receive any compensation for their efforts. Even now, many patients are referred to pharmacies for routine vaccines because they can be provided same day, whereas primary care appointments may be scheduled months out. This accessibility translates into more timely care, lower overall healthcare costs, and better health outcomes. With Connecticut now being one of only 4 states that does not offer a clear pathway to pharmacist reimbursement, it risks not only limiting patient access to valuable services, but also losing new graduates and experienced pharmacists to states that better recognize and utilize their training. Reimbursing pharmacists for the care they are providing would leverage pharmacists as essential members of Connecticut's healthcare workforce and allow pharmacists to practice at the top of their license. Thank you for your time.
Thank you very much for your testimony. We appreciate you stepping out of your work to be here. Next, we have Richard Jenkins. In Richard's place, we have Marcy Webster.
Good afternoon, and thank you so much for having us. My name is Marcy Webster, and this is my daughter, Rachel Webster. And we're here on behalf of Bill HB 5374. Excited to just discuss and share with you about how we believe that everyone has the right to move. I moved to Connecticut in 1998 to attend college and stayed to become a high school music teacher and raise our family, and we're proud residents of Old Wethersfield. In 2022, my daughter Rachel was diagnosed with an aggressive and rare form of bone cancer, and during her year of treatment, including chemotherapy and proton radiation, she also underwent an above-the-knee amputation to stop the spread of cancer and save her life. And we had excellent care at Connecticut Children's, and I just wanted to say that from our oncologists to our nurses to even just the people who changed our bedding, we had excellent care. And again, we're proud to be from Connecticut, and I'm excited that Connecticut is interested in hearing our story today. So Rachel lost a lot in 2022, but she never lost her determination to return to a full and active life. Today she swims, plays wheelchair basketball, earns high honors in school, and loves singing and musical theater. And Hanger Clinic was an important part of Rachel's journey back to mobility. She was fitted for a walking prosthetic shortly after her amputation, and over the past few years has worked incredibly hard in physical therapy to regain her strength and independence. But what the committee and many others might not realize is that a walking prosthesis is designed for walking. It's not designed for running, hiking, biking, or many other activities that she takes part in a limited fashion in her gym class or in youth sports. If Rachel wants a prosthetic leg that will allow her to participate in those things, we must pay thousands of dollars out of pocket. To insurance companies, those devices are considered extras, but for Rachel and other kids and people like her, they're the difference between watching from the sidelines and being included. Right now, she cannot fully participate in gym. Her teachers actually recently purchased her a rolling stool to help her move more easily, which is generous and compassionate and thoughtful, but isn't a long-term solution and doesn't reflect the spirit of equal access that our laws promise. And it doesn't support Rachel's goal to be a regular kid who can play and run and move alongside her classmates. We know that athletic prosthetic devices are not luxury items, they're adaptive medical equipment. And they allow children and adults with limb loss to access the same opportunities as their peers. And these opportunities build confidence, physical health, connections, and independence. And we believe that requiring insurance companies for activity-specific prosthetic devices is about equality and access. And it's about giving children who've already endured more than most of us can imagine the chance to simply be kids. You go, girl.
When I was 10, I lost my leg, but now I'm 14 in 8th grade. And I walk into school with my walking prosthetic, just like everybody else walks in, but there's a real barrier in my school day to doing the same things as my classmates do. It can be emotionally difficult for young people to watch other kids participate fully while you're limited, not because you don't want to try, but because you don't have the equipment you need. Looking different is already a challenge. Being unable to participate only adds to that feeling of separation. Having access to activity-specific prosthetics would help students like me feel more connected to our peers and have more confidence in ourselves. I know I'm not alone in this, and it's very important to me to be able to independently try new activities and explore new opportunities. But right now, with only a walking prosthetic, that's not often possible. I'm asking you to make sure students like me have the tools we need, not just to walk among our peers, but to fully participate in our schools and our communities. Thank you for your time.
Thank you both for being here. Rachel, it's so good to see you. Many of us have followed your journey, which you have really courageously shared with the public. You've been on the news often, and we've seen you over the last 4 years, so it's just wonderful to see you here testifying. Can you tell us what some of the prosthetics that would be beneficial to you and what that would mean in terms of participation?
Gym class in school, it involves everything: running, jumping, being able to move around obstacles, and a walking prosthetic just can't accomplish that. Some of the tools would be a running prosthetic, and also if I wanted to be interested in other activities like competitive swimming, sometimes that can require a swimming prosthesis, and there's even prostheses that can be used for hiking as well. So having something like a running prosthesis would help me to be more active in gym class, and also using other tools if I wanted to explore other sports or recreational activities.
Yeah, because so right now it sounds like you're limited in that area. Like, are you really sitting on the sides while people are, participating in gym?
It's really awkward. I mean, my peers understand that I'm limited, but it's like everybody else is running and I'm walking, and we're just all looking at each other, and I'm like, oh, you're running, I'm walking. This is fine, apparently.
Yeah, we want to make sure that you can beat them in races, right?
Yeah.
No, this was really wonderful. We appreciate you guys sharing your story, and it was great to have you up here. Thank you for waiting so long.
Thank you. And we do have someone from the Hanger Clinic coming to give you more of that legislative information a little bit later, probably in hour 12,000. So Rachel and I both had a snow day today, but we learned a lot sitting in the chamber, and we're super impressed with just the time that you take, and we appreciate you.
Yeah, thank you guys. Take care. Next, we have Tom Mangello. Is he here? Nope. Amanda Gunthal.
Hi, I'm here. Can you hear me okay?
Yes.
Super. Should I just get started? Go?
Yep, you're on.
Okay, good. Good afternoon, senators, representatives, and distinguished members of the Insurance Committee. My name is Amanda Gunthal, and I currently serve as president of the Connecticut Association of Ambulatory Surgery Centers, representing all 61 freestanding surgery centers in the state. Thank you for the opportunity to testify in support of Senate Bill 341, which seeks to shorten the time period for which insurance carriers may seek return of payments from providers and requires establishment of an electronic notification mechanism in the appeal process. As I'm sure many of you know, ASCs play a critical role in Connecticut's healthcare delivery system. We provide high-quality, cost-effective surgical care to thousands of patients each year at significantly lower costs than hospital-based settings. In order for us to do this, we rely on fair, transparent, and timely reimbursement practices. In recent years, insurers have increasingly utilized third-party auditing groups to retrospectively review and recoup payments that were previously authorized and paid. These third parties often challenge clinical decisions. Has anyone here ever had a joint replacement or known someone who has had a joint replacement? That's probably most of us. I have a very simple, relevant example to illustrate. A total hip replacement includes a two-component implant. To simplify, a ball and a socket. During one of these post-payment audits, the payer decided that only half of the implant kit would be approved and demanded a refund. These post-payment audits create serious operational and financial challenges for surgery centers. In many cases, they occur long after services have been rendered and paid. The funds are recouped by offsetting payments from future claims. Providers are unable to directly contact third-party reviewers to dispute findings. Clinical determinations are second-guessed by entities with no direct involvement in patient care. Administrative burdens and legal costs increase significantly, further diverting resources away from our patients. Senate Bill 341 represents an important step towards addressing these concerns. It promotes greater predictability and financial stability for providers and creates an accessible mechanism for providers to challenge inappropriate audit findings. We strongly support the intent of this bill. I'd like to respectfully note that we have included several recommendations with our written testimony to further strengthen the bill and ensure that it provides meaningful due process protection and clarity in its implementation. We look forward to working with the committee and stakeholders to refine and advance this important legislation. Thank you for the opportunity to speak today and submit testimony in support of SB 341. Happy to answer any questions.
Thank you, Amanda. And, okay, great. I'm just making sure I'm looking at the correct bill. I don't see any questions. Thank you so much for being here. Next, we have Joanne Breen.
Good afternoon. My name is Joanne Breen, and I am a past president of Connecticut Realtors. And I appreciate the opportunity to submit testimony before the Insurance and Real Estate Committee. CTR represents 18,000 members who are selling real estate and leasing real estate throughout the state of Connecticut. We strongly support SB 340, which is an act concerning continuing real estate education requirements, public marketing of certain real estate listings, and revising the title of a real estate salesperson to real estate agent. Section 1 of this bill would reduce the continuing education requirements for real estate elective courses from 3 hours to 2 hours. 2 hours are frequently sufficient to cover an elective topic. This change does not affect the total number of hours that would be required for license renewal, nor would it change the approved course topics or the 3-hour minimum requirement for the mandatory law course for license renewal. Sections 2 through 31 replace the term real estate salesperson with real estate agent throughout licensing-related statutes and related statute areas. CTR believes that the word agent more accurately describes what we do because it encompasses things like consulting, buyer representation, and leasing properties. The Department of Consumer Protection has no objections to Sections 1 through 31 and has requested that the effective date for Sections 2 through 31 be changed to January 1st, 2027. And we support that. Section 32 was precipitated by calls that we've received from consumers who are in this very tight inventory market in real estate, heartbroken over the fact that they find out that a house has sold that was marketed only to maybe a small section of the real estate population or real estate agents, and they never even knew it was available. This section would establish a consumer disclosure process requiring informed consent from sellers or landlords when a residential property will not be publicly marketed for sale or lease. CTR recognizes that there are circumstances when limited or private marketing better suits the needs of a seller, for whether it be security reasons or privacy reasons. This would not take away their right to decide to do that, but rather it would fully disclose to them what they might be forfeiting by not putting their property on the open market. Things such as not just a better price for the house, but they could be forfeiting terms that would have been most beneficial to them in the end. The provision requires that listed residential properties be publicly marketed and accessible unless the seller or landlord explicitly opts out using a plain language form that we call the seller-landlord opt-out of public marketing form. This statutory form safeguards against inadvertent amendments that could undermine the intended consumer disclosure benefit.
Your 3 minutes are up. If you could please summarize.
In today's constrained market, it's more important than ever that we have as much of an open market as possible so that people with vouchers and buyers that have been waiting a long time for properties are not cut out of an opportunity. So we hope that you will take this into consideration, and thank you for your time.
Thank you, Joanne. So right now, people are choosing not to list publicly. And can you let us know why that is?
Well, I think sometimes it's done out of a lack of knowledge, truly. You know, I get this all the time. I've been in real estate for many years. I have buyer clients that have bought and sold with me over those period of years. They trust me completely. So when I go to list their property, very often they'll say to me, well, do you have anyone for the house? And if you do, that's great. We'd rather just have you handle everything because we trust you and we know you. And in all honesty, I have to explain to them, I feel that it's my fiduciary responsibility to make them understand that's all well and good. We'll want to let my buyer or buyers in my company know that the house is available. But if you don't expose it to the whole market, the general market, that seller may be losing out on not just a better price, but terms that would be most agreeable to them. I've had situations where sellers thought maybe, they'll tell me the neighbor down the street's interested in the property. Why don't you just get a hold of him? And then if they want to pay this price, that works for us. We'll just take that and move on and not have the hassle of a lot of people coming through the house. But in all honesty, I've actually done this where when I explain to them what they might be losing and we put it on the open market, that neighbor still has a shot at it. But I just had a case where the neighbor ended up paying $35,000 more for the house because he was competing with other buyers for that property. And the terms that he offered the seller were far better than what he initially had suggested. So sellers lose out by not publicly marketing a home, and buyers lose out because they never even knew it was there. We just want to be sure when people make that decision, they understand what they might be losing by not publicly marketing. So it's just a full disclosure.
Yep. So you're allowing the practice to continue basically with this
Absolutely.
legislation. You're just saying, let's just put an extra layer of disclosure so that these sellers know what they're getting into.
Exactly. Disclosure, I think, is always best in any case.
And do you, is there specific language of what would be in the disclosure?
It really just says that they understand that by privately marketing their home, they may be losing out on perhaps a better price or better terms for the property.
Okay, great.
It's very basic.
Yeah, no, it makes sense. And I think the classes going, having just gone through this myself, the classes going to 2 hours, I think makes perfect sense. Where sometimes we're just hanging out, twiddling our thumbs.
We are, thank you. And sometimes there are classes you want to take and you don't have time. This way you can get more classes in.
Yeah, there's definitely a lot of interesting stuff out there.
Topics.
And then thank you for the change from salesperson to agent. I mean, the role of an agent in this day and age, I feel like is getting broader and more expansive, and we're doing a ton more, for our clients. So that was, I think, a small but necessary, impactful tweak to the statute. So
Yes.
all of that made sense.
We appreciate your agreeing with us on that. Of course, you know how much we do, and that consulting is such a huge part of our business. It's not just sales.
Yeah.
Yeah.
Well, thank you very much for
Thank you.
for your testimony. Okay, next we have Atiq Mirza.
Hi, this is Atiq Mirza. So I hope you can hear me.
Yes, I can.
Perfect. So, Madam President, Representative Wood, and senators and other representatives, along with distinguished members of the Insurance and Real Estate Committee, thank you so much for the opportunity to testify on Senate Bill 342. I am here today as the president of Hartford County Medical Association in strong support of Section 4 of the bill to prohibit health insurance from using artificial intelligence or algorithmic tools to automatically downcode or deny claims without review by a clinical peer. At its core, this provision is about fairness, transparency, and preserving access to care for our patients. Across Connecticut, physicians are experiencing a growing pattern of automated claim reductions, particularly involving higher-level evaluations and management services provided to the patients. These are not minor clerical adjustments. They are reductions applied at the front end of the claim processing, often without an individualized clinical review. When an insurer automatically reduces a claim through an algorithmic way, the payment is cut immediately. The burden then shifts entirely to the physician to challenge that decision, requiring additional documentation, staff time, and prolonged appeals process simply to be paid for work already performed. This fundamentally alters the claim process. Instead of insurers identifying and substantiating suspected billing concerns or errors, physicians must prove that the care they delivered was appropriately coded. Equally troubling is the lack of transparency. Physicians are not told how these algorithmic determinations are made, what benchmarks are used, how frequently downcoding occurs, or whether certain specialties are disproportionately affected. Without clear standards of meaningful disclosure, there is no way to evaluate whether these reductions are clinically justified or systemically applied. There is also a contractual issue at stake. Physicians and insurers enter into agreements that specify reimbursement rates for defined services. When payment is routinely reduced through automated tools rather than individualized clinical review, the negotiated terms of those contracts are effectively bypassed. Payments should be modified only when there is a documented, patient-specific justification, not because an arbitrary software model flags a claim. The operational impact on practice is also substantial. Administrative teams must dedicate hours to appeals, documentation resubmission, and follow-ups. For many independent and small practices operating on narrow margins, appealing every improper reduction is simply not feasible.
Your 3
So-
minutes are up. If you could please summarize.
All right. So in summary, I'm here to support the Section 4 of Bill 342 so that we can preserve the patient care, keep the physicians in Connecticut, because this provision will definitely, if we don't pass this, smaller practices are going to merge into the bigger practices. Physicians are going to retire. And in this state, we're already facing a high concern of not able to find physicians for our, to provide the patient care. If we don't allow this, we will have less and less physicians to take care of our patients. Thank you very much for your time and opportunity for giving this testimony.
Thank you, Dr. Mirza. We did have an in-depth discussion with one of your colleagues on this and asked a ton of questions. So I think I'm good for now, but I appreciate you waiting and spending the time with us this afternoon to share your testimony.
Thank you very much.
Next, we have Dr. Sam Abeldaney.
Good afternoon, Representative Wood and members of the Insurance and Real Estate Committee. Thank you so much for the opportunity to speak today. I'm Sam Abdullahi. I'm a hospital pharmacist, and I currently serve on the boards of the Connecticut Society of Health System Pharmacists and also the Connecticut Pharmacists Association. I'm here today, just like my colleague Ed and Marie, to express my strong support of incorporating the working group recommendation into HB 5375, Section 7, which would finally establish reimbursement pathway for pharmacist-provided patient care services in the state. A few things I just want to highlight that may not have been mentioned before. I want to start and begin with what I believe the most important point. Our ultimate goal is to improve patient access to care and enhance clinical outcomes. With that in mind and with your leadership, the working group really completed a comprehensive review. We looked at national models, looked at the reimbursement structures, and we produce a clear, actionable recommendations. All we need now is implementation. The second point I want to make that the recommendation do not change the scope of pharmacy practice. Everything the pharmacist would deliver, immunization, HIV prevention through either pre-exposure or post-exposure prophylaxis, prescribing hormonal contraceptive, is already allowed under current Connecticut law. Pharmacists can safely take on all those clinical decisions within existing our scope of practice, allowing physician and advanced practice provider to focus their time on more complex patients. This is the team-based approach, and that's a model used in most states across the country. The third point I want to make that the evidence for pharmacists provide care is truly overwhelming. We have decades of research demonstrating the value in integrating pharmacists in patient care teams. We see better diabetes, hypertension, and asthma control, improved medication adherence, fewer emergency visits and hospitalization, and more importantly, or equally important, lower total cost of care. Finally, I think you heard before, we are one of 4 states left. So this is get us in line with all the other states in the country. We are an outlier today. So in closing, pharmacists are among the most trusted and accessible healthcare professionals. This bill will provide us the ability to be reimbursed for delivering clinical services that we already trained, licensed, and authorized to do. And that pathway will expand access, strengthen care, and improve patient outcomes. For those reasons, I urge you to adopt the working group recommendations in Section 7 of HB 5375. And again, I would like to thank you so much for your leadership during the working group meetings. Thank you.
Thank you, Dr. Abdelghany, and thank you for your participation. You were a very active and helpful member of the working group. Definitely, we will be having the language number 2 as part of that working group be coming out of the committee, and we'll make sure that you guys get a heads up on that before we are able to get that out. So appreciate your work.
Thank you so much.
No other questions. Thank you. Next up, we have Dr. Reinhard Cage.
Representative Wood and distinguished members of the Insurance and Real Estate Committee. My name is Dr. Reinhard Kage, and I'm a practicing immunologist in Manchester, Connecticut, and I'm here to testify in strong support of the downcoding prohibitions in Senate Bill 342. My spouse is a board-certified rheumatologist, and together we run a small practice which is fully independent for the last 25 years in Manchester. We are not owned by any hospital system or private equity. We are simply trying to take care for our patients in the community we serve. Automatic downcoding is threatening the viability of our practice. The largest insurer in the state, Anthem, is downcoding more than half of our level 4 and 5 visits. For our practice, that represents approximately 1.5 full-time equivalent staff member salaries per year. As we treat patients with complex autoimmune diseases and multiple comorbidities, our visits are often lengthy and medically complex. The levels we bill accurately reflect the time and decision-making required to take care of these patients. Due to that, we can keep them working and keep them in the community and prevent them from going into public assistance. We are unable to appeal the claims that are downcoded simply because it would cost us more in staffing and administrative expense to fight these downcoded claims. As physicians, we cannot take time away from patient care to appeal these claims. The system is structured so that small practices are forced to absorb these losses. Downcoding is done automatically using unpublished algorithmic tools without medical record review or without transparency. We have been audited in the past and found that our claims were billed appropriately. We're not billing improperly or upcode, and that was confirmed by Anthem in their audit. However, we continue to be targeted by systemic downcoding of claims that threaten the viability of our practice. This is, as we heard, not just happening to us. It happens all across Connecticut, and insurers are using algorithmic methods to reduce payment, knowing many practices like ours cannot afford to appeal. If automatic downcoding is allowed to continue, more practices will close and sell. Ultimately, that leads to suffering of patients as their access to community-based care will be disappearing and patients will be forced into longer wait times as part of larger healthcare systems. I urge you to pass the downcoding prohibitions contained in Senate Bill 342 and protect independent practices and patients we serve. I also want to bring up that this issue has been litigated 15 or so years ago, where Cigna and Aetna eventually settled in promising to not do downcoding without a record review anymore, and apparently that is done again. Thank you for your time, and I'd be happy to answer any questions.
Thank you, Doctor. We appreciate you being here. Do you find that like you're spending a lot of hours regarding an appeals process or dealing with downcoding?
We do. When we appeal, we spend a lot of time with that. We would have to appeal all the claims that we would have. We would have to employ another person to do that. We just are timely unable to do that.
Okay. And we did hear from previous speakers that they felt that the smaller practices were being targeted over the larger. Is it just, is that something you think is going on, or do you think it's just more impactful on the smaller?
I think that we are probably targeted because we are a smaller practice that deals with very complex patients, and Anthem knows that we are not able to fight these claims. I think that I'm very confident that that's the case.
Thank you. That's very helpful. Thank you for testifying today.
Thank you.
Next, we have Simon Allentuck.
Good afternoon, Senator Cabrera, Representative Wood, and distinguished members of the Insurance and Real Estate Committee. My name is Simon Allentuck. I'm the General Counsel for NEMS, a private Connecticut emergency physician group. I'm testifying in support of the prohibition on automatic algorithmic and now AI downcoding of medical charges located in Section 4B of SB 342. As you heard from the prior speaker, payers have used downcoding to reduce payments to clinicians for decades. Most recently, payers like United, Cigna, and Anthem started to routinely deny large numbers of claims and eventually, following appeal, agree to pay them if they are downcoded. Payers create long delays before claims are paid and then pay clinicians less money for their medical services. Aetna doesn't even bother to deny claims. It just automatically downcodes them without medical records. This is downcoding based on bills, not medical records, for the most part. There is no mystery about how to code a claim. There are well-known CPT guidelines that originally applied. The emergency physicians I work for use a billing company which codes about 12 million ED visits per year. Payers like United use initial denials to force downcodes. 83% of the United bills we submit are initially denied. By contrast, Anthem only initially denies 20%. Historically, payers denied 10% of all claims. These bills are eventually downcoded and paid following an appeal. This is for the same clinicians at the same hospital providing the same medical services. Why does this happen? Delay in payment and automatic downcoding mean more profits for the insurance industry while simultaneously creating additional costs for clinicians and unnecessary stress for patients. Medicare, by contrast, doesn't downcode. It performs audits which show that our coding was appropriate. Downcoding is a financial strategy for payers. Downcoding is not new. Starting in 1999, class actions were filed around the country by clinicians and patients against Aetna, Cigna, Anthem, United, and others alleging, among other bad practices, illegal downcoding. These were collected in a single multi-district litigation and settled. The court ordered settlement prohibited automatic or algorithmic downcoding for a period of 4 years. The prior speaker mentioned this. Downcoding violates the Connecticut Unfair Insurance Practice Act and ERISA. However, these statutes do not contain an explicit prohibition. Section 4 would remedy that problem. While I'm sure you want insurers to pay clinicians the right amount, you should care about this issue because it hurts Connecticut citizens. Payers deny claims as part of the downcoding process. Sick and often anxious patients receive an explanation of benefits from a payer denying their claim. This EOB is often just part of a mountain of medical bills. No patient wants to be in the middle between recalcitrant payers and unpaid clinicians at the same time as the patient deals with a serious medical issue. A system that scares patients away from getting the necessary medical care using proper denials is a bad system. Connecticut needs strong and clear rules like Section 4 of SB 342 to stop payers' ongoing and abusive practices like wrongful denials and
3
downcoding.
minutes are up. Please summarize.
Thank you very much for allowing me to testify.
Thank you. Dr. Allentuck, did you have any final remarks? Did you finish your testimony?
I did.
Okay, great. Thank you very much for your time today.
Thank you.
Next, we have Rachel Diamond. And we're wondering if you brought any product with you.
I would love to have brought some
product
today.
It's happy hour somewhere.
Thank you to the Insurance and Real Estate Committee for having me here today. Madam Chair, Representative Wood, Chair Cabrera, Ranking Members Wong and Pavlak Diamato. My name is Rachel Diamond, and I am the Executive Director of the Connecticut Brewers Guild. I also have a home base at Broken Symmetry Brewery in Bethel, Connecticut, where I am the head of brand development. We are members of both the Connecticut Brewers Guild and the Connecticut Restaurant and Hospitality Association, proudly. And I am humbled and honored here to speak to you today on behalf of Connecticut's 100 breweries. In 2019, our guild actually proposed association health plans that could help our breweries obtain easily accessible and affordable health care. We had overwhelming support then with 50 co-sponsors here in Hartford, and we are truly grateful that you have kept the torch alive and have seen the merit in allowing all associations to benefit from the access to reliable and affordable health care. I have listened in the past few years to other trade organizations discuss the importance of keeping costs of healthcare low for small businesses, the importance of enticing and retaining skilled labor here in Connecticut, and these are all very valid points. Small businesses are the backbone of our state, and finding ways to keep costs low and providing a better workforce is incredibly important, keeps our industry growth moving, and that is wonderful. However, today I'd like to discuss something a little bit more personal. My brewery employs about 20 people. Being a job creator is something that we are incredibly proud of. We are a very small brewery in comparison to other breweries in the state. These employees are the reason that we exist. They come in every day with positivity, creativity, energy, commitment, and dedication. And we are not unique. Every brewery in Connecticut feels the exact same way about their staff. Without their high level of care, we would not be nearly as successful. Obviously, beer is a business where you get to make a lot of people happy, a lot. We see smiling faces more than other industries, but breweries truly abide by their belief in community, local and far-reaching. I know here in Connecticut, our breweries have raised money, a collective $3 million last year, for charities. Connecticut Veterans Programs, Local Food Bank, Yale Children's Hospital, fundraise for critical causes like leukemia and cancer research. We've even helped local families who've lost their homes in fires, and even thousands of dollars to the International Rescue Committee to provide medical help for children affected and displaced by global humanitarian crises. Our owner and brewer at Broken Symmetry, Chris Sanzini, says beer is family. Our Connecticut breweries live and breathe that motto. It goes beyond how we feel about our employees and our patrons and applies to how we feel about each other. The brewing industry in this state is filled with the smartest, kindest, and warmest people. We help fellow craft breweries with whatever they need. We even send our customers to other breweries. So the idea that we need to care for the community and for others is firmly established within our industry. Caring and service to others is a large part of what we do. Our employees
Your 3
have waited
minutes is up. Please summarize.
I've only have one sentence left. Our employees have waited patiently for us to provide the care that we preach. Please help our small businesses, our little community oases, to strive to be examples of what industry cooperation and care could be, and put us in a position to practice what we preach and care for our workers in return. So we fully support House Bill 5378, and thank you for everything you've done to get us this far. I will also add that I lived in the UK. I had my oldest daughter when I was there on the NHS, so if you have any questions about national insurance, I can answer those.
Thank you very much. Can I ask our staff in the room to try to get us on the correct CTM? Okay, good. Thank you. We have the Commerce Committee going on in the background. Commerce and this issue, I think, are tied. So
I
it's
was
fitting.
only looking at your pretty face.
Well, I want to thank you. We are continuing to carry the torch for businesses like yours and others, because you are right. The small businesses in our state really are the backbone of the state. You're sponsoring all the teams and you're doing all the gift certificates for the fundraisers in the community. So we know how much you guys are doing. We know how much healthcare costs are driving up, you know, your cost of doing business, and we want to provide a solution for you. We think this is a great solution. I'm glad you're on the team. You've always been there, and hopefully we can get this over the finish line.
Yeah, I mean, every single employee costs about $1,000 a month for us to insure. If you could break that down in beers at $8 a beer, that's a lot of beers to sell just to be able to pay for health insurance. And we would really love to do it. And collectively, you know, if we pooled all of our employees together, the way that we pool together for other causes, we could really take care of them in a way that we are unable to now.
Yeah, and I think the industry overall, I mean, there's a lot of outside pressures. People are drinking less, shockingly. I don't understand that, but they're drinking less, these younger kids. And
that's a different committee. We can solve those problems later.
But there's other costs, and the fact that your membership group that you belong to has just expanded to include, you know, hotels and other hospitality is a very sign of the reason everyone needs to band together to pool their risk in order to provide more bang for their buck. So
absolutely
appreciate your advocacy, and I don't see any other questions. Thank you.
If I could just say,
sure.
AMIWA in particular has fixed payments every month, and I just think that that's something that we should add. A predictable payment for any small business is so much more helpful than, you know, raising and lowering throughout the year based on what your staff is going through. If you're putting into an account the same amount every month, it's super important for small businesses to be able to budget that way.
Yeah, that's the goal of this. It really helps you plan. It puts more stability. You can invest in other things, and that way you can weather with 20 people. I mean, any life incident is going to affect, you know, how you cover people.
Yeah.
So we want to mitigate that with the MIWA.
Cool.
Great. Thank you for your time.
Thank you.
Great. Next we have Hannah. Next we have Hannah Hussey.
Good afternoon, Co-Chair Wood, Co-Chair Cabrera, and esteemed members of the Insurance and Real Estate Committee. My name is Hannah Hussey, and I am a staff attorney at GLBTQ Legal Advocates and Defenders, GLAD Law. We are New England's leading legal rights organization dedicated to ensuring equality for LGBTQ people and people living with HIV. Thank you for this opportunity to testify on HB 5374. I am here to respectfully urge this committee to 1, take action to update the private infertility insurance mandate, and 2, preserve access to hormone prescriptions. Turning first to the issue of infertility insurance, access to fertility treatments to build a family is critically important. However, Connecticut's fertility insurance law does not reflect the current medical standard of care as articulated by the American Society of Reproductive Medicine. This gap in access is especially burdensome for LGBTQ individuals and couples who, like everyone, aspire to create loving families and who are left unprotected. As a result, LGBTQ and single people who are paying for coverage can be excluded from care or face additional financial burdens. Our suggested update, which we'll include in our written testimony, would be an incremental step forward. Updating the insurance coverage definition for fertility treatment will alleviate economic burdens, promote early medically appropriate intervention, and can even lower long-term healthcare costs. This bill would also bring Connecticut into closer alignment with several other states that have updated their fertility insurance laws to reflect the current standard of care. And it's not just states. In 2024, the Department of Veterans Affairs expanded their IVF coverage policy to include LGBTQ couples and allow for the use of donor gametes. Law urges this committee to amend HB 5374, Section 4, from a study to updating our state law. Secondly, on the issue of coverage for hormone medications, we're also asking to amend the same section of the bill from a study to language that would require insurers to cover a supply of up to 12 months of prescribed hormone medications. Our recommended language will again be included in our written testimony. Washington passed similar language into law last year with bipartisan support. The proposal, I want to be clear, would not require insurers to cover new medications. It would not limit providers in their discretion to prescribe amounts of medication that they deem clinically appropriate, and it explicitly provides for compliance with controlled substance laws. This step is necessary to ensure continuity of treatment in an increasingly turbulent political landscape. While prescriptions may permit patients to pick up many months of medication refills at one time, they often have to pay out of pocket to do so, with insurers covering costs only if they pick up medications more slowly over time. For some patients and families, these costs are simply out of reach. This leaves patients vulnerable in the event of an interruption to their access to medically necessary medications. Thank you for your time.
Great.
Thank you for your testimony.
Why do I hear? Sorry, we're just trying to, okay, that's better. I want to let you know, Hannah, that at the beginning of the hearing, I did do a statement basically saying that a lot of our bills didn't come out fully drafted, unfortunately. So there's a lot of study language in there. So we will be making sure that the full language is in there, and we apologize. We're short with time. But I don't see any questions, so thank you very much for your testimony.
Thank you for your work.
Christian Damanana. So sorry.
Thank you, Representative Wood. Good afternoon, Representative Senator Cabrera, members of the committee. My name is Christian Damiana, and I lead the Connecticut Parity Coalition, a group of 20 statewide organizations representing clinicians, patients, and advocates united around making sure that when Connecticut law says mental health care must be covered the same as physical health care, that promise is actually kept. I'm here today to speak on two sets of bills. First, the clawbacks, and second, SB 342. I've submitted detailed written testimony on both, and I would encourage the committee to read it, particularly our provision by provision comparison of the two clawback bills you're considering, as well as the governor's bill on that topic. Clawbacks are an important issue. What happens is a therapist sees a patient, the insurer authorizes a visit, the insurer pays a claim, and then months later, sometimes more than a year later, that same insurer sends a letter demanding the money back, often because of the insurer's own administrative error. Connecticut currently allows this for up to 18 months, and that's one of the longest recoupment windows in the country. For a solo practitioner or a small behavioral health practice that's part of our coalition, just one of these demands can be financially devastating, and they're not rare. The Psychological Association survey found 68% of psychologists in our state have experienced a clawback, and more than half of those came over a year after this service was rendered. You don't need me to tell you what that does to a provider's willingness to stay on insurance panels, and we all know when providers leave networks, patients lose access to care. So we're really glad this has been an issue that the committee's been working on for several years now. There are three bills before you that would shorten the window and add procedural protections. We support all three, but no single bill checks every box. So our written testimony lays out a detailed comparison and proposes amendments to HB 5377, which we believe to be the strongest, to make it a little bit broader and combine the best elements of the governor's bill. So I would encourage you to look at that closely, and we'd love to continue conversations on that. On SB 342, we strongly support sections 4, 6, and 7. Section 4 goes after something that should trouble every member of this committee, which is insurers using AI and automated algorithms to downcode or deny behavioral health claims, with no human being ever reviewing the decision. This section doesn't prohibit downcoding. It just says a machine cannot override a clinician's judgment without a clinical peer ever looking at it. That shouldn't be controversial. And from a parity standpoint, if these tools are systematically reducing complexity codes for mental health while rubber stamping the same codes for medical visits, that is discriminatory. It is a parity violation. And so Section 4 is a critical safeguard. Sections 6 and 7 establish a rebuttable presumption of medical necessity for services ordered by a carrier's top-tier providers. The logic here is insurers build networks specifically to identify their best clinicians. Having done that, it's contradictory for those same insurers to then second-guess every treatment decision that those providers make. These sections also bring fairness to the appeals process with independent reviewers, full consideration of evidence, and critically, continuation of treatment while an expedited appeal is pending. A patient in the middle of substance use treatment or psychiatric stabilization should not have their care cut off while paperwork is being shuffled. We also urge the committee to consider requiring carriers to use medical necessity criteria consistent with generally accepted standards of care as recognized by nonprofit clinical specialty organizations. Connecticut already requires this for children's behavioral health, and there's no good reason why it shouldn't apply to adults also. Our written testimony details this recommendation and model legislation behind it. I'll close with this. Clawbacks, algorithmic denials, opaque utilization review are all different symptoms of the same disease. There are insurance practices that are intended to create barriers to behavioral health care that would never be tolerated on the medical and surgical side. That is exactly the disparity our parity laws seek to prevent. So the coalition urges this committee to advance strong clawback reform and also move SB 342 forward. Thank you.
Thank you, Christian. I don't see any questions, so we will go to the next speaker. We appreciate your time. Next, we have Samuel Hahn.
Madam Chairman, distinguished committee members, thank you for allowing me to testify today on the important issue of third-party payer reimbursement practices in SB 342. This bill contains many provisions, and I'd like to restrict my testimony to the downcoding and denial issue for the sake of time. My name is Samuel Hahn. I'm a practicing interventional cardiologist in Connecticut. I am enormously grateful for the depth of engagement your committee has had with us as Connecticut physicians, as evidenced by the hearings today. My comments really echo the testimony that you've already heard today, so I'll keep my remarks very brief. Individual medical providers, as well as healthcare systems, are faced with innumerable challenges in today's environment. Reimbursement delays, decreases, and denials are common tactics we experience on a daily basis. This is not to say there are never incorrect or inappropriate submissions for medical services, but policies and procedures that result in wholesale systematic denials or reductions using automated systems threaten medical practices as ongoing concerns. One of the most alarming aspects of the problem at hand is the complete opaqueness with which insurance companies are conducting their business. We have no insight as to what standards or procedures are being applied. And ultimately, it is our patients and our community that suffer as needed medical procedures are either delayed or denied, and physician practices are either consolidated or closed completely. Obviously, medical necessity reviews are necessary to ensure the integrity of the healthcare system, but this provision, as outlined in SB 342, is a necessary step towards protecting us from completely opaque and systematic procedures that unfairly and unjustly undermine medical practices throughout our state. Thank you very much.
Thank you, Dr. Hahn. Any questions? I don't see any. Thank you for your time today. Next, we have Christopher Argo.
Hello, Representative Wood, members of the committee. My name is Christopher Agro, and I'm an optometric physician here in Connecticut. I'm representing the Connecticut Association of Optometrists to urge your support for two important issues. The first relates to so-called clawback issues we've heard earlier. Senate Bill 341 and House Bill 5377 both decrease the amount of time insurance companies can take back payments on previous paid claims. I commend the committee for their work on this, as the current law is a burden to both patients and providers. I'm in favor of the shorter stipulation in Senate Bill 341 as a good start. However, I would suggest that the time frame should be the same for providers to submit a claim as it is for carriers to take them back. Most insurance carriers only allow 90 days for a claim to be submitted, so why are they currently allowed 6 times as long to correct the errors than the providers are given? The playing field's not level when it comes to the clawback. In addition to claims reprocessing is frustrating for patients and very time-consuming and costly for providers. Many provider offices contact the insurance carriers prior to the patient's visit to understand the benefits, deductibles, and co-payments in order to bill the patient appropriately. When an insurance carrier decides they process a claim incorrectly, taking back those funds, the provider has to go back and reprocess all the claims, send letters to the patients explaining why they now have a balance when they thought their bill was paid full months ago, and try and collect those funds back from the patient. The patient decides, they don't want to pay the adjusted amount. The provider's out the funds because the insurance companies already took it back and withheld it from us. A few years ago, one insurance carrier realized they paid claims incorrectly to many optometrists. They took back thousands of dollars in claims from most offices. They went back the 18 months allowed under the current law. However, they never fixed the original billing problem. I emailed the provider relations director letting them know, their claims are still processing wrong, and they never responded. At the end of the year, the following year, they went back and readjusted the claims again. The wasted office time and patient frustrations were totally uncalled for, and this is the reason I suggest that the insurance companies should only have as much time to correct a claim as a provider has to submit a claim. Line 25 of Senate Bill 341 relates to the required advance notice for insurance carriers before they can recoup funds from the provider. This standard is truly needed, but would you please consider excluding a newsletter as a mode of communication? A couple years ago, one insurer had a major policy change for vision care, where they stopped paying for a refraction, which determines the prescription in the glasses. When I had questions about the advance notice of the policy, they said it was in the newsletter. I was not on the distribution list. Newsletters are not provider specific, specialty specific, and sometimes not even state specific. You have to hunt through the newsletters, multiple pages, links, find the pertinent information required to your specialty and state. It's a cumbersome, time-consuming process that does not represent a legitimate notice procedure, in my opinion. And I just want to thank you again for your time and views for the views of listening to us, to the views of the Connect Association, everybody else that's speaking forward. Thank you.
Thank you, Dr. Agro. See if there's any questions. I don't see any. Next, we have Tori Fishman.
Good afternoon. Thank you for the opportunity to testify. My name is Tori Fishman. I manage government relations for Zillow here in the Northeast. I'm pleased to share Zillow's strong support for SB 340, which establishes a clear framework for the public marketing of residential real estate listings and provides consumers seeking to list and sell their homes with important disclosures to further support a fair and transparent real estate market in Connecticut. We appreciate the committee for introducing this legislation, especially at such an important time in the real estate industry. At Zillow, we believe a healthy housing marketplace is transparent and consumer-driven. Our company was founded to bring transparency to real estate because accurate, timely information is power. When consumers can see all available listings and access clear information, they can make informed decisions about buying or selling a home, often the most important financial decision of their lives. Unfortunately, there's a growing trend within parts of the real estate industry to systematically hide available inventory, only providing access to a select group of buyers or brokers within private listing networks. This practice moves us backwards towards a closed, opaque system where access to housing information is no longer equal. We're in the midst of an affordability crisis, with buyers struggling to navigate high home prices, elevated interest rates, and too few homes for sale. Just last month, Zillow economists named the Hartford metropolitan area the hottest housing market in the country, with demand for homes far outstripping supply and conditions being especially tough for buyers. We should not allow brokerage practices that restrict access to available homes to make the crisis worse. When listings are shared only within exclusive or hidden networks, buyers who lack access to those networks are excluded, raising serious fair housing concerns. That exclusion increases the risk of steering and discriminatory outcomes, problems the housing industry has worked for decades to address. SB 340 ensures that by default, sellers listing their properties for sale in Connecticut have those listings made publicly available and receive clear information about the risks of exclusive listings that limit exposure to a narrow pool of buyers. We strongly support this default to public listings, which maximizes a property's exposure, opens access to all interested buyers, and serves the best interests of the parties that real estate agents represent. Taken together, these provisions create a more robust and transparent real estate market that centers consumers and reaffirms Connecticut's commitment to an open, fair, and transparent housing market. Thank you for your consideration of this testimony and for your continued work to strengthen broadly and fairly visible, which is good for consumers, good for fair housing, and good for Connecticut. As such, we respectfully encourage your support. Thank you.
Thank you for your testimony. It's nice to have you here. A little different perspective than some of the stuff we've been going through today. So wanted to ask what other states are implementing this in the Northeast.
In the Northeast, I would have to follow up with the committee, but I can point to legislation in other states, specifically in Washington State and Illinois, where they are pursuing similar legislation going after or regulating private listing networks and ensuring fair access.
Okay. I just wanted to make sure we weren't an outlier, so this is happening in other parts of the country.
This is a national conversation that's happening both at the state and local level across the country.
Great. Great. I love going on Zillow.
We welcome your traffic.
All right. Thank you very much for your testimony.
I appreciate it. Thank you.
Michelle Nicholson.
Hi, how are you today? So my name is Michelle Nicholson, and I'm the founder and owner of the Flower Girl Bakery in Hebron, Connecticut, and I'm here to testify strongly in support of HB 5378. My testimony is a little bit different from some of the other small businesses that you've already heard from, in that I'm not struggling with the high cost of healthcare or shopping for plants. I don't currently offer health insurance at all at my business. And it's not because I don't value it, but because I can't afford to offer it in a way that's sustainable for my business or truly affordable for my team. And the result is real, especially this year because of the cost spikes. More of my employees are not only underinsured, but uninsured than ever before. This is very prevalent in our industry. And when healthcare costs swing, it doesn't just hit my spreadsheet, it hits my people directly. It affects whether employees can afford coverage at all, and whether they can afford to use it, and whether they can afford to stay with me. Retention is already difficult in the hospitality industry, and benefits are one of the biggest reasons that someone chooses a larger employer over a small local business. We're trying to do this while inflation and labor costs keep rising. Our margins are razor tight, and predictability really matters. HB 5378 is a practical solution because it would allow small businesses to pool risk through trade associations and purchase coverage as a group, similar to how large employers already operate. Association health plans can create more bargaining power and more stable pricing and more plan options that fit the needs of working families. I sit on the board for the Connecticut River Valley Chamber of Commerce, as well as the Connecticut Restaurant and Hospitality Association. And both of these organizations would personally benefit from it, as well as all of the members within it. I am not the only restaurant that is in this situation, and there are many other organizations as well that fall under that category. I appreciate the fact that the bill includes clear consumer protection for self-funded MEWAs, requirements around fiduciary standards and stop-loss coverage, standardized disclosures, so employers and employees can understand that the plan is a trust and not backed by the state guarantee fund. And I really feel like those guardrails are important in helping move this bill forward this year. It helps the HB 5378, it levels the playing field. So it gives small businesses and employers a realistic way to offer more affordable and predictable health benefits while maintaining strong oversight and protections. It would mean the world of difference to my employees. So thank you for your time and support.
Thank you, Michelle. I feel like you're making the rounds over the past few weeks with
I've
your
been hanging
testimony.
out, yeah.
And I feel like I know you because your growth as a small business owner has really been, it's been in the Hartford Business Journal, it's been in the Hartford Courant. We've watched you go from a small bakery to a larger, bakery and restaurant, and it's been really cool to see. What I found really interesting about your testimony was that, you're not offering health insurance right now. So the difference between you taking that next step to grow your business more is your ability to be able to provide that benefit to your employees. That is something that I hope everyone in the room and listening took away. It is an economic development issue. If you want to grow and employ more and maybe take part-time employees and have them be full-time, you are going to need to offer a benefit.
Yes.
And if you don't, they may go somewhere else.
Right.
So it was just really interesting to hear. I loved your testimony. I think it's something for us to really put thought into because we want you to stay in Connecticut and grow and expand in Connecticut to be a business-friendly state. So
Absolutely.
thank you so much for your testimony. And I don't see any questions
Okay,
online.
great.
Thank
Thank
you.
you.
Next, we have Thomas Burr. Come back to Thomas. Paul Kidwell.
Good afternoon, Representative Wood. Nice to be with you this afternoon. Paul Kidwell with the Connecticut Hospital Association. We've submitted testimony on a number of bills today, but will keep my comments to HB 5378 and SB 342. Connecticut hospitals share the committee's goal of improving affordability and access to health coverage for employers, employees, and families across our state. Hospitals experience firsthand the consequences when coverage is unaffordable or unstable. Patients delay care, preventive services are skipped, and uncompensated care increases. For these reasons, we appreciate HB 5378's focus on creating opportunities for small businesses to pool together to offer more affordable health insurance coverage for their employees. We are supportive of this concept, provided appropriate guardrails are maintained. At the same time, we oppose the inclusion of the Connecticut option feasibility study in this legislation because of significant concerns regarding potential impacts on provider reimbursement, access to care, and the stability of Connecticut's healthcare delivery system. The study language directs the Office of Policy and Management to examine provider reimbursement methodologies, premium reduction targets, and related cost containment approaches. Although framed as exploratory, such studies frequently serve as precursors to rate setting or reimbursement caps tied to Medicare or other benchmarks, which can be detrimental to patients, harming affordability and access to care. Connecticut hospitals are already operating under significant financial strain, with the Office of Health Strategy recently issuing a report showing statewide operating margins at only 0.2%. Reimbursement from government payers remains well below the cost of care. Connecticut hospitals incur nearly $3 billion in Medicaid and Medicare losses annually. Imposing additional downward pressure on commercial reimbursement through a government-run health insurance plan would further jeopardize access to care. Commercial payments help offset chronic Medicare and Medicaid underpayment and fund critical services. A government-run health insurance plan would make the problem worse without addressing the drivers of the cost shift, Medicare and Medicaid underpayment. Conversely, HB 5378 establishes a state licensing and regulatory framework for self-funded MIWAs. Properly structured and carefully regulated MIWAs may offer small employers additional options to provide coverage to their workers. Expanding or preserving employer-sponsored coverage is a shared objective. When more individuals have coverage, hospitals see reductions in uncompensated care and improved continuity of care for patients. We appreciate that the bill requires licensure by the insurance commissioner, applies key insurance code requirements, prohibits discrimination based on health status, prohibits pre-existing condition exclusions, and establishes minimum actuarial value standards. If done correctly, a regulated MIWA structure could serve as a constructive tool to expand or stabilize employer-sponsored coverage without undermining market stability or patient protections. Related to SB 342, CHA opposes Section 1 of the bill, which requires
Your 3 minutes is up. Please summarize.
And I'll summarize very quickly. Section 1 of the bill requires site-neutral payment policies, which we've testified in opposition to this committee in the past, and happy to answer any questions related to those policies. But namely, hospitals are serving a different population of patients than community physicians and or other providers. We feel that payment differential is related to those other responsibilities. Appreciate the time. Thank you.
Thank you. Did you have any other comments on any other bills, or did you get to them all?
Yeah, so on 342, certainly we also support Section 4 of the legislation and the concepts described in Sections 6 and 7. As you've heard already today by a number of other providers, we're concerned about downcoding and the use of algorithms and AI to undertake that work. And certainly are supportive of reducing the period of time by which insurers can downcode from 18 to 12 months.
Mm-hmm. And are you finding that in like a hospital system, the downcoding is happening at the same rate as the small, the smaller providers that we heard from today?
Yeah, I can't speak to the differences. Okay. I will say it's universal with our hospital systems that we're expending a significant amount of resources to fight with insurance companies related to proper reimbursement.
Okay. And, in a perfect world, just going back to 5378.
Yeah.
I'm sure the hospital association hospitals are part of a network, part of a trade association. We keep talking about small businesses, but wouldn't it be fantastic if, you were all part of, one MIWA? Just think of, even if take Hartford Healthcare, there may be 25,000 people across the state. If now you add, some sort of hospital association MIWA, that could be 100,000. Yeah. I mean, I think the healthcare industry is employing probably the most people in the state. All of a sudden, that puts your buying power into, providing insurance. You could pass that along to all your employees, even, other providers, other, parts of the healthcare system that you're not currently working with could be part of that trade association healthcare plan. So I do think we're sometimes focused on the small employers because obviously we want to help them, but in a perfect world, I mean, employers of all sizes, because an employer with 5 employees to, participate with a hospital system, I mean, you just bring so many employers into that pool, or so many employees into that pool.
Yeah, it's interesting. We sit on both sides of the healthcare equation, right? Because we are the largest employer in the state, and we collectively employ around 100,000 individuals in the state. And as employers also struggle to maintain coverage for our employees and are facing the same cost increases that just in a different scale than has been discussed today. So certainly, and we do have experience in the healthcare setting where hospital systems throughout the country join together to purchase supplies at a more efficient rate or purchase pharmaceuticals at a more efficient rate. So we certainly understand pooling as an opportunity to reduce cost and lower risk.
Yeah. Okay, great. Thank you so much.
Thank you very much.
For
Appreciate
testimony,
it.
Paul. Next, we have Marcy Russo.
Good afternoon, Representative Wood, Senator Wong, Representative Pavlak, D'Amato, and members of the Insurance Committee. My name is Dr. Marcy Russo. I'm a licensed psychologist living and practicing in Connecticut, and I am currently the co-chair of the Connecticut Psychological Association's Legislative Committee. So not only do I speak to you today based upon the experience of my own clinical practice in Connecticut, but I also confidently represent the voices of all of our members at the Connecticut Psychological Association. And I am here to testify in support of House Bill 5377 and Senate Bill 341. So supporting these bills will really allow meaningful reform to Connecticut's insurance clawback laws. Insurers right now are allowed to demand repayment for previously reimbursed services, and this often arrives with unclear expectations, inadequate information, and at times, many months after delivering a service to a patient in some instances. Every healthcare provider in Connecticut is currently delivering services to patients that are in desperate need of clinical intervention. These clawbacks create financial instability for us providers, and they also, they create instability for us providers, and it brings clinicians often to leave insurance networks and at times, unfortunately, close their businesses, leaving patients without needed care. Also, there's an extreme amount of administrative burdens that clawbacks do place on providers, and we often are left in a place to chase insurers to help understand why monetary compensation is being taken back well after a service has been delivered to the patient and the claim paid by the insurer. And actually, for psychologists alone, I know Christian in his testimony gave this statistic to you, but together as a Connecticut Psychological Association, we've been able to determine that over 68% of us psychologists here in Connecticut have experienced a clawback, and some of them have been quite substantial for our members. So I'm here to tell you a little bit about House Bill 5377, Senate Bill 341, in terms of why you should be supporting these particular bills and their passage. 5377 offers the strongest procedural protections, including mandating electronic appeals and a 12-day business deadline for insurers to respond to audit appeals, and defaults in favor of the provider if the insurer misses such a submitted appeal. And also, Senate Bill 341 reduces the clawback window to 12 months, which is a 6-month different than what is currently in Connecticut. So reform, as I can say, is desperately needed to shorten this clawback window for us providers. It can strengthen notice and appeal protections. It can ensure that providers who deliver authorized care in good faith are not penalized for the errors that they did not cause themselves. So I respectfully urge the committee to pass these two bills. I know and I appreciate some of you that have had private conversations with us as an association, and I'm available today or whenever for questions regarding these two particular bills that are in front of your committee today. Thank you very much for your time, and I also submitted written testimony for you to view.
Thank you, Marcy. And we've been working with you for several years on the clawback issue. Appreciate your advice, knowledge, and all your work on helping us get to this point. And fingers crossed we can get something over the finish line this year. Senator Wong.
Thank you very much.
Thank you, Madam Chair. And Dr. Russo, thank you very much for your tireless efforts. You've been so good. But you know, we talk a lot about beyond the dollars and cents of the medical practice. But we don't make the connection of the great work that you and your colleagues work on the mental health crisis that we so talk about. But also as practitioners, these kind of onerous challenges in reimbursement, challenges in regards to the clawbacks and just the bureaucracy. Talk about how that has really impacted your members and their ability to want to stay in this state and provide critical services that are so needed.
Yeah, it's impacted them in several different ways. The desire then to be in network in insurance companies significantly decreases for a provider if they're subjected to these ambiguous clawbacks that can happen at any time, and we're always not sure about the amount. So many of our private providers in Connecticut are small businesses, and so they don't have a large sort of span or array of opportunity to tolerate a clawback that might be, you know, over $1,000 or in some instances several $1,000s at one time to be paying back on a service that they delivered several months ago. And in many instances, their tax books, so to speak, are already closed for the fiscal year. So it really has reduced the desire for providers to want to be an in-network provider, which then reduces access for patients. And then patients are forced to have to pay out of pocket if they want to see somebody. And we know that what challenges that can bring. So yeah, and it also has forced some of our providers to close practices and practice in other states that have more tolerable laws, or they don't have to worry about these particular instances. So we've definitely seen impact for multiple of our members. And we've worked together with the Mental Health Parity Coalition, and it's also affecting other practitioners. So our partners in social work, our partners in counseling, and our partners in marriage and family therapy experience the same clawbacks and unfortunately experience the same ill effects.
And I think it's critical, and thank you for that articulation, but I think it's also critical when I talk about the mental health crisis, what you just articulated is almost a tale of two different provider access, right? That for those that pay the insurance and the challenge that they have, some of those people aren't able to get access to the needed care, nor the providers in a time and efficiency and frustration provide that care. And then so what you have is the people that can pay out of pocket, pay per diem, are getting the necessary care, and or physicians in the mental health arena leave the state. So I think it's not just about my physicians and their concerns and clawbacks and the delay in paying. It's also a business decision in regards to best allocation of your time and expertise, but it is the patient and the gulf of the haves versus some of the insurers. Could you articulate a little of that, what you've seen? Because we talked a little bit about that.
Yeah, it can create significant aspects of inequity in terms of those that have the money to be able to pay out of pocket are those then that are going to most likely get services from out-of-network providers. And the more providers that become out-of-network, then the more difficult it becomes for people who cannot afford to pay out of pocket for behavioral health services to access them. You know, the other thing that's of a financial concern is whether someone's paying out of pocket or not to be able to access behavioral health services. You know, when a provider receives a clawback, the insurer expects us to go back to the patient and say, okay, well, now you owe us this difference because your insurance company didn't pay for that. And we know that there's several socioeconomic challenges that individuals with behavioral health disorders experience, particularly many of them are unemployed. So how they would then providers would then expect a patient to pay out of pocket for services that they received months ago when it's not going to be able to, it won't happen. So the provider then unfortunately is eating the cost. And so the patient is losing out in terms of being dissatisfied and then feeling like they can't access further services because the insurance company is not going to pay for it. Many of which are private insurance companies with which the patient is already paying a premium towards. So it's a little bit of an interesting dilemma. But also then the provider is going to be less likely to serve a patient that they know they're not going to unfortunately get paid rather. And so they have the very difficult decision of not only do I accept this patient, but also what other services are going to be available for this patient because they're experiencing a mental health crisis and need access to services.
Well, I think it's one of the biggest frustrations I have in understanding the insurance marketplace is the fact that we've passed in the legislature mental health equity, insurance equity, many years, but we've yet to see it really be applicable. And I think as the good chairwoman articulated earlier is the fact that we have been in constant communications with you and your members and Dr. Doran, who's fabulous, is the fact that one of the roles that we have as policymakers and legislators is we don't always need to have a hearing to have this interaction, that we're always accessible. And it is an example when we talked about 2 or 3 years ago about referral booklets, physician booklets that are outdated, and your members are getting calls when the insurance companies don't update their booklets. I don't know why. I don't want to offer any rationale, but we were able to help and expedite. And I think if anybody else is listening as we talk, our committee and the leadership and the members truly believe in engagement, and we're in the committee to try to help on a critical issue. And for you and your members, please extend my warmest respect and admiration that we are in the midst of a mental health crisis, and you're on the front line of it, providing care and support for many people. And we want to gulf that potential equity of care, because everybody, regardless of their ability to pay, should get that support and mental health wellness. So please extend to all of your members and your good work. And I appreciate your time and efforts. And thank you, Madam Chair.
Thank you, Senator Wong. Thank you, Marcy.
Thank you, everybody.
Next up, we have Norma Martinez Hosang.
Hi. Thank you for listening to me. Thank you, co-chairs, vice chairs, and ranking members, and members of the Insurance and Real Estate Committee. My name is Norma Martinez Hosang, and I am the director of the Connecticut for All Coalition. We're a coalition of about 60 labor, community advocacy, and faith organizations working to just make sure that families thrive in Connecticut. And today I'm submitting my testimony in opposition of HB 5378. Self-funded multiple employee welfare arrangements, we don't think are the solution that we need here in Connecticut. They increase the risk of medical debt because they don't cover all of the comprehensive services, and also have the history of running out of money or becoming insolvent, leaving members with stuck with medical bills. I've been listening to testimony and I see that there's some guardrails around that and new ways of thinking about it. But I think we have other solutions here in Connecticut that we should be looking at instead. Solutions that increase access, affordability, and where all residents can be covered by a plan that they can afford and use it, that cover all of the essential health coverage that they need. I also just want to state my opposition to the language of the study, the Connecticut Option Program. I think the study focuses on reducing health insurance premiums, and there are other costs besides premiums that should be taken into account, like what one has to pay when you go to the doctor or pharmacy, or looking at the cost people pay. Looking at one cost is not really the solution when doing a study. So reducing premiums is important, but focusing on premiums alone ignores that the real risk of medical debt for out of pocket. So I would encourage the committee to look at other options for health insurance that complies with the ACA, and maybe looking at the state, buying into the state-run health program or state subsidies, or the basic health program are other solutions that I think we should be looking at expanding to be able to bring more of the population in. Thank you for listening to my testimony.
Thank you very much, Norma. You said that there's a history of the MEWAs running out of money. Can you fill us in on that?
Yeah, I mean, I could send you that written history. I don't have it in front of me, but I'm happy to follow up and send you some of those examples.
Okay. You also said that MEWAs have left members with medical bills. What does
Mhm.
that mean?
Yeah, that when they've become insolvent, then the members or the patients are the ones that then are left holding the bag.
Okay. But you don't have any reference to this happening?
Not right now to share, but I'm happy to follow up in an email and send you all that information.
All right. You also said that they don't cover essential health benefits, but in the bill, it specifically says that they do.
I think it leaves some out. Again,
Do you know what it leaves out? Because we specifically wrote in there to cover the essential health benefits.
No, I'm not prepared to share those specifics right now. But again, I'm happy to follow up with my written testimony.
Thank you. Representative Pavlak D'Amato.
Hi, thank you. And kind of a follow-up to the question that Representative Wood asked when you mentioned about debt. How is that different than what, let's say, current plans? And, there are, right, Obamacare has high deductibles that people have to pay. So how is that different, like what we have now, than what you're...
Yeah, that's a really good point. I don't disagree. I do think that overall, just overall healthcare right now in the U.S. and there is a lot of those high deductible plans that are part of the ACA or Obamacare. So we would like to see those change, or I would like to see those change to make it so that it is more affordable for everybody. So I don't disagree with you, Representative.
Okay, so how would you want those to be changed?
I mean, just have insurance that is more affordable, that puts patients in the front, where there's no high deductibles and where everything is covered. So there's a lot of options out there, other options that I think we'll be seeing in some other proposals next week with SB3. Perhaps the basic health plan. I mean, I think that there's there's people that are in the healthcare business that have more of those details. But I do think that there is a solution for where people that are already struggling and already paying out of their pocket where we could minimize that.
Right. So what are those other options then?
I mean, I think we should look at the basic health plan, buying into the state funded public option. Those would be a couple that I would encourage us to be looking at to expand.
Okay. And how would that be paid for? Like, where would those funds come from?
I mean, we testified at the appropriations hearing. We do believe that there is a cost associated to improve all of these things, and I think we should look at those options of how to tap into the money that is already there, you know, in the rainy day fund, or changing the volatility cap so we could capture more money to fund these kinds of programs that really support the community. There's options out there on raising more money to fund these kinds of programs.
So what would the cost be then? Do you know what it would cost overall?
I don't, and I'm not sure. I haven't seen a figure, but maybe somebody else will testify on the specific amount of money, but yeah, I'm not sure.
And then you mentioned subsidies. So where would the money for the subsidies, where would that come from?
I mean, I think same thing, just like many issues that our community cares about, public education, public higher education, there needs to be more money being allocated and used to support these programs that communities rely on. So we actually, Connecticut for All, with our stand-up agenda, have some proposals, again, that include changing the volatility cap and the money that is captured, also raising more money from taxing the ultra wealthy that are actually doing really well with the federal cuts that they got. So there's options, and I'm happy to send along with you our stand-up agenda so you could look at those proposals that we have around bringing more money into Connecticut.
And so when you send those over, can you send over exactly, like, I'd just like some more specific information, because I hear tax the wealthy all the time, which I'm totally fine with. But I want to know that money, how much is they're being taxed, and then how much that's going to be, how much is going to come in? Because if it's not going to cover it, then I'm not sure I see the point. Or if it's not going to be if it's just going to go into the general fund, then I mean, because we have a pretty large budget at this point, right? And so I'm not sure why money that's already existing can't be used for what you're talking about. Have you asked anybody in appropriations or the governor's office why not?
The money, like the surplus money that we already have, for example.
Like
I mean, it's part of our
million
strategy.
That went right to early childhood education, but could have gone to this. So why not fund fund this?
Yeah, no, I mean, I think the problem is that we have had many really important programs and supports for communities that have been underfunded. And now what we're seeing with the federal cuts around Medicaid, in particular, some housing, is that it's really exacerbating the problem. And we are in conversations with different legislators and supporters to figure out a way to solve it, because unfortunately the need is bigger than, I mean, I think we have the money, Connecticut has the money to be able to do better in many of these issues. But I do think, it puts us it puts everybody in a hard position when it is about healthcare or funding public schools. So we hope that we make some movement this legislative session. And I will, Representative Pavlock, I will send you that and send it with as much information as we have, because I think some of the research is being done around the actual amount of money that it raises, but we have some of those figures already with those proposals. So I'll send as much as we have at the moment and continue to update you. Happy to do that.
And just a little off topic, but you mentioned the Medicare cut. So where exactly currently Medicare wise, or Medicaid, I believe you meant,
Yeah.
what's
Yeah,
been
ma'am.
cut Medicaid wise currently in programs?
So what we know is that over the next year, the cuts are going to be close to, is it like $991 million? The actual people, I don't remember the figure of the actual number of people that are going to be affected. But I actually have a whole bunch of information on that in terms of the money, the number of people, and how it breaks down. And it's written, I mean, people, other organizations that do that research have done a really great job, and it's easy for me to just to send it over. But those cuts are, we're going to be seeing them more and more in the year coming. Yeah, so again, happy to share a lot of that that is in writing, and that it's that has been studied by other folks that do that research.
So then currently are there cuts then?
Yeah. We've already seen some folks being cut. I mean, with the subsidies, the governor's emergency fund was able to fill in some of the subsidy cuts for folks that were buying their health insurance in the exchange. But that's a 1-year thing, right? That's a 1-year coverage, and some people had to pay the higher insurance premium. So some of those have already hit families and individuals.
So those were COVID subsidies. So what did they do prior to COVID?
The subsidies that were supported were that then expired. Yeah, I'm not sure. I don't have the answer to that.
Yeah, because they were, I mean, I remember being on the phone call when the subsidies went in place, but those were COVID. So I'm not sure what did everybody do prior to that.
They probably struggled. Yeah, I mean, I'm sure the need was there. I'm not exactly sure the trajectory, but the truth is that healthcare is expensive for employers, for individuals, and so yeah, I mean, that's a good question, but the need was there before, even though that those subsidies came through, like you say, during COVID.
Okay. All right. Thank you very much.
Thank you.
Great. I don't see any other questions. Norma, thank you so much for coming today.
Thank you for your time.
Next, we have Stacy Lowry.
Hi, good afternoon. First, I just want to say thank you for having the opportunity to speak today to the committee, and also thank you for establishing the nonprofit insurance working group. I'm speaking today as a nonprofit provider on the issue of foster care insurance. My name is Stacy Lowry. I'm the CFO of Waterford Country School. We are a nonprofit human services agency. We've been in operation for 104 years. We have 9 different programs, one of which is foster care. We have been operating our foster care program in the state of Connecticut for 43 years. Last year, around this time, we received notifications from our longstanding insurance carrier that they were canceling all of our lines of insurance, property and casualty, liability, auto, and umbrella, because we operate a foster care program. They have gotten out of the business of underwriting that kind of insurance, and I want to highlight, not due to any claims. We don't have any current, pending, or prior claims history in this space. They have made the decision, along with, I believe, many other or most other standard carriers, to exit this type of business because of the risk involved. Two catalysts are the change in the statute of limitations for reporting sexual abuse and molestation, and the social inflation around the types of claims that are filed, and just mega verdicts that get awarded to victims. And so we scrambled pretty hard and pieced together some insurance from the surplus lines market, and we sustained 130% increase, so more than doubled the cost of our insurance. And at the same time, saw a reduction in our coverage from $10 million on our umbrella coverage to $2 million, and then the carve out for abuse and molestation went from $3 million to $1 million. the coverage is not really adequate for our agency. So we were left balancing, do we continue to run our foster care program and protect the kids that we have in our care, or do we put the rest of our agency at risk? And it's something that we are about to reconsider as we approach renewal again this year. So we are a July 1 renewal. So we're just about to embark on that process. We had to pay $262,000 last year in upfront prepaid premiums. Normally we would have a 12-month, monthly payment schedule. That caused some significant cash flow issues for us. We receive quarterly payments from the state, and often, managing cash flow can be challenging. Making sure we have payroll is really important. Also, in terms of operating budget issues, the money that we had to pay in additional insurance costs pretty much equates to about a 2% increase for our workforce. And they are already underpaid and working for very modest wages.
Your 3 minutes are up. If you could please summarize.
I would just ask that the insurance committee continue to work on the issue and solutions that will help us continue the work that we do, because we want to do this work. We just simply can't afford it.
Stacy, thanks so much for waiting and testifying. We hear you. We understand the concerns of the nonprofit community. That's why we formed the emergency working group last year and have been meeting every 2 weeks on it. The recommendations that we put forward, we believe, are not just something that has to be done, but needs to be done. Like it needs to pass this session. So you have our support and commitment to working with you. And just because we pass something doesn't mean we're not going to continue to work on it, because things change, the environment changes, how you insure changes, risk changes. So you have our commitment to continue to work on this subject matter.
I really, really appreciate that. I read the work paper and the recommendations. I just saw something as I was preparing for this hearing today that the state of Washington put out, and they had some really strong recommendations as well, if the committee would like to look at those as well.
Yeah, if you want to send that over email to me, I'd be happy to take a look.
I would love that. Thank you so much for your time today.
Thank you. Next up, we have Catherine Valeda.
Hi, everyone. Dear Senator Cabrera, Representative Wood, and esteemed members of the Insurance and Real Estate Committee, my name is Catherine Villeda. I'm the Coalition Director for Husky for Immigrants. We're also a member of the Health Justice Now campaign, a statewide campaign fighting for quality, affordable healthcare for everyone here in Connecticut. Thank you for the opportunity to testify in opposition to HB 5378. Federal cuts threaten our healthcare system, including taking away healthcare from over 200,000 people here in Connecticut, which will result in emergency rooms being overtaxed, providers facing financial stress, and weakening our marketplace even further. This legislative session, lawmakers need a real plan to confront this reality and the historical challenges of our healthcare system, which we have heard greatly about today. We need that plan to consider real solutions to mitigate these federal cuts and historical challenges, and further invest in our current healthcare infrastructure. Connecticut residents deserve more than a study that primarily only looks at premiums. They need a plan for execution and implementation. And Connecticut residents certainly deserve more than implementing MIWAs, which are currently prohibited in Connecticut, and for good reason. MIWAs are not required by the bill to cover all essential health benefits. And the bill also specifies that MIWAs are not an insurance product. In New Jersey, there was a MIWA that became insolvent, which led to a bankruptcy and threatened the fate of some of the employers who were part of that MIWA. In regards to the study, we recommend that it should look at other out-of-pocket costs that drive medical debt, and to look at plans that comply with the ACA rather than premiums alone. We urge the committee to consider real health insurance options that comply with the ACA and that would improve affordability, such as the basic health plan, state subsidies, and buying into the state-funded health program to address the gaps and high costs of our healthcare system before resorting to MIWAs. We urge you to oppose HB 5378 to ensure that all Connecticut residents have access to true, quality, affordable healthcare. Thank you for your time and attention.
Thank you, Catherine. I'm going to ask some similar questions to a previous speaker, but you said that the MEWAs do not cover essential health benefits, but that language is specifically written in the bill. So can you further explain that?
Yeah, we've looked into the bill and don't see specification of that. If you have a specific line that we can refer to, that would be helpful. But I've looked at the bill and don't see any mention of that personally.
Yep, it is directly in there to cover all essential health benefits because it would be illegal to not do that. You also said it's not an insurance product. What do you mean by that? We have it regulated by not only the federal government, but by the Department of Insurance.
I'm referring to line 113 to 114 in the bill, which is on page 5, which specifies that health benefit plan does not include insurance products.
This is an insurance product regulated by the Department of Insurance.
I understand that. Well, I understand that that is what is being communicated, but I believe that there have been out-of-state experts who have come to Connecticut who have talked about how MEWAs can look like health insurance products, can act like health insurance products, but are not actually health insurance products.
Not only
And
have
I
we addressed that, but we directly wrote in the bill that it would be regulated by the Connecticut Department of Insurance. So we've addressed your concern in there related to it being an insurance product. You also said it doesn't comply with the ACA, and where are you getting that information?
Broadly talking about how MEWAs function, that they aren't required to follow the broader requirements that health insurance policies need to follow in regards to the ACA.
So I would just ask that all of the concerns that you're talking about and concerns that I'm hearing from other speakers have been directly addressed in the bill. We worked with the Office of Healthcare Advocate, we worked with the Department of Insurance to make sure that your concerns that you're voicing are addressed in the bill. So I would just appreciate if you could make sure that you do take a look at that before you issue testimony on the contrary, because what you're saying is just not accurate. Senator Wong.
Thank you, Madam Chair, and thank you very much for your work, Ms. Villeda. Have you submitted written testimony?
I'm in the process of doing that.
Okay, that'd be great. And were you here? It's been a long day, but were you here when the Commissioner of Insurance, in my engagement, reinforced that as the overseer, he looked at solvency and that MEWAs are an insurance product?
Yes, I did hear his testimony.
And would you say that he would be inaccurate in saying that?
I believe I'd have to go back to listen to the full testimony to better respond to that.
But you did say it's not an insurance product, and I think one of the key themes as part of the leadership is to ensure that solvency and regulation and all the necessary requirements are essential. We did look at many other states that have enacted it, but it is an insurance product. But I want to be sure that in your testimony that you articulated that it's not an insurance product. And I just wanted to get that clarification because we had that conversation with the commissioner and he reinforced that they evaluate solvency and that this is an insurance product. So I just maybe give you a chance to clarify and very much look forward to hearing your reading your written testimony, kind of confirming that as well. Okay. Secondly, you cited New Jersey and a MEWA being insolvent. Can you give me the particulars of why it was insolvent and what the rationale was? Is it because of bad performance, not delivering the services and all the examples that you articulated in your testimony? Or is there another reason why it was insolvent? And I very much like for you to provide with this committee the analysis and the basis and the basis for that statement, because we've asked that of many other people that have made these statements that they were they were, I think they were reserved in saying that they didn't know enough about it and that they would give us the information. So could you articulate, as you testified, that what was the reason for the insolvency of Amiwa, New Jersey?
Yeah, thanks for the questions. And I do want to acknowledge that, acknowledge Representative Wood's remarks that we recognize that that several of our concerns have been addressed. But, our primary point here is that we really want the state of Connecticut to look at other solutions before we resort to MIWAs. To your point, Senator Huang, my point around this not being a health insurance product is directly coming from the bill language itself. So perhaps that bill language needs to be clarified. I mentioned line 113 and 114, and I believe lines 319 can also be clarified. So that's where my understanding of that is coming from. And I would, urge the committee to clarify that if that's the case. To your second point around New Jersey and the insolvency, my understanding is that it had to do with high claims amounts. And so they didn't have enough money to pay out all the claims that were being made. And so they became bankrupt and actually were trying to get the state of New Jersey to bail them out because they had millions of dollars in claims that they could no longer pay for. And I'm happy I have that article hyperlinked as well as additional resources in my written testimony. So I will get that into all of you as soon as possible.
I really appreciate that. And I think you mentioned something that I'm in total agreement with, is that this is a committee of cognizance of insurance. And what we did as a committee was to be able to raise both points of issues and try to verify, as you've articulated, the shortfalls of MIWA. What do you know about the current partnership program and its implementation and its loss ratio and its funding component and its provision as a insurance product or not an insurance product? That's part of the reason we raised the bill to be together. So if you offer the MIWA testimony, and I think you cited support of the Connecticut option articulation, talk to me about what you know about the aspects of the advantages you talked about with the Connecticut option, in addition beyond what the $1,000 tax credit, but what you know about the partnership program and its funding, its loss ratio, and that in the shortfall that it had, and it is not an insurance product, as you heard in my testimony in exchange with the insurance commissioner, then where was that shortfall being replaced? What do you know about that?
I can't speak to the partnership plan. I didn't express explicit support to the Connecticut option. I was simply alluding to, the state should look into subsidizing plans here, a basic health plan, which those are all separate from MIWAs and the partnership plan.
I appreciate that. And I think my hope is to read your written testimony, be able to glean and offer the insights, because I think the public hearing's goal is to get stakeholders and offer their input. And I appreciate that from all the people that have offered it already, and there are more to come. And I hope that you'll stay and listen to some of the people that may be able to articulate from a marketplace experience to be able to offer that. And I look forward to continue engagement and conversations with you and many of the advocates that have spoken today. So thank you.
Likewise. Thank you, Senator.
Thank you, Senator Huang, and thank you, Catherine. Next, we have Lisa DeMatteis Lepore. Next, we have Maggie Bomber.
I'm here.
Sorry, Lisa. Okay.
I'm sorry. My apologies. How are you?
Good.
It's great to see you today. Hi, everyone. My name is Lisa DeMatteis Lepore, and I'm the CEO of The Connection. I served on the Nonprofit Liability, Property, and Casualty Insurance Working Group, and I am pleased to submit testimony today in support of raised HB 5375, in particular Sections 4 to 6, supporting the recommendations of the Connecticut Nonprofit Liability, Property, and Casualty Insurance Working Group. Madam Chair, I would like to thank you personally and your fellow committee members for creating and participating in the Nonprofit Property and Casualty Working Group during the interim. The Connection was founded in 1972 and is a large statewide nonprofit human services agency. Currently, we operate more than 50 programs across Connecticut and serve thousands of residents each month. Last fiscal year, we served over 11,000 unique Connecticut residents. And for more than 50 years, we've partnered with the state, with local communities to help people facing complex challenges and build stability moving forward. Our statewide services include housing and homeless services, behavioral health and addiction services, community justice and reentry programs, and also family, child, young adult, and youth services. In April of 2025, we were notified by our insurance carrier that the Connection's entire insurance package would not be renewed due to one extremely large claim. 16 insurance companies denied coverage for the Connection, and these denials were not only based on that one large claim, but also stating things that we serve too high risk of populations, women and children's programs, supportive and permanent housing programs, residential programs, clients with mental health, incarceration histories, and substance abuse, all of which our sister nonprofits serve well in our beautiful state of Connecticut. With the help of our insurance broker, partners, and others, the Connection was able to patch together at the very final liability insurance through the excess and surplus lines. This resulted in an increased cost close to $1 million, over 50% increase. We are now paying over $2.1 million for insurance coverage. These costs are not sustainable for the Connection and other nonprofits across our state. Without support from the state, the Connection and among other nonprofits will be forced to close, leaving the high-risk populations for the state to serve, which is not financially doable. As you know, nonprofits like ours are essential partners in delivering effective community-based solutions and support residents and strengthen Connecticut and serve this and save the state millions of dollars. Our state is an amazing state. I've worked for over 30 years serving different populations. Our state developed best practices for serving women and children in Connecticut over 30 years ago. We have always been on the cutting edge in our state of providing services and filling gaps for the most difficult populations in our state. Babies that I held 30 years ago, I've gone to their high school graduation. I've seen them get master's degree. I've seen them get even PhDs. Amazing. We are breaking generational cycles of abuse in our state. Nonprofits are Connecticut's greatest civic assets, as you know. This is a massive problem, as Stacey Lowry so eloquently talked about with regard to foster care, but now it is dripping over into other populations that we all serve. We will be put out of business if insurance companies start rejecting to cover organizations like the Connection.
Your 3 minutes is up. Please summarize.
I want to just say thank you so much, Madam Chair. And I am so grateful for the continued collaboration between the legislature and the nonprofit sector that helps sustain shared commitment to Connecticut's well-being and economic vitality. Thank you for your time and continued support.
Thank you, Lisa, for being here. Thank you for what you do every single day with your nonprofit, and thank you for serving on the nonprofit working group. Your insight was invaluable. As the good chair said earlier, this is one of our priorities for this session, and we appreciate you being here.
Thank you. I'm so grateful for you and everyone on this call.
Oh, thank you. Have a good day.
You too.
Next up is Maggie Balmer.
Thank you for the opportunity. There we go. Thank you for the opportunity to testify today. My name is Maggie Baumer, and I'm here to strongly support HB 5374 as it relates to prosthetic and orthotic care for people with limb loss and limb difference. This legislation matters deeply to me as I am a person with limb loss and I wear a prosthetic arm every day. I'm also the leader of Enterprise Patient Advocacy for Hanger Clinic, which is the largest provider of prosthetic and orthotic clinical care in the US, and we have 9 facilities here in Connecticut. Today, I'm here as the Legislative Affairs Lead for the So Everybody Can Move initiative, which was created to address a clear public health and disability rights issue, which is the lack of coverage for prosthetics and orthotics that are specifically designed for physical activity, even when those devices are essential to health, safety, and independence. I brought a prop so that you can see what I'm talking about. So this is my activity-specific prosthesis, which I was able to get covered through my employer because we're a prosthetic provider, so it behooves us to make sure that we provide this type of coverage. And as you can see, it's a very different kind of device than my daily use prosthesis. So it's important to note that there have been 12 other states that have already passed similar legislation, including Maine and New Hampshire. And I'm a resident of Massachusetts. We're currently working this bill through our Ways and Means Committee. And this type of coverage is covered under the Affordable Care Act as far as the habilitative and rehabilitative benefit category. So this coverage is already required. The issue is that insurance plans have interpreted that benefit very narrowly to only apply to one daily use device. And as the previous, Marcy and Rachel Webster, the previous testifiers earlier today, indicated, one device does not suffice to do all the daily activities that somebody wants to participate in. So additional devices for showering and bathing or physical activity are often denied as quote unquote non-medically necessary. And so that forces us to pay out of pocket for those devices, to go without that type of care, or to risk injury using an inappropriate device. It's also important to note that under this bill, the insurance plans will still have the ability to use prior authorization to vet these claims. What they can't do is say that an additional device for physical activity or showering and bathing is de facto not medically necessary. And notably, the VA and some workers' comp plans already provide this type of coverage because they realize the holistic rehabilitative and habilitative value of restoring a person to full function, and it just makes sense from both a fiscal and a physical perspective. On that note, the cost is minimal. So we've had a fiscal analysis done, and we estimate that it would cost between 1 and 11 cents per member per month, while also predicting millions of dollars in cost savings or cost avoidance per year on improved health outcomes through the reduction of costly secondary conditions, including heart disease, diabetes, and obesity, which collectively cost the U.S. healthcare system $626 billion annually. Furthermore, knee and hip problems resulting from a lack of appropriate prosthetic care can range in cost from $80,000 to $150,000 over the course of a single patient's lifetime. We also have data from New Mexico, which is one of the states that has already passed this legislation, and it's been in place there since January of 2024, that demonstrates for 3 out of 4 insurance plans, there have been no increase in premiums, and for the 4th plan, it was a 0.001% increase in premiums. So again, a very low cost. So we respectfully request that you favorably report out on HB 5374 as it relates to prosthetic care to ensure that those living with disabilities here in Connecticut have access to engaging in physical activity just as their able-bodied counterparts do. Thank you.
Thank you, and thank you for being here and telling your story. I've had the opportunity to talk to some other advocates, and I think the stories that hit home the most are children when they come and tell their story about going to swim with their friends at the public pool and stuff like that. So, but I appreciate you being here and
thank you.
Telling us your story. And I'm a numbers girl, so I loved your all the cost stuff. So thank you.
Yes, you're welcome, and we're happy to submit that along with the written testimony, those citations. Yeah.
Thank you. I don't see any other questions.
Great. Thank you.
Have a good day.
Thank you. You as well.
Susan Halpin.
Good afternoon. Representative Barry, members of the Insurance Committee. My name is Susan Halpin, and I'm here today on behalf of the Connecticut Association of Health Plans. We have submitted testimony on a number of bills on your agenda. I'm going to use my 3 minutes today to talk specifically about Senate Bill 342, which has 9 sections, and those 9 sections pretty much each do something very different. Many of these proposals are proposals that we have seen before and which this committee has considered before. Of primary concern for the industry is the presumption of medical necessity or changing the burden of proof. It really flip-flops it upside down and says that anything that a provider orders is medically necessary, and it's incumbent upon the carrier to say that it's not, but the carrier is not in possession of the medical records that would be able to determine that without those being submitted by the provider. This issue is such a concern that the association undertook a pretty significant study in 2025 by Harvardy Risk to look at the cost implications of this legislation. I've included some references to that in our submitted testimony, but for the fully insured, the individual and employers, many that we've been talking about today, the impact of that would be between a 7 and a 9% increase. For a family of 4, that would be another potentially $2,800 a year to $3,600 a year if you look over 10 years. And that's the problem with a lot of this legislation. What the immediate impact and what the impact is going to be 10 years down the line are very different. You look at 10 years down the line, it's between $7.6 and $11.6 billion. We carry that through for the state employee plan, for self-funded plans, so you can take a look at that. We're happy to provide you with the full study. We've heard a lot this session about affordability. Affordability is definitely paramount for Connecticut consumers. And as you heard from the insurance commissioner earlier today, the market that is regulated by the Connecticut Assembly and by the state of Connecticut represents only 25% of the commercial market. So that's not 25% of the population, it's 25% of the commercial market, which is a very small number of folks. Section 1 talks about site of service reimbursement and mandates uniform reimbursement, but we read that to mean the highest reimbursement across the healthcare delivery system, not the lowest. So we're very concerned about the cost impact of that. If the committee and policymakers are concerned about site of service transparency and payment accuracy, we've actually respectfully submitted an alternative requiring the inclusion of the national provider ID number that will allow both consumers and carriers to understand where care is actually being delivered, especially now that large health systems, own several different sites of service. The NPI number would allow us to know whether it's those services are being provided in a clinic, an outpatient center, a surgery center, et cetera, or if they're actually in the main hospital. The anti-steering clause definition, that statute is always challenging because it's written in a kind of a challenging way. We're concerned that it may inadvertently limit appropriate care management and value-based payment designs, which are really the center of the way everyone is trying to control costs in a manner that isn't as disruptive to the system, whether that's through centers of excellence, tiered networks, pay for performance. We are concerned about that. There's a study in here. We would ask if it goes forward, that it includes robust stakeholder input. In terms of the contract continuation requirement, we understand the disruption that this is trying to address. It would basically require that the rate that was in place between a hospital system and a carrier remain in place until the end of that contract period if there's no agreement between the two parties. What I would say there is, people typically think of the individual market, right? It starts and ends on January 1st and, the end of December. So you could see it working there. But when you're talking about employer groups, both small and large, those start and stop all throughout the year. So if you were going to the ability to navigate that and operationalize that when each renewal year ended for that employer would be really, really problematic from a pragmatic standard, or from an operational standard. So we hope that that will be revisited and does not go forward. Finally, I'm just going to jump to downcoding in Section 4. You heard a lot about that from the providers in the room today. What providers tend to call downcoding should really be called right coding. There's a number of CPT codes, the books, and that's what the carriers are really following when you're looking at this. And the idea is that the billing code aligns with the clinical documentation that is provided. I think one of the important things to understand around this coding discussion is that care is not being denied, right? These services are being provided. This is about what the level of the service is that's being reimbursed. And as you heard one of the speakers say, it can be from a 1 to a 4 in terms of time and intensity. If a carrier is seeing a provider bill a number 4 every single patient, that might kind of indicate that it might need to be looked at, in that situation. Perhaps it's perfectly appropriate, but it also may not be appropriate. There are also other reasons for different coding structures. There may be situations where it's supposed to be a bundled code, right? One surgery is paid for at a certain rate, but it comes in and it's billed
Your
as
3
three
minutes are
separate.
up. Please summarize, Susan.
Will do. Sorry about that. And it's billed as 3 separate rates. Sorry, there's a lot of sections in the bill. The last I would just say is step therapy. And we've done a number of provisions around step therapy year after year after year. I would hope that with the escalating costs of pharmaceutical pricing and that impact that has on the premiums that people pay, that we would not move forward with that at this time. So thank you for the opportunity to speak. And thank you for the time.
You're very welcome. That was a little over 3 minutes. Can you talk a little bit about site of service? Because the thought now is for affordability that taking some of these services out of the hospital setting and moving them to an outpatient will save money. What are your thoughts on that?
Sure. And I think that is definitely one of the benefits, right, of different levels of service. I think the way we read Section 1 in the bill is that it says those services have to be the same, paid the same, whether they're provided inpatient at a hospital or outpatient at perhaps a surgery center. So to us, that means kind of all boats rise, and we're paying perhaps an outpatient center that isn't open 24 hours a day, that isn't staffed to the same level as a hospital system, that isn't required to have all of the standby specialty services involved, the same rate as we would pay a hospital. So I think that's the concern with this language. We do think that there should be a distinction between those services.
And then downcoding, we heard from a lot of providers today. Is there any criteria for downcoding, or how does that process work from your point of view?
Yeah, I listened to that discussion, and I don't have that information today, but I will be happy to get that information to the committee.
Thank you. That's it for me. I don't see any other questions. So you are done.
Thank you as always.
Thank you. Have a great day.
You too.
Carolyn Dwyer. Christopher Moore.
Can you hear me okay?
Yes, thank you.
Okay. Distinguished members of the Insurance and Real Estate Committee, my name is Chris Moore, and I'm an emergency physician here to testify on behalf of the board of the Connecticut College of Emergency Physicians in support of Senate Bill 342, an act concerning health coverage. In particular, CSEP strongly supports Section 4 of the bill, which prohibits a health insurer from using artificial intelligence, AI, or an algorithm to automatically downcode or deny a health insurance claim without a review by a clinical peer. When downcoding occurs, a physician is then forced to appeal, submit documentation, and wait for review in order to potentially receive appropriate payment. This reverses the traditional claims review process and shifts the administrative, financial, and evidentiary burden entirely to physician practices. Even if bills are ultimately paid, it can sometimes delay those payments for up to a year, making it difficult for practices to keep up with current expenses. Downcoding happens with no transparency. Physicians are not provided with standards for how downcoding decisions are made, why they are made, the frequency with which they are made, or how to obtain a meaningful human review. The impact on physician practices is significant. Automatic downcoding forces practices to devote staff time to appeals, documentation review, and follow-up. Over time, this erodes practice viability and creates financial instability. Above all, this is a patient care issue. When physicians and their staff are diverted into administrative battles, they are not seeing patients. When practices cannot absorb repeated improper reductions, services are cut back, staff positions are eliminated, medical offices close or are forced into mergers. When a practice closes or limits access, that medical care disappears from the community. This is a particular concern in emergency department care, which bears the burden of significant uncompensated care through EMTALA regulations and serves as a safety net for medical care across our state. Other states are tackling this issue and have passed or are poised to pass legislation limiting or prohibiting automatic downcoding. Connecticut already ranks near the bottom of the country in retaining physicians. We train here. Young physicians have choices about where they practice. If Connecticut does not rein in algorithmic and automatic downcoding, will only make recruitment and retention more difficult. Section 4 is a measured and necessary reform, and I thank you for your time today.
Thank you for being here. Can you estimate about how much time you spend appealing these downcoding?
So it varies a lot depending on the size of the hospital and the emergency department. I'm speaking on behalf of many of my colleagues who operate smaller EDs where they really have to employ significant staff to do it. I personally work at Yale. We have a large coding staff, and I think probably do have the resources to confront this, but it remains a bigger challenge for a lot of the smaller democratic groups, which really have to recoup all of the reimbursement for professional care that they provide.
Okay, thank you, and thank you for being here. I don't see any other questions.
Thank you.
Have a good day. Lincoln Woodard.
Yes, can you hear me okay?
Yes, I can. Thank you.
Thank you. Vice Chair Barry and distinguished members of the committee. My name is Lincoln Woodard. I'm an attorney in practice law at Walsh Woodard in West Hartford. I'm here on behalf of the Connecticut Trial Lawyers Association to testify in strong opposition to Section 4 of Raised Bill 5375 and to voice concern over Section 6 of the bill. Contrary to the title of the bill, which is an act concerning recommendations of the Insurance and Real Estate Committee working groups, this particular section, and just this section, Section 4, was not among the recommendations of the working group, and in fact directly contradicts the recommended approach. The working group was convened to develop policy options that could improve insurance stability, affordability, and access to coverage across the nonprofit human services sector. The working group issued 5 recommendations, but not one of them was to grant statutory immunity to nonprofit human services providers, which this particular section does. To the contrary, the working group explicitly identified the appropriate mechanism for managing the liability exposure related to state actors and third-party contractors, and that's risk mitigation through contractual tools to make clear that the nonprofits are not liable for state employee actions or any third parties it contracts with. CTLA recognizes that nonprofit human service providers face genuine insurance market challenges. The working group's actual recommendations address those problems. The captive pooling mechanism study in Section 5 of the bill reflects Recommendation 2 from the group's report. Additionally, Recommendation 1 suggests support for strengthening risk management practices with clearer contract language and improved safeguards. These are the tools that can stabilize the sector and at the same time improve safety. As recognized by the working group, we need better insurance structures, not a statutory shield from accountability. Liability exposure does incentivize nonprofits to make their environments safer for Connecticut's most vulnerable population, and the answer to rising insurance costs is not to eliminate accountability. We urge the committee to strike Section 4 and instead work with the nonprofit stakeholders to strengthen contractual risk allocation consistent with the recommendations. CTLA also just has concerns about Section 6 of the bill proposing a study on third-party litigation, and it's not opposing the concept of studying third-party litigation funding and tort cost drivers in the context of insurance pricing. But the working group's recommendation 5 itself recognized that any study should work in concert with the Judiciary Committee. Section 6, as drafted, assigns the study solely to the insurance commissioner.
Your 3 minutes is up, sir. Please summarize.
Thank you. We just would urge them to add the involve the Judiciary Committee in that process. And in conclusion, we would just urge you to strike Section 4 and amend Section 6 as indicated. Happy to answer any questions.
Thank you, Lincoln. As was stated earlier, this is a work in process, so we will take your testimony into account into the final bill. I don't see any other questions, and I thank you for being here.
Thank you.
Brian Shoemaker.
Yes, good afternoon. And thanks to the committee. I know it's been a long day. I'll try to be quick with my comments. I have submitted written testimony. Excuse me. My name is Brian Shoemaker. I'm appearing on behalf of State Farm. And I would say a soft opposition to the insurance department's HB 5263, specifically Section 7 and 8, that are attempting to implement the transparency guidance adopted by the NAIC's P&C C committee in 2024. State Farm has a large presence in Connecticut. We are number 3 in auto and number 2 for homeowners. We have approximately 300,000 active auto policies and 210,000 homeowners. That's going to be important in a second. I can sense a theme from the committee today that you want data, and that's really my role today, is to provide you some data from an experience in Washington that we've had. I know it's been 6 hours since the department testified, so as a reminder, the transparency guidance is proposed in 2 phases. Phase 1 would require insurers, upon request from their customers, to explain, to have a reasonable explanation of why premiums increased. Phase 2 set out several years, it looks like, to be effective in 2029, would require that to all customers moving forward, so not upon request. And we have significant concerns about this. As the insurance department referenced in their testimony, Washington has done something very similar. And our experience in Washington, I think, should inform the insurance committee's next steps. And we've talked, to the insurance department's credit, they have been very thoughtful, and I see they're open to making changes in their written testimony. But just to reference some data from Washington, 1/100th of 1% of the customers in Washington took advantage of this option in Washington during 2025. If you translate that to Connecticut data, that would equate to 39 customers requesting this kind of information from State Farm annually, should this law be implemented. That's 3 or 4 customers on average a month. And I should say, it's not easy to provide this information. It's not that the State Farm or the industry are against providing transparency into what's driving rates. It's that this doesn't appear to be something that customers
Summarize.
will do. This doesn't appear to be the solution that the customer's demanding. We recommend the insurance department instead post its own data and its own guidance on its website, advising customers as to what's impacting rates in an aggregate level. And I look forward to continue to working with both the committee and the insurance department to help this land in a good spot. Welcome any questions.
Thank you, Brian, for being here. I don't see any questions, but I thank you for being here.
Thank you.
Mary Eder.
Hi. Thank you so much for this opportunity to testify. My name is Mary Eder, and I'm the Executive Director for the Bristol Adult Resource Center in Bristol, Connecticut. We employ approximately 200 employees, and we are proud members of the Chamber of Commerce, the Central Connecticut Chambers of Commerce. I am testifying today in strong support of HB 5378. We are a nonprofit that receives the majority of our funding from the state of Connecticut Department of Developmental Services. Any plan that can help us save money on our insurance benefits will help us lessen the negative impact of years of inadequate funding. From my perspective as a smaller employer, this is not about cutting corners or reducing protections. This is about gaining access to a purchasing structure that will provide greater stability, access to value-based plan design options, meaningful employer governance, and transparency into claims data. It's about protecting our employees. Many people do not realize that affordable healthcare has a technical definition. Our health plans meet that technical definition of affordable, yet many of our staff cannot afford the premiums. So they go to the exchange, and then we get fined, and we have to try to fight those fines. We fight to show that our plans are in fact affordable, that they meet that technical definition. But recently we lost that fight, even though our plans are in fact technically affordable. For small businesses like BARC, even a moderate stabilization in health costs can determine whether we can expand hiring, increase wages, or simply maintain our workforce. This legislation provides small employers with a responsible, structured option while maintaining comprehensive coverage standards and regulatory oversight. I wanted to help connect the dots between something that is proposed that appears to impact only smaller businesses so that folks realize that it also impacts nonprofits, which then indirectly affects state funding. I respectfully urge you to support HB 5378, and thank you so much for your time and consideration for listening today.
Thank you, Mary, for being here. Can you expand a little bit more about the fines that you were subject to?
So I recently found out about this, that we had some staff that they declined our health insurance that we offer, because we do have health insurance that we offer to all eligible staff, and they went to the exchange. So when you go to the exchange, you're saying you don't have affordable health care, but there's some sort of gap where people don't realize what that technical definition of affordable is, and we make sure that our plans meet that technical definition. Yet somehow someone was able to secure coverage through the exchange, and then it came back to us as the employer, and then we were fined.
Thank you for that. And what was the dollar amount on those fines?
I haven't heard that yet, and I'm probably glad I don't know it yet.
Okay. All right. Thank you for being here. I don't see any other questions. Your testimony is pretty concerning, so I may reach out and talk to you more about that.
I appreciate that, and I'll do some more research on my end. We may be in an appeal process right now, so that may be why I don't know the dollar amount, that it hasn't hit my desk yet.
Okay, excellent. Thank
you.
Thank you for bringing that to our attention. I don't see any other questions. Next up, Kelly Moquette.
Good afternoon, Senator Cabrera, Representative Wood, and esteemed members of the Insurance and Real Estate Committee. Thank you for accepting this testimony in opposition to HB 5378 on behalf of Health Equity Solutions, a nonprofit, nonpartisan advocacy organization, where I serve as a senior manager of policy and advocacy. HES stands with Health Justice Now, a statewide coalition fighting for quality, affordable health care for everyone in Connecticut. We can all agree that we are in the middle of a health insurance affordability crisis. This is a moment to strengthen our health insurance system and stabilize affordability. This proposal does the opposite. It authorizes MEWAs, which are not health insurance and do not meet the standards of comprehensive coverage that Connecticut families rely on. Contrary to the misinformation shared earlier today, MEWAs are not insurance and are not subject to ACA protections for pre-existing conditions. Some exclude maternity care, mental health services, or prescription drugs. Section 3H of the bill requires MEWAs to disclose in bold print. This is not insurance. This is not cosmetic language. It is an acknowledgement that these arrangements operate outside of health insurance regulations. Medical underwriting done at the individual employee level is in no way equivalent to the managing risk at market level. They have been and are being conflated here today. Additionally, in 2025, a federal executive order ended Department of Labor oversight over self-funded plans. In other words, oversight was already inadequate, and the situation is now even worse. The financial risks associated with MEWAs are serious and well documented. The bill requires a minimum reserve of $500,000, a threshold that does not reflect enrollment size, claims volatility, catastrophic exposure, or the health risks of covered populations. A flat reserve gives the appearance of protection, but leaves residents exposed to unpaid claims, delayed reimbursements, or unexpected debt if a MEWA collapses due to mismanagement or fraud. We agree that affordability is critical. This bill is not the answer. Nonprofits with any employees with high health needs, like myself, will not find MEWAs affordable and unexpected health costs like a car crash. Excuse me? Unexpected health costs like a car crash could leave all of a company's employees with no coverage. And yes, there are examples Senator Huang asked earlier, and I'd be happy to share the sources. As of 2016, 41% of self-insured MEWAs had not obtained actuarial opinions about their financial stability, and 14% failed to establish separate trusts for planned assets. There have been hundreds of federal investigations and more than 300 civil enforcement actions involving MEWAs that fail to meet basic standards. MEWAs also do nothing to control prices, so even for healthy employees, the premiums will continue to increase every year. In other words, employees may face lower premiums in the short term, but not in the long term, and they will face the potential of catastrophic financial impact if they get sick or if the MEWA fails. In major cases, participants were left with approximately $83 million in unpaid medical claims. These are not abstract numbers. These are families facing collections, bankruptcy, and
Ma'am,
loss of access to care.
Your 3 minutes is up. Please summarize.
Absolutely. Authorizing MEWAs in Connecticut is like trying to hold back a flood with a teaspoon. It gives the appearance of protection while leaving the underlying risk unchecked and the root problem unsolved. The answer to our affordability crisis is not parallel arrangements that weaken protections and fragment risk pools. The answer is evidence-based policy. Sustainable state subsidies, modeling a basic health program. This bill, Representative Berry and esteemed members of the Insurance and Real Estate Committee, is ensuring that we are studying real evidence-based options, not using evidence that has proven time and time again to bankrupt other states. Thank you for your time. I'm open to any questions.
Thank you. I think the intent of this bill is to address access and affordability. What is your solution to that?
Thank you for that question. The answer to affordability at this time is to do true studies. The concern with this bill is that it seems to propose a study, but also is authorizing MIWAs prior to the study even being looked at. You can also model and look at a basic health plan. Look at state subsidies. ICRAs were introduced, right? Do a full authorization of looking at all options. At this time, it seems like we're putting the cart before the horse. We're not learning from other things that other states have done. And so affordability is a crisis. Health Equity Solutions, Health Justice Now, and tons of other people have echoed those sentiments today.
Thank you. Thank you for that. And I think even with a MIWA, we're not taking any of those other options out. We're just trying to offer another option.
And I appreciate that. What's concerning, Representative Berry, about that is that specifically section or lines 342 to 350 of the bill state that this health benefit plan is not insurance and is not offered through an insurance company. This health plan benefit is not required to comply with certain federal market requirements for health insurance and is not required to comply with certain state laws for health insurance. Your employer shall be liable for such employer's allocated share of the liabilities of the trust under all health benefit plans offered by the trust, as determined by the Board of Trustees. And so what's concerning about the bill language is that while it's supposed to be another alternative, it's holding liable the employers and those small businesses. And so it's supposed to be an alternative that small businesses are supposed to rely on to make it affordable for themselves and for their employees, but it doesn't give them any of the protections or the guarantee insurance that they will need.
Thank you. And I just want to point out that it does comply with the ACA.
So my research, in addition to the Georgetown, Princeton University, has shown that there are limited protections for MIWAs. So they are not fully compliant. They're not required to be fully compliant with every section of the Affordable Care Act. They are subject to many, many, many limitations.
Thank you. Thank you.
Yep.
I don't see any other questions, but thank you for being here.
Absolutely.
Next up, Emily Guillen-Quinto.
Good afternoon, Representative Berry and the members of the committee who are joining remotely. My name is Emily Guillen-Quinto. I am president of the Connecticut Bar Association, or the CBA. We have about 8,000 members across the state. I'm here to testify about HB 5378. First, thank you to the committee for taking up this important issue, for spending the time working on this bill. I know it's a lot of work, just having been participating and lobbying for association health plans for the last couple of years. So I appreciate the attention that you all have paid to this. Consistent with the testimony that you've heard from others today, the cost of health insurance continues to be the single biggest expense for our members. It is also the most unpredictable expense for our members. Half of our membership consists of solo practitioners or firms with 15 or fewer attorneys. Health insurance is the single biggest barrier when it comes to trying to grow their businesses. For that reason, over the last several years, CBA leadership and some of our members have testified repeatedly in front of this committee asking for legislation permitting us to pool our membership for purposes of negotiating with insurance companies to try to get better rates and options for our members. We believe that legislation to this end will assist all small businesses in our state to access more options for themselves and for their employees. Unfortunately, we do not believe that HB 5378 accomplishes that goal, at least for associations of our size and smaller. As currently drafted, we believe it will shut us out entirely of this new option, which means it will also not be available and accessible to associations that are smaller than us. As we read this, the legislation requires sponsoring associations to create self-funded MIWA trusts through which they can sell the health benefit plans to their employer members. The trusts must meet the licensing requirements that apply to insurance companies in this state, which we understand is a protective measure. However, it basically will require sponsoring associations like the CBA to create a new entity, to begin an entirely new line of business, and to comply with a new complex regulatory regime that we don't have experience with and we don't have the funding to comply with. The CBA just will not be able to meet the requirements of this legislation. We are one of the larger trade organizations in the state, but we're not equipped to do this, and we're not equipped to fund it. It appears, and I'm not a subject matter expert, that reserve requirements for insurance companies are, at least of our size, as I read the legislation, again, not a subject matter expert, but it looks like we would have to have reserve requirements of at least $1 million and possibly more, depending on how many of our members were participating. This legislation also expressly requires a bond in an unidentified amount that will be later set by the insurance commissioner. I assume that bond will also be significant, again, as a protective measure, which I understand, but that is something that's going to put this outside of our reach. Even if we could figure out a way to do this and the funding to do this, the additional expenses associated with it would likely cause us to raise our membership dues so much that it could really eat into any savings our members might see from the new plans. It would also detract significantly from our core missions, which have nothing to do with selling insurance.
Your 3 minutes are up. Please summarize.
Thank you. One final point I want to make, and we have some other association members who are going to be testifying this afternoon, is about the fact that the proposed legislation does not include employers with one employee. That's a big barrier to our membership. We have a significant portion of our membership that are solos, which might mean they are the single employee. It might also mean they're just owner employees, and so they would be shut out of this. Thank you.
Thank you. I will take your testimony and bring it back to the larger group and discuss it, because it's your organizations just like yours that we're trying to help. So I want the final bill to help organizations like you.
And again, we recognize that is the intent, and we really do appreciate the efforts. We just don't see this working for our association.
Okay. Thank you. Thank you for that.
Thank you.
Gretchen Rafa.
Good afternoon, Representative Barry, Senator Cabrera, and Representative Wood. My name is Gretchen Rafa, and honorable members of the Insurance and Real Estate Committee. My name is Gretchen Rafa, Chief Policy and Advocacy Officer at Planned Parenthood of Southern New England. Testifying today with comments on Section 4 of raised House Bill 5374, an act concerning health coverage mandates for certain healthcare conditions. As one of the state's largest providers of reproductive health care to over 52,000 patients last year at 14 health centers across the state, we believe all people should have access to the quality, affordable health care as a basic human right, regardless of who you are, where you live, your income, if you have health insurance, or your immigration status. I want to thank Chair Wood for making it clear this morning that bills such as this one was raised and not fully drafted and came out as a study, and that you'll be working on language. We thank you for your commitment on this. And I also want to thank committee members, Representative Ali Brennan and Rep. Nuccio, for working with advocates on improving our state law for fertility healthcare coverage. We urge the committee to amend the bill with language that will be attached to my written testimony later today, which will make improvements to our state law, and which is long overdue, by aligning the fertility healthcare insurance coverage with the medical standard of care based on the American Society of Reproductive Medicine, which clearly includes LGBTQ+ people and single people, among others, so all Connecticut residents have the opportunity to build their family. The reality is, for many people, they require fertility assistance to have children, yet it's often out of reach due to the cost of such healthcare. And because single individuals and LGBTQ+ families are not included in our state's narrow definition of infertility, they're typically excluded from this coverage requirement. And the reality is they require this fertility healthcare to have children. So they're currently paying for coverage that excludes them because of our outdated statute. We believe every individual has the right to full bodily autonomy and the ability to make personal decisions about their body, life, and future, including if and when to start a family. That same section references a study on 12-month hormone therapy coverage. And again, we asked this committee to amend the bill language with suggested language that will be in my written testimony, and ensure all people in Connecticut have consistent access to hormone therapy, requiring that if an insurer covers prescription hormone therapy, they must cover a 12-month supply. There are many medical uses of hormone therapy, including menopause management, managing conditions like PCOS or hyperandrogenism, gender-affirming care, and more. As someone who is currently in need of hormone therapy for perimenopause management, I know the importance of getting my medication and the impact it would have on my health and well-being if there was a disruption or worry about supply shortages. Today, many users of hormone therapy are forced to refill their prescriptions every month, which is a burden on many and increases the odds of experiencing gaps in treatment. Consistency is essential for patients as missed refills can disrupt physical and emotional well-being, create anxiety about supply shortages, and add stress for those balancing work, school, or caregiving responsibilities. So in closing, thank you again for recognizing that more work has to be done with this language, and we will be submitting written testimony with the recommended language. Thank you for your time and consideration.
Thank you, Gretchen, and I look forward to reading your written testimony. I don't see any other questions, so thank you for being here.
Thank you. Have a great day.
Thank you, too. Michael Rogers? Scott Dolch?
Representative, can you hear me?
Yes. Go ahead.
Good afternoon, everybody. Hope you guys can get out with the weather, so I'll try to be quick. Just representatives of the Insurance and Real Estate Committee, my name is Scott Dolch. I'm the president and CEO of the Connecticut Restaurant Hospitality Association. On behalf of Connecticut's 9,100 restaurants and nearly 400 hotels, the association appreciates the opportunity today to testify in support of House Bill 5378. Connecticut's restaurant hospitality businesses, the majority of which are small businesses, are concerned about the rising cost of healthcare and related impacts on our hospitality businesses. This legislation will provide them with lower costs and expanded options, allowing them to offer more comprehensive benefit packages to their employees. By allowing trade associations such as the CRHA to purchase these plans, small employers can achieve economies of scale, negotiate directly with the insurance carrier, implement plan designs that work for their employees, and ultimately achieve cost savings. As you know, the hospitality industry in Connecticut supports more than 170,000 hospitality jobs and contributes more than $21 billion to our state's economy. These businesses are the backbone of local communities throughout our state, but they don't have the buying power of larger corporations, making it difficult to offer affordable health care benefits to their employees. This legislation strengthens competition and encourages innovation within the healthcare marketplace. By expanding access to association health plans, small businesses gain the opportunity to purchase coverage options that better reflect their specific workforce needs and operational realities. Greater flexibility allows employers to make thoughtful, informed decisions about healthcare benefits while continuing to prioritize the well-being of their employees. Association health plans also provide small businesses with the advantages of collective purchasing power, potential self-funding opportunities, and access to broader, more competitive coverage options. Our association believes House Bill 5378 is an important step toward creating a more level playing field and ensuring greater fairness for small businesses navigating Connecticut's health insurance marketplace. The hospitality industry continues to deal with rising costs of labor, food, rent, credit card fees, and more. Healthcare premiums and plans are out of reach for most of these businesses currently, but we hope Connecticut can change that through this legislation, giving small businesses in our state and their employees the help they need and deserve. Thank you for your time, and I welcome any questions.
Hi, Scott. Thanks for being here. I have a very important question. Are you in a restaurant or in a retail store?
I am actually in a mall in Stamford. We had an event this morning with 60 hotel and restaurant operators and Mayor Caroline Simmons. I'm actually in the Hay Stamford retail store doing a podcast talking about incredible Stamford and all that it has. So PJ is with me here and just getting ready to finish my podcast. So what better way than supporting, local tourism here with these sweatshirts behind me for some Stamford merch.
I love that. I think you win the award for best background. So thank you so much. And I know that you're here not just on behalf of the restaurant hospitality industry, but for retailer and others and all the small businesses across the state. You have been with the coalition to support this for years. We hear your needs. We hear your drive for increasing healthcare costs amongst your members, and we want to work with you to make sure that we can do everything we can to provide a difference. So thank you so much for your testimony.
Thank you, Representative Wood. As always, we appreciate you guys continuing to move this forward, hopefully out of the committee. And we know, it is one of the probably all the calls I receive every day in recent weeks, as you can imagine, with healthcare premiums and re-upping. These conversations are getting louder, and any way that we can help that at a state level is so critical.
Thank you. Thank you. We appreciate that. All right. Take care, Scott. Next up, we have Bruce Adams.
Well, I would vote for Scott's background over mine, that's for sure. Greetings from a Marriott in Washington, D.C. You can tell it's an appropriately bland background. But in any event, my name is Bruce Adams, and I'm the president and CEO of Connecticut's Credit Unions. And in the interest of time, with the committee's indulgence, I'll skip the formalities and jump right into the argumentation. I'm here today to support House Bill 5378 in favor of MEWAs and the feasibility study. This bill represents the latest chapter in a multi-year effort to end an unfair regressive tax on small businesses. The simple fact is that, at least for credit unions, this model is both workable and sustainable. Listening to earlier testimony, we hear not a single example of a MEWA that failed and the reasons why. In our industry, one need only look a couple hundred miles north to Maine or farther out to Montana for successful MEWAs that work with credit unions. So why has the opposition not discussed or let alone acknowledged that these things are successful? The answer is because they don't want them to be successful. And the issue is that these particular MEWAs have survived and avoided the parade of horribles that have been marched through this committee for years. In short, the oppositions want us to watch them shadow box a paper tiger. They tell us we should be scared of MEWAs in Connecticut, but neither do they provide examples of failed MEWAs, nor do they explain away the fact that they're already working and thriving outside Connecticut. Both the prices and the costs of healthcare are spiraling out of control, and our American system is broken. This committee does not need any more testimony on that point. This committee has also heard small businesses from every corner of the state and across industries beg for relief. The need for a new choice is well established, and this choice has been vetted and debated at the committee level long enough. Opposition to this bill, in all its forms it has taken over the years, has taken many twists and turns. We've seen misinformation and fear-mongering campaigns. We've seen everything from childish antics to ad hominem attacks. We've heard harrowing tales of the failure of Reagan-era association health plans. We've been told that these plans are an invitation for fraud. The opposition is hot and fierce, and yet it has remained remarkably narrow. Despite it all, this bill and others like it have enjoyed broad bipartisan and bicameral support. And until now, the opponents have deftly obscured the fatal hypocrisy on which their opposition rides. For all the outrage and fear about MEWAs that they lay at the feet of small businesses, our largest self-insuring employers have escaped the same criticism. The time has come to look past the manufactured outrage and fear-mongering. The time has come to stop forcing Connecticut's small businesses to pay a regressive tax to shore up the insurance exchange. As always, Connecticut's credit union stands ready to work with the committee and any other stakeholder on these bills to arrive at common sense changes that primarily protect the consumer while minimizing burden on the credit union. Thank you, and I'll take any questions.
Thank you, Bruce. You were the one that introduced me to the credit unions in Maine that had successfully run the MEWA about 4 or 5 years ago now. I was wondering if you can elaborate on how that MEWA is doing.
The MEWA is doing great. And when their executive director, Kim Daigle, testified a couple of years ago, she had somewhat recently, I think in the prior year, offered a premium holiday to the members. And that's because of sound fiscal management and efficient management of reserves. The MEWA in Maine, and by the way, I'll say that the MEWA in Maine and the Montana MEWA are happy to meet with this committee and show and talk about why they are successful and how they have avoided the challenges that the opponents would have you believe are right at our doorstep. Maine requires 3 months of premium and a 3-year agreement to stay as a participant on the plan. So, and joint and several liability for all of the testimony you've heard earlier is not a bad thing. When you're in it together, you support each other. That's the whole idea of insurance, to pool your risk. Sometimes you got to pay, sometimes you get paid, but at least those amounts are less across the pool. And so, yeah, the Maine worked with the Department of Financial Regulation. Maine worked with stakeholders, built a trust that works, and their participants are very happy.
Do you know how many members they currently have?
I don't know currently. I know they started with 500, and that was an important number. They needed 500 covered lives.
Great. Thank you very much for your testimony. We appreciate you taking time out of your schedule of travel to be with us.
That's my pleasure. Thank you.
Thank you, Bruce. And we have Senator Wong. I'm sorry, Bruce, you didn't get off that easily. Senator Wong wants to.
You're not getting off that easy, Bruce. Thank you very much.
Bring it on, Senator. You have a better background than I do.
Well, we have snow. So, hey, thank you for the testimony. Thank you for your leadership on the credit unions. We've heard a lot of the challenges, and you've attested in the past number of years with this committee on MEWAs. But what this committee's leadership did do in this bill was, we're not saying that MEWAs are the only way. We provided an opportunity to do a study in regards to the partnership plan, to really have transparency, accountability, and break it down from a standpoint of the partnership plan that's been in effect for many years, where many of our municipalities and Board of Educations have bought into the program and had to live with some of the rate changes and the discrepancies in regards to care and all that it's been promised to be the initial years, and now being subsidized in many ways by taxpayers in appropriation. So one of the things we wanted to do is healthcare costs for your members and your credit union customers are important. They're unaffordable. What this committee through this bill is trying to do is we're trying to provide real solutions and not just beat down one way or the other. That if we could get a combination, working with the administration, working with the bicameral and stakeholders that are clamoring for some relief, talk a little bit about how we structure this bill to say it's not just MEWAs. This could be a solution. At the same time, why don't we do a study, look at the application of the partnership plan and how that's worked, and really evaluate how we can get the best of all the essential components to provide solutions, because that's what we're looking for.
Senator, if I could just replay what you just said, I would align myself with that comment and say nothing more. You're 100% right that Connecticut needs to look at what the options are, what the potential feasibility of these options are, and roll them out. It is time to let it out of the committee room. And you know, as passionate as I was in my testimony, I want to be very clear that I am not advocating for Association Health Plan, MEWA, and that's it. I'm advocating, just as you are, to provide workable solutions for Connecticut small businesses who are suffering to compete for talent. They're suffering to compete in the marketplace against larger single employer self-funded companies. And that's just not fair on a business angle. And you're right that certain populations may need to come into the state's plan. Certain populations may find that a MEWA is the more workable solution. I think about my industry. You know, we don't have as much money as the banks. I wish we did, but we got money, right? So we can reserve, we can put up capital reserves, and we've got regulators to, you know, crawl up and down and inside our books all day long. I'm not worried about going insolvent if I have a credit union MEWA, because all my finances, by the way, are on the internet. You can look at the tax return of every credit union, and you'd be able to look at the tax return of the credit union MEWA trust. So I don't see the risk here. But another industry is different with respect to its cash position. And so they need to have maybe a different choice. So I absolutely respect and align with your comments and your policy position here.
Well, Scott, the frustration I have is when we did roll this out with your leadership and Scott Dolich earlier in regards to restaurants, hospitality, it's about jobs. It's about businesses. Right. You and your credit union lend money to help businesses succeed. It's a frustration in regards to you're not listening to the very people who says, look, I don't care, Democrat, Republican, I just want relief for my businesses so I can recruit employees, I can retain them, I don't have to make choices that we've heard because it's a struggle. But nevertheless, how could you ignore the voices of so many of the stakeholders who is not wearing a party label and saying we want solutions?
That's right.
It baffles me to say, what is the worst thing to implement something after we scrutinized it and deliberated over it? We passed other bills in much more expedited emergency certified sessions than we have done to MEWAs. But nevertheless, I think maybe you can frame it better for me as I come back to you to say, I'm befuddled by this. What could be the cause of being so obsessively against MEWAs?
Yeah, I agree with you. I think that the fundamental hypocrisy here is that the health insurance exchange is in deep and dire trouble. And what this narrow slice of legislators who have doggedly protected it is all about is just that. It's not about racial disparities in health equity and outcomes. It's not about solvency. It's not about any of that. Those are all paper tigers. And I'm not saying that there's not historical underpinnings for these arguments. There are failures out there going back to the Ronald Reagan era. 100% true. Nobody's disputing that. But this bill that has boiled in the legislative cauldron in Connecticut for years now has survived and is strong enough that it has now become a viable option. And if the insurance exchange is really at risk, then perhaps all of that sound and fury ought to be leveled at the exchange and finding fixes to make it sustainable. But don't put a regressive tax on our small businesses. That's crazy. It's bananas.
Well, I will throw back the compliment that I couldn't have phrased it any better. And I want to thank you for testifying. I want to thank the others that have spoken out from the business community, talking about jobs and businesses and the affordability that is so critical. And we talk on both sides of the aisles about it. But this is a regressive tax that really hampers small businesses that are looking to survive, if not, if possible, to think about growing, which is essential. So thank you very much for your work. Thank you to your member organizations. I appreciate it. Thank you, Madam Chair.
Senator Wong, may I make one quick follow-up comment? I know there's ice out there.
Absolutely.
I just wanted to, for the committee's edification, I do this all the time in the banking committee, but understand with respect to credit unions, two things. One is we are cooperative businesses. So the profits that we make get redistributed to our members, and those dollars go on the streets in our local communities. So every dollar we can save stays in Connecticut and is served for the right purpose. And secondly, when we think of credit unions, I think if memory serves, our average head count at a credit union is 8, and our average asset size is under 50 million. So we know what it's like, even though we have money, we know what it's like to be a small business and struggle to compete for talent in this marketplace. Thanks, Senator.
Thank you, Bruce. Thank you, Madam Chair.
Thanks to you both. We appreciate it. Next up, we have Nick Karapasis.
Thank you. Senator Cabrera, Representative Wood, Senator Wong, Representative Pavlak-D'Amato, and members of the committee. As you just heard, my name is Dr. Nick Karapasis. I'm a DC licensed and practicing in our state, and I serve as president of the Connecticut Chiropractic Physicians Association. I want to take a moment to address a couple of critical issues harming providers and patients alike. One is insurer clawbacks of payments, and second is the pre-authorization process. First, the clawback problem. As you know, we treat a patient, submit a claim, and receive a payment, and then we get a notice that an insurer has chosen to claw back some amount out of a current reimbursement check because of a decision around the care of another patient from up to a year and a half prior. This is done without clear explanation. Follow-up calls generally go unanswered and funds are already gone. Worst of all, we then have to track down the patient whose insurance approved and covered the care and tell them that they now owe for services completed long ago, over a year after successful treatment. It creates a financial shock, it disrupts their recovery, erodes trust in healthcare and physicians, and it tears into family budgets. Beyond that, small practices like mine face chaos too, and it really threatens our ability to serve our communities. Keep in mind, providers have to submit claims ourselves within tight, timely filing windows, often between 90 and 180 days. Yet insurers can claw back payments up to 18 months later, blindsiding patients with surprise bills long after successful treatment. HB 5377 shortens this window from 18 months to 15 months. SB 341 improves it to 12 months. We urgently need either one of them, but we strongly prefer the 1-year limit to protect the patients from belated surprise bills. Second, pre-auth, which is marketed as cost saving but often delivers the opposite. For certain procedures, insurers demand prior approval, overriding the judgment of the doctor who examined the patient firsthand. Desk reviewers with no clinical relationship will second-guess evidence-based care, forcing redundant paperwork. And endless phone tag starts happening in unjustified denials. In reality, it delays treatment, prolongs pain, extends recovery, spikes up need for emergency room visits, and drives up overall healthcare expenses, even opioid usage. It doesn't drive savings. Patients end up languishing while we justify the medically necessary instead of insurers themselves having to prove through evidence-based means why it should be denied. Section 6 of SB 342 corrects this by shifting the burden to the insurers, restoring trust in clinical expertise, cutting waste across the healthcare spectrum, and speeding relief to patients in pain. On behalf of our association, the Connecticut Chiropractic Physicians Association, I urge your support for the bills. Thank you. I appreciate your time, and I'd be pleased to answer any questions you might have.
Thank you very much. We had a lot of discussion on this bill already today, so I'll let you get off free. Thank you very much for your testimony.
Thank you and appreciate it.
Thank you. Next, we have Daniel Lent.
Looks like he's not on.
Okay. Constanza Segovia.
Not on as well. Not on as well.
Kurim Gunim. Jennifer Morfea. Wen-Hugh Han.
Hi, I'm here.
Okay.
I'm here.
We'll get to you next. Thank you. Okay, you are on.
Can you hear me? I'm here.
We can hear you. Okay, we'll come back. Wen-Hugh Han, you're up. Thank you.
Good morning, can you hear me? Okay, perfect. Good afternoon, my name is Ni Nguyen, and I'm a P3 student at the University of Connecticut, and I currently work at UConn Health John Dempsey Hospital.
Hi, my name is Wen Hui Yan. I'm a third-year pharmacy student working at Walgreens Pharmacy and New Haven Hospital. While I appreciate that raised bill 5375, Section 7, acknowledges pharmacists' compensation as an issue worthy of examination, I respectfully recommend that the legislature move beyond a study and adopt clear reimbursement language in the Insurance Committee's work group report that was finalized in January 2026. Specifically, insurers shall not deny payment for covered clinical services solely because they are delivered by a licensed pharmacist acting within their scope of practice, when those same services are reimbursed if provided by another healthcare professional. This approach does not expand the scope of pharmacist practice, it simply aligns payment policies with existing workforce realities. As someone who works in a community pharmacy, I see firsthand how pharmacists provide far more than dispensing medications. Pharmacists has capability to administer vaccine, adjust HIV and influenza testing, prescribe contraceptives, and counsel patients to ensure that the treatments are safe and appropriate. During the COVID-19 pandemic, pharmacists demonstrated how quickly we could expand care. Payment reform would have allowed the same accessibility to be applied to chronic, diverse management and preventative care. With more than 600 community pharmacies statewide, we are often one of the most accessible healthcare professionals, especially in underserved areas. Ensuring fair reimbursement is not just about current practice, it's also about retaining the next generation of pharmacists in our own state. I will now turn it over to Nee.
For students like us that are about to make decisions on where we build our careers, reimbursement and recognition matters. Pharmacy students undergo 6 years of extensive training to learn how to manage chronic disease states, prevent medication errors, and improve patient outcomes. So I have to ask, why would we choose to build our careers in a state where the payment reform does not recognize the care we provide? Why should the exact same service be reimbursed when provided by a physician or nurse practitioner, but denied when provided by a licensed pharmacist acting within their legal scope of practice? Connecticut is currently only one of 4 states that does not have any legislation concerning reimbursement for clinical services. With surrounding states like New York, Massachusetts, and New Hampshire all having legislation that provides pharmacists reimbursement, there's little to no incentive for students to choose to work in Connecticut where we're not recognized for our clinical expertise. HB 5375 Section 7 does not change what pharmacists are allowed to do. It simply ensures fairness in reimbursement. Empowering pharmacists to practice at the top of their licenses strengthens access to healthcare and improves outcomes. In the long run, it would ensure Connecticut remains competitive at retaining and attracting talented pharmacists. Passing this bill would send a clear message that Connecticut is willing to invest in and values patient access to healthcare and better health outcomes. We thank you for this opportunity to provide testimony in HB 5375, and we thank you for your support.
Thank you both for being here. And if you didn't hear earlier, we ran out of time when drafting the bills, so we will be putting forward the full recommendation. So I didn't want to have you thinking that we weren't going to do that. So we are, and we do think you guys do provide an amazing service and should be compensated for that. And we learned wonderful things during the working group with many of your colleagues sitting on. So we want you to stay here. We want you to build your careers here, and we appreciate you so much coming and testifying in front of us.
Thank you so much.
Thank you.
Can you please both state your names for the record?
My name is Wen Hui Yan.
And my name is Nee Nguyen.
Thank you.
Thank you. Dr. Guman.
Thank you, Representative Carey, Representative Wood, and distinguished members of the Insurance and Real Estate Committee. My name is Khurram Guman. I am the past president of the Connecticut State Medical Society, and I'm here on behalf of the physicians and physicians in training of CSMS. I'm also a private practice family physician serving a largely rural Connecticut community. Section 4 of the Senate Bill 342 addresses a growing and deeply troubling practice, the use of algorithms and artificial intelligence tools by health insurers to automatically downcode physician claims without meaningful clinical review. As a primary care physician, evaluation and management services are the foundation of what I do every day. My patients can be complex. In a single visit, I may manage diabetes, heart disease, asthma, and depression, while reviewing labs, adjusting medications, coordinating specialist visits, and counseling families. These are time-intensive encounters, and when an insurer's algorithm automatically reduces a properly billed and fully documented level 4 or level 5 visit before payment is even issued, that is not a minor administrative adjustment. It is a unilateral payment reduction imposed without transparency, without accountability, and without a human ever reviewing the clinical documentation. In a small independent practice like mine, we do not have departments dedicated to contesting insurer decisions. My staff is already stretched to the limit dealing with administrative burdens such as prior authorizations and step therapy requirements. We do not have the capacity to appeal large volumes of downcoded claims. Every appeal takes time away from patients. The reality is that many downcoded claims will go unchallenged because we simply don't have the staffing to fight every single one. Over time, systemic claims, underpayments, undermine the financial stability of medical practices, especially in rural communities. When revenue is repeatedly and automatically reduced, practices cut staff, limit services, seek mergers, private equity, or close their doors. When a medical office closes in a rural town, that access does not reappear down the street. It just disappears. Let me be clear, we are not saying improper billing should be ignored. True outliers do exist and should be addressed. However, insurers already have audit tools and established recoupment mechanisms to deal with those situations. Systemic automatic downcoding flips the presumption and treats every physician as suspect, guilty, until proven innocent. That is not a fair system. Section 4 is a measured reform, and we urge this committee to pass it. And just a quick comment on Section 6, we support the intent of establishing a rebuttal presumption that services ordered by a physician are medically necessary. However, the tiered network language introduces confusion and should be removed to ensure the policy achieves its purpose. For any additional comments on the Section 6, we submitted a full written testimony, and I want to thank you for your time, and I'm happy to answer any questions you may have.
Thank you very much for your testimony. We did have a lot of dialogue back and forth with your colleagues, so I don't see any questions at this time, but we're very grateful that you spent your time today to testify in front of us. Next, we have Jeff Gonzalez.
Hi there.
Hey, Jeff, you're up.
Hi, good afternoon, chairs, ranking members, and members of the committee. My name is Jeff Gonzalez, and I'm the owner of the Modern Woman Health and Wellness Center in Wolcott, Connecticut. We are a small independent healthcare practice providing gynecological care, primary care, medication management, and mental health services to women throughout Connecticut. I'm here today in strong support of HB 5378. As a small employer, health insurance is one of the most difficult and most unpredictable costs we face. We were recently quoted at very extremely high rates, and those rates increases when my employees, staff, and children were included. At those prices, offering health insurance is just simply not realistic for a small private practice unless I cut staff, reduce hours, or even reduce our services, all of which directly goes against our mission. Furthermore, recruiting and retaining providers under these conditions is also extremely challenging. We have grown and I hired our next provider, and it took me 44 interviews before I found a qualified provider who was willing to work without health insurance, or they have it already from their spouses. I'm grateful that she joined our team, but I live with this constant state of concern that any larger hospital system could offer her these benefits that I just can't compete with. And if that happens, it's going to disrupt our clients' continuity of care for our patients and also destabilize our small practice. This issue is also very personal. My wife is a healthcare provider, and together we built this clinic from the ground up to serve our community. And right now, neither of us has health insurance because of the cost. Before this, I served as a police officer for the city of Hartford, and we both dedicated our lives to public service. I feel like we've done everything we were supposed to do. We worked hard, we built a business, we employ local residents, yet affordable coverage remains out of our reach. We also see the consequences of this of the system every day. Many of our patients can't afford the health insurance and must pay out of pocket for essential medical and mental health care needs. And we do absorb these costs with a structural fee with low out-of-pocket costs. Again, our goal is to serve as many people as we can. HB 5378 offers a responsible solution. It would allow small businesses to band together and get access through a shared larger structure, creating a more stable cost and greater purchasing power. This would help not only our healthcare practice, but those businesses around me, while also retaining more providers and preserving access of healthcare to the clients that we serve in our community. Without an option like this, independent practices such as ourselves will continue to struggle. Yep, we'll continue to struggle. And I respectfully request that you folks support the 5378.
Jeff, thank you so much for coming today and testifying in front of us. We really appreciate, hearing how you're running your business and the need for having this bill. We're going to continue to try to move this forward, and thank you for reading the bill and referencing how it will pool risk and help you with lower cost regarding health insurance coverage, and we'll continue to work together to move this bill forward. Thank you.
Thank you.
Next, we have David Moore.
Chairwoman Wood, Vice Chair Berry, distinguished members of the committee. My name is Attorney David Moore from Simsbury, Connecticut, and I serve as Secretary of the Connecticut Bar Association. While the CBA has not formally adopted a position on HB 5378, it has encouraged members to speak because affordable health insurance remains a persistent and serious problem for small businesses across our state. Small businesses represent more than half of Connecticut's business entities. Within the CBA, nearly 70% of our members practice in firms of 6 lawyers or fewer, or as solo practitioners. My testimony today is not about special treatment for lawyers. It's about ensuring that a significant segment of Connecticut's small business community has access to sustainable, affordable health insurance. HB 5378 is a meaningful start. However, it does not go far enough. First, solo practitioners and single-member entities are excluded. These professionals are small businesses in the truest sense. They shoulder the same costs as other employers, but not with the benefit of scale. Excluding them leaves a substantial portion of the small business community without relief. Second, the bill's reserve and bonding requirements effectively prevent associations like the CBA from facilitating pooled coverage for their members. Requiring $1 million in reserves and additional bonding obligations forces professional associations to function like insurance companies. For most associations, that is financially unrealistic and defeats the purpose of enabling pooling mechanisms that could lower costs. I have practiced for 37 years in small firm and solo settings and have represented many small businesses. Health insurance is consistently one of the largest overhead expenses. When that cost increases, businesses must absorb it, reduce benefits, or pass it along to consumers. In the legal profession, when overhead rises, hourly rates rise. And when legal fees rise, access to justice declines. Middle-class individuals and small businesses are priced out of legal representation. Courts become less accessible. Disputes go unresolved or are handled without counsel. That is not a healthy outcome for our civil justice system. If HB 5378 were amended to include single-member entities and to permit bona fide professional associations to facilitate pooled coverage without insurance company level reserve requirements, this bill would become a far more effective solution. Given the continued volatility in the health insurance landscape, it is critical that Connecticut take a practical, forward-looking approach that truly supports small businesses. HB 5378 is a start. Thank you for your time and your consideration of this important issue.
Thanks, David. How many members in the Connecticut Bar Association?
Well, as President Jean Quinto previously testified, around 8,000. It's probably closer to about 7,500 right now.
Okay. So the levels for the bonding and all of that good stuff and the reserves is to make sure that there's a solvency requirement in there, and I think 7,500 or 8,000 is probably on the lower end of the associations that we've been working with. So perhaps we could make adjustments or talk about sizes and what that solvency requirement looks like. So we'd be happy to work with you on that. And I think that you guys made a great point on solo practitioners. Sounds like there's a lot working out there, and we want to make sure that they can be part of an association coverage. So 2 great points. Happy to work with you on those changes.
And Madam Chair, I would also note that I've been a part of the exchange for years. I have a pre-existing medical condition. I've had 4 heart attacks. It's really hard for me to get insurance outside of what we have with the Affordable Care Act or with anything that we have here in Connecticut. My premium just went up 110% in 1 year. That is death for most small businesses. And it makes practicing law in Connecticut a lot harder when you can't afford basic things like insurance coverage. So anything that this committee can do, anything that the legislature can do, will be a move forward. And we thank you for the efforts that you've made thus far.
And we do believe wholeheartedly, you know, hearing your testimony, hearing other small businesses, like, we do believe that this just creates another option for people. If you want to stay on the exchange, you can stay on the exchange. If you want to stay on any other plan that you're on, you're welcome to do that. This is not making anyone choose a MIWA, but we just want to have the MIWA as an option out there for people. And so that's really all we're looking to do. We think that creating more competition in the marketplace, competition helps lower prices. So, you know, this year we're starting a MIWA. Next year we could do something different. The year after that, we can bring more players on the exchange. I think all of these things work together. This is not the silver bullet that's going to solve everything. It's just an option that we want to give people like yourself.
I understand that, and the Bar Association understands that as well. The Bar Association is really trying to do something to help its membership be able to continue to practice efficiently, economically, and effectively. When we're constantly barring the door against the bill collectors, you can't do that. So anything that you guys are able to do is of great help and is greatly appreciated.
Thank you very much.
Thank you, Madam Chair.
Okay, next up we have Nandita Ruchandani.
Thank you, Madam Chair, for having me and for saying my name perfectly. Thank you, members of the committee, for allowing me to testify. My name is Nandita Ruchandani. I have practiced law in Fairfield, Connecticut since 1996. I was a solo until I joined KPPB Law as of counsel in 2023. That becomes important later. I'm currently a member of the House of Delegates and several other CBA committees. I've also served 2 terms as past president of the South Asian Bar Association of Connecticut. As a solo for the vast majority of my career, I have had the ability to access good insurance for myself and my employee as an employer. However, even that insurance was conditioned upon my having a W-2 employee. I generally had one employee, and in order to keep that insurance, I paid their insurance premium in full. There was no sharing. It was a cost, it was a high cost, but the insurance was really good. After the advent of the ACA, the employee requirement changed, and small businesses were required to have at least 2 employees to qualify. My business was covered under the previous regulations, and I kept that going through 2023. When I joined as of counsel, I had to put my employee on the payroll of KPPB Law for malpractice purposes. That left me unable to continue with my employer plan, even though I loved it, because I no longer had the employee. I was not considered an employee of my own business. As a true solo in my firm, I was then not able to get business insurance and so forth, and I had to use the exchange. This is a lacuna in the proposed bill, which I know you've heard about multiple times today, and we appreciate you taking the message, that we need to include true solos and solopreneurs in these programs. In the couple of years that I was on the ACA, my premiums rose and my options for plans declined. I would no longer can find a PPO, forget a platinum plan. It doesn't exist anymore. At the expiration of the enhanced subsidies last year, my proposed premiums doubled. And for me alone, that would have been 150% of my mortgage payment. This is simply unaffordable. Allowing the CBA and other trade associations to aggregate us as their members and to negotiate as a large employer would greatly increase our bargaining power. And for context, I did provide insurance for my employees from 1997 to 2023, so I have seen the real life impact on hiring. The costs have risen exponentially over the years, and the offerings have gotten less and less benefit rich. As such, the CBA is coming to you to say, please help us. We are creating jobs, we are sustaining jobs, and we cannot always have 2 employees in order to have better options.
Your 3 minutes, please summarize.
Yep, HB 5378 is a start, and we appreciate you taking into consideration all of us solos. Thank you very much for your time.
Thank you, Nandita, and I appreciate your feedback on how to improve the bill and make sure that we're encompassing all the people that are in your business. So I appreciate those suggestions, and we'll definitely take them into consideration moving forward.
Appreciate it. Thank you.
Thank you. Next up, we have Dr. John Satterfield.
Chairman Wood, distinguished members of the Real Estate Committee, thank you for the opportunity to comment on Senate Bill 342. My name is John Satterfield. I'm a physician anesthesiologist and represent the 500-plus anesthesiologists of the Connecticut State Society of Anesthesiologists. Automatic downcoding is a significant issue and negatively impacts care in our state. I applaud this committee for beginning to examine the inappropriate and unethical systems that insurers are using to reduce coverage and payments to physicians. As part of this coding discussion and the unethical behavior of insurance companies, I want to make you aware of an issue specific to anesthesiology. All other medical specialties have a range of codes that they can utilize based upon complexity of care. Anesthesia codes do not have a similar structure, but there is a system specific to us known as modifiers that do identify the delivery of complex anesthesia care. These modifiers are designated as PS and QC. Those acronyms stand for physical status and qualifying circumstances. As you can see, certain health insurers no longer provide payment for PS and/or QC modifiers. This policy change positions insurers who have no clinical responsibility for patients as the decision makers for how anesthesiologists manage medically complex patients, and that's not acceptable. The assignment of a PS class is a clinical determination made by an anesthesiologist and identifies increasingly complex patients. For example, a patient with a physical status score of 3, you can see here, physical status score of 3, will have severe systemic disease that restricts activity, while QC modifiers identify extremes of age and emergent situations. PS and QC modifiers appropriately convey the need for complex and intensive anesthetic care required by certain individual patients and should be recognized by all insurers. Last year, it was a proposed cap on the time necessary to provide individualized anesthesia care. This year, it's a refusal to recognize the complex care certain patients demand during an anesthetic. Please address what is just another example of an unethical policy utilized to ensure non-payment for individualized anesthetic care. Thank you very much. And let me just say, I appreciate the fact that both of you are here in person today with our bad weather. Thank you.
Thank you so much, Dr. Satterfield. And are you referencing a bill?
Yeah, I referenced SB 342 and the downcoding that was occurring there.
Okay.
And it was just that our issue was also specific to coding, so that's why I wanted to introduce this concept.
Okay, and are we helping with this in any of these bills, or do we need to do additional language?
Senator Gordon has introduced legislation to address this very specific issue.
Okay, in our committee or in a different committee?
In his, but I wanted you to hear it also.
Okay, thank you for that,
Yeah,
because I
thank you
was
very
just,
much.
you're
Yeah.
just filling us in on something
Yes,
that we haven't
I
heard
am.
a lot of
Kinda-
today.
Yeah, I appreciate your time.
And do you know why, like, why this is going on? I mean, why are the anesthesiologists getting targeted? Is there some, when I hear this, I'm assuming that there is some sort of taking advantage of the code, in order to get charged more. And then there's hey, the anesthesiologists are getting reimbursed at a level they shouldn't be at, so we need to change our policy. Is that how it's going?
I wish I knew the answer, Chairwoman Wood, and I don't. It baffled me last year when they tried to cap, our time. And again, this is very surprising that they've done this and not allow us to submit our billing, which we typically do. And as you've heard other physicians testify today, they have codes that identify complexity of patients, and they're paid for those, and we are not when they eliminate our ability to use modifiers.
Okay. Thank you. This has been very informative.
Thank you. And I have much more information in our handout. And I sent a revised issue or a revised document in with a little more information. So you'll have all the information.
Great. That will be posted on our website. Thank you so much. Okay. Next up, we have Eric George.
Well, I'm not going to lie. I have a little bit of prop envy right now, so you have me. There's no easel. So thank you, Representative Wood, Representative Berry, members of the Insurance and Real Estate Committee. My name is Eric George. I'm president of the Insurance Association of Connecticut, here to offer testimony on two bills. The first is House Bill 5373, which is the Insurance Department's recommendation, specifically Section 7. And I want to draw your attention to Mr. Brian Shoemaker's testimony from State Farm earlier. It was excellent. And you have my written testimony. I just want to bring up a few points. The bill, or that section, is very similar to legislation that was passed in the state of Washington. It follows guidance that was approved by the NAIC. A couple points. It was very controversial at the NAIC. Industry, this deals with providing detailed, granular information as to auto and home cost increases. Industry was very concerned at the NAIC level that the benefits would be far outweighed by the amount of cost and resources necessary to achieve these goals, Phase 1 and Phase 2. It is not a model act, it's not a model bulletin, it is guidance. What I was very encouraged to hear from the commissioner, who I hold in very high esteem, is his interest in working collaboratively. That I share with him. I want to work collaboratively with this committee and the department towards achieving both of our interests in providing customers with the correct information. In Washington, when Phase 1, which is what I'll say, it is dependent upon a policyholder asking for the information. The uptake in auto was 0.01% of policyholders made that request. And in home, it was 0.018%. Why this is so costly is that it is often has to be done manually. So there are no systems in place to do this other than doing it manually, and that takes a lot of money. Also want to focus, I know I have limited time here, on House Bill 5375, which is this committee's recommendations of all the working groups that you have put together. I want to first start out by applauding this committee for putting in these working groups and to thanking you on Section 3, which would, over a 5-year period, phase out the payment of the operations for the Office of Health Strategies from the insurance fund to the general fund. I was with you doing much of the work a couple of years ago, analyzing what has been placed in the insurance fund over the years. And just as a reminder, it is your domestic insurance carriers that are assessed to pay for the insurance fund. So when programs are placed inside the insurance fund, it only impacts your domestic insurers, and that acts to raise premiums and rates for their policyholders. This is an excellent direction that this bill is taking to phase that out over 5 years. We want to applaud you. And also, we wanted to say thank you for what you have done in Sections 4 and 5. dealing with the nonprofit service providers and the issues that they have had in liability insurance. We think that the studies on pooling and captives will go a long, long way. And then finally, we want to thank you strongly on Section 6. And this is the direction of the Department of Insurance to study TPLF and other litigation cost drivers in insurance premiums. We think that it is an excellent task to look at. I believe it was one of the trial lawyers who wanted to broaden the inclusion to perhaps include the Judiciary Committee. We would be agreeable to that. We think that the more analysis that goes into something like that, the better. But having the conversation start, I think, is a great beginning. So I'm happy to answer any questions. Again, you have my written testimony, and I appreciate all of the hours that you've put in today.
Thank you, Eric. I do have a question on the Insurance Department's bill. When the Commissioner and the Deputy Commissioner were testifying on behalf of that, I did bring up the letters in opposition, and their response was that this is an affordability measure and that it would reduce cost to consumers. And it sounds like that's the opposite from what your testimony is.
I think we need to have, I would need to have that conversation with the Commissioner, because that does sound interesting, because the amount of money that would go into performing these tasks would not be insignificant. So I would say it's a disclosure measure 100%. I'm not sure I would view it as an affordability measure, but perhaps that's something that if I got a better understanding of where he was going with that comment, I would have a better way to react to it.
Yeah, let's try to work on that offline.
Yeah, and I was really encouraged because he is open to working together on this with you, members of the committee, with the insurance industry, and I think that's a terrific mindset to have when going forward with something so major.
Mm-hmm. And on the working group recommendations, the insurance fund assessments, I mean, we've heard the whole day here on everyone having difficulty affording health insurance. I mean, we could literally save people thousands of dollars by implementing the working group recommendations. And, it's paying for a department that doesn't have anything to do with insurance and other things. We, in the very least, are asking for, as OHS is being disbanded and being spread out through other state agencies, I mean, those costs for the staff should not be assessed on health insurance plans.
I could not agree with you more. I think that that is exactly as OHS is dissolved and those operations are transferred to the Office of Policy and Management, to the Department of Public Health, that they are borne by the general fund. That is the proper way to take care of it. OHS was created for the benefit of all Connecticut residents. It wasn't just for the benefit of certain Connecticut residents. As such, the cost should be spread across the largest base, and that is through the general fund. We know why certain programs, including OHS, was removed from the general fund. It's because we were in lean years. We weren't having surpluses in our state budget. We were having annual deficits, significant deficits. So there was scrambling to find dollars. Well, because of much of the responsible budgeting that this legislature has done and our governor has done, you are no longer in those positions. You have shouldered economic downturns better than most states. That is because of strong fiscal responsibility. I think it's high time to be intellectually honest with how you pay for certain programs and operations. Pay for them via the most appropriate fund, and that is the general fund.
Mm-hmm. Yeah, in agreement on that. Thank you so much. Any other questions? Great. Thank you, Eric.
Thank you.
Okay, next up, Jill Kleber.
Looks like Jill isn't here.
Okay, Santina Conforti.
Hello, good afternoon, chairpersons and members of the Insurance and Real Estate Committee. My name is Santina Conforti. I'm a licensed professional counselor providing mental health services in a solo private practice to insured individuals across Connecticut. Patients often tell me they struggle to find therapists who are in network, and I'd like to share one of my many experiences with insurer clawback practices that discourage providers like me from accepting insurance, and then speak to how SB 341 and HB 5377 can help. A patient gave me what she believed was her primary Anthem insurance. I verified the eligibility through Availity, the system many insurers direct providers to use. Availity showed the plan was active, so I billed appropriately. 21 months later, Anthem recouped about $900, saying the patient actually wasn't covered under that plan, and it should have gone to a different Anthem plan. I then entered a cycle of resubmission, denials, and appeals that was disorganized, exhausting, and honestly enraging. I was sent back and forth between Anthem and Availity for months with about 25 hours of unpaid administrative work. It took 6 months to complete the appeals process. So my question is simple. If the insurer's own system showed active coverage at the time of service, why does the financial burden fall on the provider for services rendered? Why does their appeal system require excessive, exhaustive steps? These situations are not rare. My colleagues have shared their exact experiences with me. Regarding SB 341 and HB 5377, they offer strong protection by shortening the clawback period to 12 months and creating clear recoupment notifications and timely appeal processes. However, I urge you to strengthen the bills. Section 1D and E still allow insurers to recoup payments indefinitely when they later claim there was no coverage or another payer is responsible, even when their eligibility systems were wrong. Would it be possible to limit exceptions to fraud and duplicate payments? Section 1B allows clawbacks if a provider did not appropriately bill on documentation. This is too vague and leaves us vulnerable at the discretion of insurers. There needs to be clearer criteria for appropriate billing. These bills are a step forward. With a few targeted amendments, they can truly protect providers and help ensure that people in our communities can still find therapists who take their insurance. Thank you very much for protecting the healthcare providers of Connecticut, and I'm here for collaboration or to answer any questions you may have.
Thank you, Santina. We hear your testimony loud and clear. This is something we've been working on for about 4 years now, and we hope to get this across the finish line. Appreciate you sharing your story, and we'll take your recommendations into consideration. Okay, before we go to the next speaker, if there's anyone in the room that is waiting to speak and needs to leave because of the conditions of the road, I would ask that you can come up and speak if you'd like to, and then we'll do all the remote people just because I was told that the roads are getting bad. Hi.
Hi,
And just
Megan
state your
Scher,
name.
number 80.
Okay.
Yeah. Good afternoon, Senator Cabrera, Representative Wood, and esteemed members of the Insurance and Real Estate Committee. My name is Megan Scher. I'm a Hartford resident. I'm currently receiving my master's degree in social work with a policy concentration from the University of Connecticut. In my professional and academic career, my focus has been on health inequities, specifically around racial inequities and access to affordable quality care. Today, I'm here to testify against HB 5378 because I believe MEWAs will further perpetuate and deepen health inequities. As defined in HB 5378, MEWAs are a health benefit plan, which is not an actual insurance plan. This is significant because it means that MEWAs do not need to be compliant with the Affordable Care Act standards. One area specifically that these plans do not need to follow ACA standards is that they do not offer essential health benefits. MEWAs may offer limited coverage and exclude critical services like maternity care, mental health services, and prescription drugs. In 2011, before the ACA required essential health benefits to be covered, those without these services faced higher medical costs. Without guaranteed coverage of essential health benefit, Connecticut residents who are enrolled in MEWAs are at a greater risk of having worse health. Since ambulatory and emergency services are not covered under essential health benefits, those with a MEWA may delay seeking care to avoid a costly bill. This will only lead to health getting worse and more expensive treatment would be necessary. This delay in treatment may lead to a hospital stay, which on average costs roughly $30,000 for a 3-day stay. This cost would be up to the MEWA to cover, and there's no guarantees that the MEWA will have sufficient money to cover the bill. MEWAs have an increased risk of medical debt, and because they do not cover comprehensive of services and have a history of becoming insolvent and leaving their members stuck with medical bills. This means members can incur large amounts of medical debt. Medical debt adversely affects physical and mental well-being and increases stress, anxiety, and depression. Unpaid bills lead to avoidance of the necessary care, which perpetuates health issues and further strains the healthcare systems. The impact of medical debt for MEWAs also will more likely impact Black enrollees. Black Americans are far more likely than people of other racial and ethnic groups to report having medical debt. Studies show that 13% of Black Americans report to having medical debt compared to 8% of white Americans. Also, those that are lower to modest income are more likely to have medical debt. In the US, 1 in 10 adults with incomes below 400% of the poverty line reported to having medical debt. This signifies that MEWAs will further perpetuate racial and economic health inequities in Connecticut if implemented. Instead of implementing MEWAs, Connecticut should focus on expanding access to affordable quality care. Due to federal changes, many Connecticut residents are expected to lose health insurance because of work reporting requirements, costs, and eligibility rules. I believe the state should study and implement an expansion of Medicaid lookalike programs, a basic health program, state subsidies, or other options to ensure all Connecticut residents can be covered by a plan they afford to use and that covers essential health benefits. These plans will focus on affordable and quality health insurance instead of implementing coverage that is not actual health insurance. I strongly urge the committee to oppose HB 5378 so that all Connecticut residents have access to true, quality, affordable health care. Thank you for your time and attention.
Thank you, Megan. I don't see any questions. Thank you. Ben, Shaken?
Good afternoon, Madam Chair, members of the committee. My name is Ben Shaken. I am the Director of Public Policy and Advocacy at the Connecticut Community Nonprofit Alliance. We are the statewide association representing community nonprofits. I'm here to testify today. We've submitted testimony in support of several bills on your agenda today. House Bill 5378, both parts, the bill related to clawbacks, and then I'm going to spend my time today talking about liability insurance for nonprofits in House Bill 5375. So thank you to the committee for raising this bill. Thank you to the good chairwoman for all of the work this fall and all the members of the committee that participated in the working group that spent a lot of time talking about this problem. Community nonprofits in the state, as you've heard from some of my members earlier today, are facing a liability insurance crisis. Many have received quotes that reflected massive increases in their liability and property insurance policies. Some, as you've heard, have had those policies canceled or threatened to be canceled by their carriers. And there is a severe lack of insurance providers in the market willing to insure these programs at all. It should go without saying, without being able to procure this insurance, they can't operate their programs, and that has a substantial impact on the state of Connecticut. The state contracts with over 500 nonprofit organizations to be the state safety net to deliver health and human services to 500,000 people in this state. And if they can't do it, there is nowhere else for these folks to go. There's no way the state could start doing it. There's 118,000 people in the state that work in these programs. It's not just a switch that could flip. We did a survey in the fall, and I just wanted to provide a couple of the numbers that we found. 23% of nonprofits struggled to find a carrier to insure their program at all when they went out to the market. 44% had their carriers request significant increases in the price of their insurance. 20%, 19% said carriers required them to decrease the amount of umbrella coverage for their programs. 12% said the carriers had dropped them entirely. And so it's not 100%, it's not 90%, but 12% is still a significant number. And then, most concerning to me as I think about this problem is that providers reported that their brokers, when they go out to the market, frequently can only find a single carrier willing to quote their business. And 62% of providers in the state were insured by a single company, by Philadelphia Insurance. And when they go out to the market, just like anyone else, no one else besides that one company will say, yes, we'll insure your program. Many of them have been with that company for many years and have a long and positive relationship. But we are still concerned that if the market shifts, if that one company in particular shifts quickly, that we will be in crisis. So we understand the bill, the language in the bill is a work in progress. I want to ask the committee to please make sure to draft the recommendations that came from the working group into substitute language. They are in my testimony, some of the crucial ones, but not all of them. We believe that time is of the essence, though, and we'd really like the committee to move forward with creating and funding this program now. We recognize, though, that a crucial next step is an actuarial feasibility study, find out exactly what it will cost, what the program might look like. And so we request the committee at the very least amend the bill to more clearly define the study and to fund its completion. Some folks before mentioned this thing about their coverage going down, their umbrella coverage going down. And so I will say, I have a sort of way of thinking about this that I think it's important for the committee to understand. When someone has a $10 million umbrella policy that goes down to $3 million or $2 million, and they have a claim, they have to pay a loss. There's an issue, something bad happens, they are sued, they are liable for damages. If those damages exceed the amount in their umbrella coverage, that agency's on the hook themselves for the rest of the money, and these aren't agencies that have reserves at all. And so they're essentially self-insuring their own stop loss in this case. And so what I think that means for the state's system, for the state of Connecticut as a whole, is if that happens to an organization, that organization goes out of business.
Please summarize.
Thank you. So I appreciate the chance to testify, and I think we have a chance in the state to be ahead of a crisis for once, rather than reacting to a crisis. I am very concerned, and we are very concerned with what happens if we reach that crisis without a solution in place, because I think it could be absolutely devastating, both to my members and the people they serve, but frankly also to the state of Connecticut and the state agencies that rely on these nonprofits to meet their mission. So thank you for your time. I'm happy to answer questions about this or any of the other bills we've testified on today.
Oh, thank you very much, Ben. The working group recommendations will be part of the final bill. We just had difficulty getting everything drafted in time, so we apologize for that because everything looks like it's a study, unfortunately, but we wanted to make sure we got it in time for the public hearing. I'm in line with you on everything. I do think that we are hitting a crisis mode, and we want to make sure that we are ahead of it and we don't get caught on our feet. It's just going to cost the state more money if we don't have a plan in place. So I think the working group put forward some really great recommendations, and we can, amend those. The working group can still meet, and we can adjust things, I think, every year, which is probably what we're going to have to do. Regarding the health insurance side of it too, I mean, really, nonprofits are under attack from insurance costs at all levels, including health insurance. And you said there's 118,000 people that work in this space. I mean, if you formed a MIWA tomorrow, the employees plus their family, you could have a 200,000 member MIWA that would have the buying power of, better than any of your 25 or 50 person MIWAs, nonprofits. So it really would make such a huge difference in terms of cost and quality. I've spoken to your members often and been to many legislative meetings, and they're providing high deductible health plans and basically acting as in a way of not getting care. When you have a $5,000 or $10,000 deductible, you're forgoing those simple visits to the doctor. So we want to help you guys. We want to make sure your workforce is healthy. We want to make sure that you have the ability to hire the best people, and you can do that with a good benefits package. And then we definitely need to address the liability issue. So thank you for
This is Carmen.
all summer, fall, and spring on this topic.
Yeah, thanks. And on the health insurance piece, when we ask our members kind of what their biggest pain points are, first and foremost, we always hear about state funding for their programs, and this relates to health insurance. But the next thing that we hear is insurance costs and how in health insurance. I think there was a time when you went to work in the nonprofit sector because you cared about the mission of an organization, and you maybe forewent compensation at the level that you as a person might achieve if you went into the private sector. But many nonprofit organizations prided themselves in the quality of the employee benefits that they were able to offer, even if they couldn't pay the same level of salary, very much including health insurance. And with how the health insurance market has changed, both the small group marketplace, which is incredibly challenging, but for even large groups, which is most of the health and human services providers, I think it's very fair to say that the sort of quality of insurance that is available to people in the marketplace right now is not what it used to be. And so and because of that state funding situation for these services and how while the legislature, through lots of hard work over the last few years, has been able to provide some increases, we're still 30% behind where we were in terms of buying power 20 years ago. Something has got to break, right? If you can't find an employee and can't compete salary-wise, you've got to find a way to pay them more, even if your state funding's not increasing. And so there's been a cost shift in terms of health insurance also onto employees. And so, yeah, we are as an organization have always been very supportive of there being more options available for our members in the health insurance marketplace. Certainly MEWAS would be one of those options. I don't know if the Alliance would form one tomorrow for all those lives. Or not. Unlike Bruce, our members don't have a lot of money, and so there's other considerations that we would have to make if this were legal, or would have made if it had been. We've supported past options and support the governor's proposal to continue to pursue a public option in the state and potentially give nonprofits access to the partnership plan. We understand the potential shortfalls, pitfalls of that as well. But our thing is options, and right now, nonprofits, like all businesses, are very constrained in what they are able to purchase. Even if they had all the money in the world, they are really not able to purchase, in large part, super high quality health plans, and they don't have all the money in the world, and so they're even further constrained. So we appreciate the committee trying to work on this issue and stand ready to be a part of those discussions moving forward.
Thank you. I appreciate that. Great. I don't see any other questions, Ben. Thank you.
Thank you.
Anyone else in the room? Okay, we're going to go back to remote and finish it up. So next we have Liz DuPont Deal.
Hi, can you hear me okay? Okay, I'll go ahead. Good afternoon, Senator Cabrera, Representative Wood, and distinguished members of the committee. My name is Liz DuPont Deal. I'm with the Connecticut Citizen Action Group, and I submit this testimony on behalf of CCAG's thousands of members throughout the state and as part of the Health Justice Now Coalition, working for affordable coverage for all people in Connecticut. While we fully support a sound public option and needed study, CCAG is in strong opposition to multiple employer welfare arrangements, or MEWAs, which, as the bill admits, are not actually insurance. MEWAs offer a false hope to many small businesses and nonprofits who are in real need of solutions to skyrocketing insurance premiums and healthcare costs. Further, MEWAs put them at risk of being held responsible for ballooning medical expenses not covered under their plan, and have been shown to undercut our insurance market and to lead to discriminatory higher rates for people of color, women, and other groups. These plans have a history of insolvency and even fraud because they are not subject to many insurance regulations. They are not required by the bill to cover all essential health benefits or comply with ACA requirements that prevent charging more based on factors like a person's occupation, gender, or medical history. They do nothing to lower or offer transparency around skyrocketing medical costs, which are the root cause of our healthcare crisis. The need for reform and affordable coverage for healthcare is very real. In fact, I worked for the nonprofit sector for many, many years, and I can definitely sympathize and empathize with much of the testimony here. We concur with Kathleen Holt's observation that the public option study is slated for the bill to occur after the implementation of MEWAs, which begs the question, who will profit from MEWAs in Connecticut? We urge you to reject MEWAs entirely and instead consider every other possible option, including ICRAs. If you do proceed with MEWAs, we suggest that you require a very strong reserve with a percentage rather than a fixed amount, and strong disclosures, solvency, and other protections to protect beneficiaries like those in fully insured plans. If the legislature chooses to study more options, it should be options for real health insurance that complies with the ACA and should focus on those most likely to improve affordability and access to comprehensive care, like allowing people to buy into a state-run health program, state subsidies, and a basic health program. Thank you for your time and consideration, and I welcome any questions.
Thank you, Liz. Next up, we have Jennifer Jennings.
Hi, thank you very much, Representative Wood and everyone who was there, and thank you for letting those that are in the building go first. I have gotten to sit behind the screen, multiple screens, watch all these lovely hearings today from home because the kids were home from school. With that said, my name is Jen Jennings, and I serve as the Executive Director of the Connecticut Heating and Cooling Contractors Association. We are a nonprofit that represents about 85% of the Connecticut HVAC industry. When you think of HVAC contractors, our members are small businesses. They're family run. They're local heating and cooling companies, the contractors your constituents call on the coldest of winter nights or the hottest of summer days. They are truly your local guy. And with that, I am here to testify today in support of HB 5378. This legislation is practical, market-based solution that is long overdue for Connecticut's small businesses. For too long now, I've actually compared what our contractors are paying. It is their second largest expense in business, second to payroll itself. Some of my contractors are spending north of $500,000 a year on their healthcare premiums. Many of them seeking to be on a spouse's insurance instead of their own. It is a complete barrier to access, and it's disadvantaging our small contractors and companies throughout the state of Connecticut from buying power. So I know a lot talked today about economy of scale and size of company and buying power. When you take a look at allowing small individual companies to, like-minded companies, for example, HVAC or construction trades, to pool together through association healthcare plans, it allows them access to the buying power that some of our larger companies have access to. And we are currently in a market where we are seeing significant acquisitions and mergers of the little guys being bought out by the larger corporate structures. Well, here's a prime reason. If the health insurance in the state of Connecticut is forcing the little guy to not be able to cover or to pay some of these healthcare premiums at absorbent rates now, they are selling up to some of the larger. So those local little guys that come out and service our homes are going to be no more if the cost continues. So I hope we really give consideration. A prime example for comparison would be how a lot of the local unions are structured. They might be individual companies. However, through the buying power through the local union, all those individual companies access one group healthcare plan through the union, through the local, which is fantastic access. So we're just asking that you lower or level the playing field to be able to increase the buying power for some of the small businesses around the state. So I appreciate your time and all of you guys hanging in there this late in the day. Thank you.
Thank you, Jennifer. No, we appreciate hearing from the trades on this topic. We've heard from businesses of all shapes and sizes on the importance of moving this forward, and it's nice to hear your perspective as well. Thank you for coming today.
Thank you.
Next, we have Liz Gustafson.
Hi, all. Good afternoon. Senator Cabrera, Representative Wood, and distinguished members of the Insurance and Real Estate Committee. My name is Liz Gustafson, and I am the Connecticut State Director of Reproductive Equity Now. Thank you for the opportunity to testify on HB 5374, particularly regarding Section 4. I will note I will be submitting written testimony after this, and also do appreciate the note earlier that study-related language in legislation is currently a placeholder. So rather than rereading written testimony, I would like to take this opportunity to share a different perspective and a bit more about my own story. So planning for the future that we envision for ourselves also includes family planning and the ability of individuals or families to decide if, when, or how they start or grow their families with equitable access to the care and coverage they need in order to do so. So as a 33-year-old myself with endometriosis, this has meant exploring all options available to plan for my own if, when, or how, and options for future family planning or building. And 1 year ago, I pursued the fertility preservation process and ironically was supposed to begin the medications, injections, appointments, and the subsequent retrieval exactly 1 year ago to this day. But unfortunately, I was denied insurance coverage for this process as I did not meet the very narrow requirements of being infertile. And so even if I could somehow afford the $18,000 to $20,000 I would have had to pay a year ago to undergo one cycle of fertility preservation and retrieval, and assuming that one round was successful, down the line when I may want or need to utilize my eggs and undergo any related assisted reproductive care, as of right now, due to the extremely narrow definition of infertility and limited coverage, I would also not be able to receive insurance coverage for that fertility and family building care either. So there has been incredible medical advancements in family building healthcare and fertility care and treatment. And for folks like myself and many other individuals and their families, the ability to utilize these options, plan for or build families continues to remain out of reach due to exorbitant out-of-pocket costs and lack of insurance coverage. So updating the coverage requirement with language that reflects current medical standards of care and does not exclude the LGBTQIA community and single individuals would be an incremental step in the right direction towards increasing equitable access to family building healthcare, which is so essential for so many people in our state. So I really appreciate your time and consideration, and we look forward to hopefully seeing amended language reflected in Section 4, and do hope everyone there in the building gets home safe today.
Thanks so much, Liz. And we do have a question from Representative Pavlik Tomato.
Thank you, Madam Chair. What is the narrow definition? And I don't mean to ask a personal question as it relates to you, but what is that narrow definition that excludes people currently?
So according to my insurance, I will refer to this that I have here. To them, it means that I was unable to become pregnant or keep a pregnancy after being exposed to sperm for 1 year. And so for many folks who are trying to start or grow their families, they may by definition not meet that definition, if that makes sense.
So like it should be less time, like less than a year, or is it the sperm part?
Both. I mean, in the sense that what people may need to start a family or regarding assistance for their fertility is ranges outside of what is in that definition. Yeah.
Because my understanding time-wise is that I think when we had last looked into this, that when there was, I don't know whether it's joining of the sperm and egg and which exact process, but that it took a few times, I think, and the more times it was tried, maybe 3 or 4, that it was more successful. My question then is, which is how they got to the year requirement, I guess. But my question is, as far as the sperm goes, I guess, as somebody who was or it is or was sick, I mean, if someone doesn't have sperm, that doesn't make them sick, right? They just don't have sperm. So if we're talking about infertility and a sickness, I don't think, I mean, I'm not interested in calling somebody just because they're gay sick, right? Because being gay doesn't mean you're sick. It just might mean that you don't have sperm because, like, I don't have sperm, right? I only have eggs. So, I mean, are we now calling, is that kind of what you're talking about? I mean, I'm just want to be clear. I'm not sure what language change or if it covers.
I would say that the reality is for many single and LGBTQ plus individuals and their families, they require fertility healthcare to have children, and so are currently unable to utilize the existing coverage due to that narrow definition.
Right, because it takes an egg and a sperm, but that doesn't mean that they're sick, which I understand. But, yeah. Right. But that doesn't make them.
And also, I would agree with you. And also single individuals.
Right.
Potentially.
Well, I mean, that's where I get confused. I mean, it's not, again, it doesn't fall under the insurance and sickness, right? there's no osmosis when it comes to making a baby, but it also doesn't make you sick. Somebody can go out and try to find sperm or right. I mean, I get that it's different in if you're a guy as opposed to a girl. You know, we all get the realities of what's easier, but still, again, as a single person, I don't feel discriminated because I can't have a baby without that other part. I mean, it's just not going to happen on my own, right? Because that's not the way it works. Doesn't mean it then rises to the level of insurance coverage, which leads to my next question. I thought there was federal law recently passed that lowered the out-of-pocket costs, which would have been different when you went through it if it was a year ago, but now I believe, aren't the costs lower?
So I know that there was an executive order in February 2025 about the need to improve access to IVF, but it, as far as I know, did not make more equitable or affordable access to fertility healthcare. And the announcement in October 2025, seemingly related to this executive order by President Trump, has not led to comprehensive fertility healthcare coverage as of right now.
So you're saying the prices there is no lower prices as far as IVF goes. That has not been the case.
No, not that, no.
Okay. And so have you had people who have gone through it who know that, or I'm just wondering what the data is that you're basing that on?
I can find that for you and I will definitely send an email. I just don't have it up right in front of me.
Okay. All right. That sounds good. Thank you. I look forward to
Happy to follow up. Of course.
Great. Thank you so much, Liz. We appreciate you hanging out with us all day and testifying.
Thank you so much. Get home safe, please.
Thank you. Next, we have Mark Spellman. Dr. Mark Spellman.
Hi, Representative Wood. Nice to see you again. Hello. Senator Cabrera, Senator Huang, Representative Pavlak D'Amato. It seems that you are a starship captain from your setting. I do apologize if I'm going to be preaching to the choir, but nonetheless, I'm Dr. Spellman, Mark Spellman. I'm a psychologist in private practice in New Fairfield and a member of the Legislative Committee of the Connecticut Psychological Association. I'm testifying on their behalf. We are in strong support of raised Bill 341 and 5377, but with a 12-month limit consistent with Senate Bill 341. These bills will greatly strengthen our confidence in payment security, increase access for mental health care for Connecticut citizens, and in the long run, save money for insurance companies, because research shows that when people who need psychological care and mental health care don't get it, their medical bills are higher than if they do. Clawbacks are a big problem for Connecticut psychologists. A recent survey of ours showed that 68% of respondents have experienced clawbacks, and over half have received clawbacks for more than a year. So that 15-month to 12-month limit really is a big deal. Might not sound like it, but it really is. As you know, it's been difficult for us to navigate clawbacks. It's hard to appeal them. We rarely get a clear explanation for the reason for the clawback. These bills address those problems. They'd really help a lot. What happens due to clawbacks is eventually people who are driven by a sense of mission to stay in network and serve their neighbors and their communities at in-network rates get demoralized and we leave. Everybody loses. We're unable to fulfill our sense of mission. Connecticut residents are less able to get in-network mental health care. And again, medical insurance companies' costs go up in the long run. I would really like to advocate to my colleagues to continue to remain in network, to join panels, to serve people who have less resources than those who enjoy out-of-network benefits. It'll be a lot easier to do that with this bill. Please pass these bills with a 12-month limit. Please preserve access to care. Please help us continue to provide that care. And this isn't that unusual. Many of our neighboring states do have 12-month limits. Maine, New Hampshire, Massachusetts, Vermont, and Illinois all do. And it's not just us. Social workers are leaving networks too because of clawbacks. I've included all that in my written testimony. So thank you for hearing us out. And thank you so much for the support and access you've given Connecticut psychologists over the years. We dearly appreciate you.
Thank you, Dr. Spellman. We appreciate what you guys do, and you have my support on getting the clawback language over the finish line this year. As you know, we've been working with you and your organization for, it seems like, a really long time on this, so I'm very confident that this is the year we're going to get it done. I've actually seen this language appear in several other committees. So
yes, it's very heartening.
I know, they're finally listening to us. So thank you for your advocacy on that.
Thank you for being our friend.
Yes. Representative Pavlak-Tomato.
Thank you. And I want to reiterate also what Chairman Wood said. And so you agree with the 12-month limit, though, as far as clawback was. Is there any change or in the language of any of the bills that you would like to see, or is most of it doable for you?
Thanks for the question. I mean, 12 months is fair, and fairness really helps us sustain our sense of mission. I understand that, you know, sometimes computers need time to catch up with themselves. I had a clawback this year when patients changed insurance companies. I didn't realize it. They didn't realize it. They thought it was their secondary coverage. It became their primary. That clawback came in about 4 months later. That's fair. It's the ones that hit, you know, more than a year later, the patient is gone. There's nobody to talk to about it. Those are what are killing us. I mean, we understand a fair period for a clawback. That's fine. And we don't want to support a limit on clawbacks for fraud or duplicate coverage. That's all fair. But we don't want to be exposed to the risk of, you never know, when suddenly $3,000 is disappearing out of your reimbursement that month that you were counting on for your mortgage or your kids' tuition.
Right. Yeah, I have to agree, especially accounting wise. I just can't imagine the nightmare that it creates. So I think that's fair as well, because I don't know how you go back, right? 3 years.
You can't. You can't.
Yeah.
That person couldn't have afforded out-of-pocket therapy in the first place. So, you know, we usually end up just eating it.
Yeah. So, well, thank you for your testimony. I appreciate that.
Thank you for your question.
All right, Dr. Spellman, it was great to see you. Have a wonderful day.
Thank you.
Let's see. I'm just going to look to see who is on the call here. Let's see. Carmen Romeo. Stephen Thornquist.
Good afternoon,
All right, there's Carmen. Hi, Carmen.
Chairpersons Wood and Cabrera and the members of the Insurance Committee. Thank you for, I know it's late in the day. I wish I could have been there in person. I'd like to testify on behalf of House Bill H5378, excuse me, and support of multiple employer plans. I'm running Foster's Chocolates. I'm the president and son-in-law here in Waterbury, Connecticut, but I also serve as the president of the Smaller Manufacturers Association, an association of 100+ manufacturers, and also our local chamber as a board of director. Here at Foster's, we've been around for 62 years, and as I joined the company with just a handful of employees 16 years ago, we hit a milestone when we were able to finally offer health insurance through a PEO. When we left that PEO and went out on our own, we had a very small group plan with 7 individuals eligible. And we had to work really hard, and very few of them took the insurance because we were off on our own with our own, our own set of underwriting. Be that at that time, I had to literally split my family apart, my wife, my son, and myself, all on different healthcare plans, just to make the minimum number of employees required. I have several employees who could be eligible, but they're on Husky and other subsidized plans. But we muddled along with the idea that we would want to grow and attract good employees and offer healthcare. We were paying significantly more to have 3 separate plans when I could have had all my whole family on one plan. But again, in order to have the bodies, they're all employees of our company, so we did that. Then in 2024, when Oscar, Cigna plus Oscar left, we were dropped and we had to go fend for ourselves. So we really have seen the inability to offer healthcare, even though we tried at a great expense. We just, even when we could get somebody to underwrite us, it was at such a high level that it made sense for the employees I could offer insurance to go to the exchange, or again, remain on state subsidized plans. I believe that the multiple employer association healthcare will help us have the buying power and allow me to offer insurance not only to the people who are full-time today, but I have a crop of another dozen people who I would absolutely love to create full-time positions for and offer healthcare if we just had the ability to do that. Passage of HB 5378 would go a long way towards that, and I encourage its passage. Thank you. I'm also open to some of the other plans the governor's put forward, buying into the state plan. Again, we just see no details to that. But I do know that multiple employer plans have worked in other states, and I support that avenue.
Great. Carmen, thank you for attending today. And again, you're one of those businesses that I feel like I know you so well because we're constantly featuring you as just a homegrown Connecticut business that makes chocolate. We love to talk about our small businesses and champion our small businesses. And I can't think of a better way to do that than to be able to provide options for you to afford health care for yourself and your employees. So I want to make sure that the state is doing the best we can. Loved hearing your testimony. You also hit on a point that we've heard over and over again, that you really want to do the best that you can for your employees. If you had more options out there, it would just be better for you to manage these costs. So we hear you loud and clear. Thank you so much for your testimony. Next up, we have Stephen Thornquist.
Sorry, it took me a second to unmute. I'm going to try to run through this quickly because I understand you guys, I'm between you and your car, and it's getting bad out there. So, Representative Wood and distinguished members of the Insurance and Real Estate Committee, thank you for this opportunity to speak to you. My name is Stephen Thornquist, Dr. Stephen Thornquist. I'm a retired pediatric ophthalmologist, and I practiced in Connecticut for decades, caring for children with complex medical needs. I appreciate this opportunity to testify in strong support of Section 4 of Senate Bill 342. I speak on behalf of the physician members of the Connecticut State Medical Society and the over 600 physicians and surgeons of the specialty societies of dermatology, ophthalmology, and urology. You've already heard a lot from my colleagues about the effect of automatic downcoding in primary care. I'd like to speak about what this practice does to specialty care, particularly in very narrow subspecialties like pediatric ophthalmology. Specialty care, especially pediatric specialty care, subspecialty care, is time-intensive and highly complex. The children we treat often have chronic, multifaceted medical conditions. Their visits require detailed examinations, extensive documentation, coordination with other physicians, and ongoing communication with families. These encounters are appropriately billed at higher evaluation management levels because they reflect significant physician time, expertise, and medical decision-making. When an insurer uses an algorithm to automatically downcode those visits without chart review, it disregards that complexity. An algorithm cannot meaningfully assess nuanced clinical judgment or the time required to manage complicated cases. Yet payment is reduced automatically, and the burden shifts to the physician to appeal and prove that the care provided was justified. Physicians often do not have the staff or time to pursue every appeal, something insurers know and count on. In many subspecialties, there are only a handful of physicians in the entire state. There is no redundancy in the system. When payment is repeatedly and systematically reduced, it directly threatens the viability of those practices. If even one subspecialty practice closes or limits access, children and families feel that impact immediately, and there is no easy replacement. Insurers argue that downcoding only affects outliers, but there's no transparency supporting that claim, and they already have a tool to address outliers: audits. Audits have occurred and are occurring and will keep occurring. There are practices in Connecticut that have undergone formal billing audits, been found to be billing appropriately, and still experience significant downcoding. If downcoding is truly limited to correcting improper billing, how do you explain that? A few years ago, insurers invented a euphemism for downcoding called correct coding, which it claimed were initiatives assuring that healthcare professionals adhere to ethical standards prioritizing patient care over financial gains. That statement implies that physicians are placing financial interests above patient care. I can assure you that the small number of pediatric subspecialists in Connecticut working to keep their practices open are not prioritizing financial gain over patient care. That assertion is particularly difficult to reconcile when it comes from companies that generate billions of dollars in profit and are widely criticized for placing financial performance above patient access. In fact, premiums have been increasing at a rate of 10 to 15% per year in the last few years, but CMS estimates the cost of clinical care is rising at only about 7.5% a year. Remember, this is an industry that takes your money to pay for your health care, but views every penny spent on your care as a loss that would be better spent on its shareholders. Pardon?
Your 3 minutes are up, sir.
All
Please
right, let me just end with, you have talked about support for small businesses in Connecticut. Physician practices are small businesses. Collectively, we employ over 105,000 Connecticut citizens. Please support our small businesses as well as the insurance behemoths. Section 4 is reasonable and necessary reform, and I urge you to pass it. Thank you, and please get home safely.
Thank you, Dr. Thornquist. I would ask you questions, but we have engaged with many of your colleagues prior, and I think we have a good understanding of what you guys are asking
I
for.
do understand that, but I am available for consultation later.
You do have the most certificates on a background, so I will give you that.
I guess that's a good thing.
That is a good thing. It means you're a pro, for sure.
But I'm not in the Millennium Falcon, so.
Oh, yeah. All right. It was wonderful to hear from you. Thank you for your testimony. And we will end with Dr. Kenneth Thomas. Dr. Thomas. Anyone else on? Is he coming?
It says he's on. Just he's not responding.
Okay. With that, we are going to wrap up our public hearing for March 3rd, 2026. Thank you, everybody. If you weren't able to testify, please submit your written testimony, and our members of the committee, we're always here to talk with you and meet with you. Thank you, everyone.